Hey, Anna.
Hey, can you hear me?
Yes, I
Okay.
think I didn't have any problems this morning.
It's not a camera. Oh, good. All right. So I guess I'm gonna leave, okay?
Okay,
Okay. Bye.
thanks.
Mhm.
David, are you ready?
Yes, Your Honor.
Let's go on the record. Good morning, and we are going to begin with continued examination of Mr. Garrett. Chairman Fishman or Commissioner Hall, do one of you want to, I think one of you is up. Does one of you want to start?
I think it's Commissioner Fishman first.
Oh, you want
Okay.
me first? Okay. She can, Commissioner Hall can clean up my mess when I'm done. Mr. Garrett, am I pronouncing your name correctly?
Yes.
Okay. Good morning.
Good morning.
I'm going to do a shameless summary of your general argument here, and you tell me if I've got it correct or not. You see what you consider an anomaly in the marketplace when we look at the utility industry, and that the utilities seem to be awarded a much higher return for their risk profile than the rest of the market. Is that correct?
Yes. Yes.
And your sense of why that anomaly occurs is because it's a regulated industry, and regulators are choosing the return that utilities are awarded rather than market forces.
Yes, I think that's generally right. I'm not sure exactly, of course, what goes into every regulator's decision. There seems to be this pressure, maybe to some extent, to conform to an average, maybe because it's a little bit, safer in some ways to do that. And a regulator could always fall back on their decision and say, hey, that's about what everybody else was doing around the country. And so maybe it's less risky in that regard in some ways. But it's hard to know what goes into to everybody's decision. But if, as I discussed yesterday, if each commission's kind of looking at an average, it kind of prevents the average from really changing much over time. And although it has decreased, it's been very gradual.
And actually in your testimony, you refer to this as kind of an echo chamber where no one wants to, in life, the nail that sticks out gets hammered. And so what happens is commissioners are looking at what the next commission did, and nobody wants to be the nail that sticks out.
Yeah, although unless you're like Florida and there's something and you stick out in the other direction, but yeah, usually no one wants to stick out and go lower. I hope they don't get that soundbite in Florida case next time I testify, but they do tend to be a little bit higher in some jurisdictions. But then there also seems to be some kind of psychological impact about the 9% floor. I think we think in terms of tens. Maybe that's just kind of human nature in our counting system, but pretty rarely does a commission break the 9% floor. I think there's been a couple of 8.75s out there, but there seems to be some kind of psychological driver there as well.
Okay. And as we look at this echo chamber, your contention would be that a lot of the modeling that's done, and I'm not saying it's an echo chamber, I'm saying you said it's an echo chamber. But at any rate, when we're looking at the models that are used typically across the industry to calculate what a fair return would be, that they're only looking at this narrow universe of other utilities. And so when you look at the history, if the history is that you've been getting a much higher return than your risk profile in the rest of the market would generate, but you're just looking at that narrow group, the historical information you use to generate your model is also going to be higher than the market. So it kind of becomes a self-fulfilling prophecy that you keep generating these numbers that are higher returns. Is that an accurate depiction or not?
Yeah, I think that to some extent that that is accurate. I think that. Oh, sorry about that. Sorry about that. I think, especially with regard to the DCF model, because you're using stock prices and dividends to help get to your results, but of course the awarded return influences those stock prices and dividends in the model. But I think you're referring to using a proxy group, which I think is fine to do because we need to get those the data from publicly traded companies, and using other utilities is the best group to look at for that data. But the CAPM actually does avoid a lot of that echo chamber problem, because you're looking at the equity risk premium and betas, and so you're kind of getting this data, this more market-driven data from the outside and bringing it into the model. And the fact that you use it on another group of utilities is still fine. So generally, yes, what you're saying could be problematic, but I think applying the CAPM with objective inputs should get pretty objective and reasonable results. And really the DCF model too, if reasonable long-term growth rates are used.
If we were to, would it make sense in terms of some of the other modeling to use broader market in terms of your comparable group, your comparison group, to include entities other than utilities in order to get a sense of broader market forces?
Well, it could be, but if you know, you're looking at the cost of equity of any other industry, pretty much for every other industry is going to have more risk than U.S. utilities. I think we see that in the betas, and so in that regard, you just want to know going in that those industries are going to have more risk than utilities, and so therefore, to the extent they have higher returns or higher cost of equity estimates, that should be expected because there is more risk in those industries.
Okay. So if I look at, and this is an anomaly I've been struggling with as a commissioner for 2 years now, is I'll look at and I'll see a return of, we said an average of 9.6% yesterday, I believe, for utilities. Yet if I were to look at a conservative low risk pension fund or whatever else, they'd typically be happy to get 6.5%, 7% return. And to me, that's kind of an anomaly. Am I looking at that correctly?
It's certainly not an incorrect way to think about that. Sometimes I wonder that too about different commissioners and regulators. I'm like, do they have investments? Do they kind of have a little bit of their finger on the pulse of what's going on in the broader market? Now, with that being said, the actual market returns we were discussing a little bit yesterday can be up and down. So you might have an overall return on the market in a particular year that was above 10%, but then a year like 2008 comes along and there's a big loss. But so that number is going to go more up and down with the market. And going back to something else you said earlier, we were talking about what maybe sometimes drives this discrepancy between awarded returns and cost of equity is, I think people might remember if they've ever had any kind of finance or investment class or just general research online, this idea that the market on average has returned 10% since the beginning. But one problem with that number is that usually those calculations go back to the 1920s or something like that. And the idea is that even though there's some differences on how that number could be calculated over time, the idea is that going forward, the more the expected return is closer to something like 7%, not 10%, because you don't have unprecedented periods of economic growth and world wars and things like that. And so that's, I think, a little bit related to your question. I don't want to get too much off the topic, but I do think it's certainly fair to consider all of the information out there.
But regardless of what analytical tool or model that we use, your contention would be that we need to be, that if we're to balance the interests of investors and ratepayers, we should probably be looking more at overall market or S&P 500 returns as opposed to the historical inflated returns, if you will, that have been given to utilities. Would that be an accurate statement?
Well, you can look at, in general, we wouldn't want to go too far in the past to try to get indications of current market conditions. But I guess I'm hesitant to say just an absolute yes on S&P market returns, because those can be just kind of up and down every year.
Right.
I think it's good to focus on the equity risk premium, and again, to it's really just adding a couple numbers together as far as if you want to get an idea of what the required return on the market is. And that would be adding the equity risk premium to the risk-free rate at any given time. Well, the risk-free rate, I mean, a good proxy for that is the long 30-year Treasury bond yields, which is about, let's say, 2% right now.
Right.
And then there's so much research out there on the equity risk premium. You can go, surveys and other experts, and people have written entire books about it, peer-reviewed papers and things like that. And I feel like 6% is a very very fair, if not maybe a little bit high estimate right now. Well, you add your 2% to your 6%, that's a required return on the broad equity market. And the S&P 500 is usually used as a proxy for that because they have available data. But 8% is a good estimate for that right now. So the actual market returns may kind of fluctuate higher and lower than that.
Mhm.
And that's kind of a different concept than the expected return given the level of risk that investors are taking on. So whatever we have that estimate at 8%, you know that a utility by and large can never really be higher than that because we consistently observe betas that are less than 1. Now, there's differing views on betas that get technical, but whether, regardless of that, they're very consistently less than 1. So I think of 8% right now as a ceiling for the required return on any company with a beta of less than 1, but especially utilities when it's an entire industry consistently less than that.
In using the CAPM model, does that and determining the equity risk premium, does that depend to a large degree on historical market data plus, whatever tweaks need to be made for what the current market conditions are?
Yes. I know one method, we talked about Dr. Damodaran's equity risk premium. He does a lot of work in that field, and he's kind of a household name, at least in the finance community. But in his method, he likes to go back 5 years to get kind of an indication of the cash growth in the market, the broader S&P 500 market, and then essentially do a DCF analysis, not unlike we do a DCF analysis to estimate cost of equity, but you're estimating the cost of equity of the entire market. So to some extent, I think getting back to your question, sometimes you have to go back in the past a little bit to estimate the future. Now, with something like Iowa occurs, we got to go back even further because the life cycle of these assets are longer. So you do need to go back decades there in order to get an indication of the future. But with these financial concepts, you don't want to go back too far. You're really looking at outdated information. And so, yes, with the equity risk premium and with betas, usually those are done on like a 3 or 5 year regression analysis. I think, most analysts just use like the value line published betas. You can calculate your own, although in an evidentiary proceeding that opens up a whole nother can of worms. And so a lot of people just use the value line published betas, which I believe are based on the historical 5 year regression analysis.
Okay, but again, those calculations reference the broad financial markets in order to come up with their results. They're not focused on just the narrow utility market.
Right, with like the concept like the equity risk premium is for the whole market, and that's why it's a very important number, and that's why a lot of people study and publish about it and do surveys about it, because everybody needs that number to try to calculate the cost of equity for their own company or for their own analytical purposes. So we can go use that information and bring it into our models here, our CAPM model here, apply the utilities beta in the model, and we should get a very reasonable estimate for cost of equity, which again is about 7% right now, I would think.
Okay. Now, as a regulator, I'm trying to balance the interests of the utility shareholders and the public ratepayers and the public interest. And to me, that implies that we get fair rates for ratepayers and fair returns for investors. Does this idea of being fair to both sides comport with the idea of balancing the interests?
Yes, I think it would be a tough position to be a regulator, especially with the kind of the dynamic we've been discussing, because what is considered fair is, of course, subjective, and it's sometimes tough to determine. And I think regulators are inclined to be pretty heavily persuaded by somewhat of a national average, because in that way, there's this idea that neither side is going to see that as being unfair, because that's kind of where it's going on everywhere else. But I think, again, with keeping gradualism in mind, I think it has been generally unfair to ratepayers, even though they haven't exactly been outside with torches and pitchforks, because it's a complicated issue that's not on people's radar, as opposed to like raising taxes a little bit. Everybody's aware of something like that, and there's a concept of unfairness or fairness with that that's just more readily attainable than something like this, which is kind of behind the scenes a little bit. But I do think awarded ROEs that far exceed the utilities cost of equity are arguably, a little bit unfair to ratepayers, even if they're kind of comporting to somewhat of an average.
So I'm going to explore a little bit this idea of fair, which is as you point out, can be a very slippery concept. And, as I'm reading your testimony, it seems that kind of the benchmark you use for fair is what the general market is doing versus what the utilities are getting in terms of returns. You're comparing the two. Is that an accurate statement?
Well, I'd say to some degree, particularly when you say the broader market, I'm considering the equity risk premium from the broader market more than the year-to-year movements. But yes, that's
exactly. The equity risk premium.
Accurate.
Okay.
Right.
Thank you. That's a much more accurate way of putting it. Thank you. So what is it? To me, that creates the implication is that these broader market, these models versus looking at the broader market are more fair than ones that don't. That somehow there's an implication that what the general market risk premium is represents something that we can use as a benchmark for what is fair. Would that be correct to say?
Yes, that absolutely could and should be used as a benchmark to determine fairness, as opposed to the echo chamber we were discussing earlier, because that echo chamber, after a while, the numbers actually aren't based on, I wouldn't think much of anything other than each other, which is why the echo chamber metaphor is used. But the equity risk premium, going outside the regulatory environment, there's this entire world of finance, of course, around the world where people are thinking about these things, and the equity risk premium is discussed at length and talked about and published about, because it's a very important number. And again, right now, I think a very, very reasonable, conservative, as in maybe too high estimate for that would be about 6%. And again, adding that to the risk-free rate, about 2%, that's a little more readily attainable, because 30-year Treasury bonds are pretty widely recognized as a reasonable proxy for the risk-free rate.
Right.
You'd have 8% is the cost of equity of the whole market. So utilities cost of equity, again, should be, that's our benchmark. I think just kind of referring to what you were talking about. There's a good ceiling. We know it should be below. If you want a floor on the other end, you could consider like the embedded cost of debt, I think, is a reasonable floor, and so we have this reasonable ceiling and floor. And then I kind of feel like in an ideal world, the experts would be coming in and kind of having their debates within this reasonable range, and we could eventually get to a reasonable number within that range. But of course, our debate now is above that floor and ceiling range, and we're dealing with that up there.
In terms of why the market might be considered, that broader market might be considered a good benchmark for fair, it occurs to me there are a few things that might support that argument. Tell me if I'm on base here or in fantasy land. One of the reasons some of that broader market data and market dynamics might represent fairness is that it represents returns that businesses are getting that are shaped by competitive forces. Is that I can only charge I can't charge way more for similar value than my competitor. Well, would that be a correct thing to say, that competition and those competitive forces basically seem to indicate sort of a balance that the investment community has found out there for how for returns that can be earned and valued?
Yes, I think that's a fair statement. In the competitive environment, you do have those competitive forces that kind of just naturally dictate this equilibrium as applied to a lot of different concepts in business. And I would think a commission standing in the place of competition should definitely want to consider those things, and as an indication of getting back to fairness. And again, I think we discussed yesterday, there's certainly nothing in Hope and Bluefield that say that the utility's awarded return on equity has to exactly equal the cost of equity or exactly equal the result of a particular model, certainly. But I just think it should be used as a starting place. It's maybe kind of a two-step process, not to oversimplify it, but you'd first want to estimate what the cost of equity is for the utility. And then after that, you have this reasonable starting point upon which to base the authorized return on equity. And maybe there would be some arguments for the authorized return being a little bit higher than the cost of equity. Again, assuming that you're using an objective cost of equity, maybe somewhere in the neighborhood of 7%. And then you could, I suppose, different people could have differing views on why it would be fair or reasonable to have an authorized return above that. Maybe to say we want to make sure utility companies have a little extra cushion because we don't want them to get in financial trouble, or who knows what the reasoning would be. But at least we have that fair starting point.
So I'll often hear from folks that I talk to that and this might be a little simplified, that one of the purposes of having utility commissions and of the regulatory construct that we have is to avoid monopoly abuses and to essentially bring in the guardrails, if you will, that competition in open markets create for other businesses that are not regulated monopolies. Is that a fair characterization, do you think, of the process from sort of a layman's standpoint?
Yes. I think that sounds like a fair characterization. I think it seems like by and large, just generally speaking around the country, regulators are doing that. I think it's not like they're just completely off on that aspect of it. But this is a key, and I'm not sure about other issues in rate cases generally, but this is certainly an important issue that I think that that is lacking a little bit from that standpoint. Now, maybe perhaps at one time that discrepancy between the authorized return and cost of equity was more narrow, like back in the 90s. I mean, certainly more narrow than it is now, it seems like. But over that time, I think the regulators have failed to, I don't know if it was the guardrails metaphor that you were using, but it's kind of slipped a little bit. And partly it's just, I think it lagged behind a little bit in these declining interest rates and other market conditions that have lowered cost of equity.
Okay. And I've heard a lot of discussion that through the testimony and cross-examination, this idea that it's the true cost of equity for the president going forward and required return for investors is unknowable. We're just making our best guess through the modeling that we do and the assumptions in that modeling. Would you agree with that statement?
Well, I would agree with the unknowable part, but I would take a little bit issue if anybody said it's a best guess, because that's implying that we just don't have any idea. You know, and we have models that should get us pretty close. You know, it technically is an estimate, but there's this reasonable range in which you could have differing estimates, and then outside of that, I would say it's more objectively wrong. And a metaphor I like to use to that is if you're trying to estimate somebody's height. Of course, we have tape measures that can't exactly measure height, but say you don't have a tape measure, you're just looking at a man, average man, and you're trying to estimate his height from a distance, you know, maybe from 20 feet away, let's say. Mm-hmm. Well, you're going to have different estimates on that height. There's some people would say, 5'9", up to maybe 6'2", but there's going to be a few inches, and then, you know, below that, if someone says, well, I think that guy's 4 foot tall, or I think he's 8 foot tall, that's not really an estimate. That's just we just know that that's wrong. Mm-hmm. But there is this narrow range. We should be able to estimate his height, and I think that metaphor actually works pretty well with cost of equity, because it really shouldn't be all over the place. We can get fairly close. And if you look at well, for one, the risk-free rate should be fairly obtainable. You know, 30-year Treasury bond yields, those aren't all over the place. That's about 2%. We know what those are. Mm-hmm. The equity risk premium really also shouldn't be all over the place either. From what I see out there, it's about 5.5% to 6%. You know, if someone thinks it's a little over 6%, maybe that's, you know, I'd be curious to know why, but maybe that's reasonable too. But I would think getting above 6.5% now, you know, eventually someone's getting being that nail that sticks out quite a bit, you know, and it's I think we can pretty closely estimate cost of equity within, I hate to put an exact number on it, but I would think within 100 basis points. And so if someone says best guess, I would say, I think we're doing better than that. But it technically is unknowable, and it is an estimate.
If I were looking backwards, is the cost of capital, cost of equity known?
Oh, that's a good.
Or is that still not known?
I think, yeah, that's a good question. I think it's still not known. You could look backwards and see the actual earned returns, but you still wouldn't have known what the required return is for investors. And a good example is, I mean, if you just buy a stock and you kind of do a calculation, or maybe a commercial analyst does, and you just figured that the cost of equity for this company is 10%. Well, let's say they have a terrible year and they actually have a loss. It's negative. And you look back, you wouldn't say, my cost of equity should have been negative. I mean, that's an impossibility. Or if they only had a 2% return, well, that would never have been your cost of equity, because that's equal to the risk-free rate. It would always have to be higher than that. Mm-hmm. So even looking back on an abnormally low or high return, you still wouldn't be able to exactly identify what all investors agreed was the required return. So I think, yeah, I mean, just talking it through like that, I think you'd still have to say, no, it's still unknowable in the past, unfortunately.
Okay. So all we know from the past is the actual return.
Right.
Okay. So a couple other questions here. When we're looking at this broader market to determine our risk premium, if you will, and using your CapEx, the CapEx is your preferred model, it sounds like. Are there any other factors besides just the idea of competition that, and the fact that this whole larger market of players has, not through any conscious decision, but just through looking at the way everybody operates, here's what the return turns out to be, and here's what the expected return turns out to be. Is there anything about those market forces other than its competition, other than its the result of all those players, that makes that a good benchmark for what might be fair or not fair in determining an awarded rate of return? Or is that the main?
Well, I think that I was going to say, I think that's, I mean, the way you characterize, I think that's certainly the main driver of why those elements should be tried to incorporate in the regulatory arena to have a benchmark of fairness.
Okay, and that's in your estimation, that's a fairly, within a range, a fairly knowable benchmark and fairly objective benchmark that folks can use.
Yes, a fairly narrow range. And I think I present in my testimony a graph of some of the other equity risk premiums that I looked at, from surveys. One's an expert survey. They're interviewing thousands of people around the country, and it's not just, random guys on the street, it's CFOs and CEOs and people that are considered experts. And I think it's in the high fives, for the equity risk premium, 5-point-something%. And, you can look at commercial analysts like Duff and Phelps, and maybe there could be an argument that they're going to be maybe a little bit bullish on metrics like the equity risk premium, but they were at 6%. That's been at least several months old now, not that it changes much over time. Mm-hmm. Dr. DeMotoran is cited in lots of papers. Other people rely on his estimates, and so when you see a lot of these different estimates between 5.5% and 6%, you start to get this idea that this figure should be pretty closely be able to be estimated. And then, of course, you see a lot of times the utility witness is filing something like 12% or 11%. It's just so far. I mean, that's twice as much, and it's really hard to overstate just how massive a discrepancy that is between a figure like the equity risk premium being different, 6 to even 8%, I would think would be very, very high right now. So I think 5.5 to 6 is pretty reasonable.
Okay. And once again, just to reemphasize, one of the things that's driving that is this idea that we're just looking, well, no, I'm not going to even, I'm going to back away from that. If a lower, we do a lower awarded return, what might be the impact on the credit rating, the cost of debt, or EPE?
Well,
very specifically, you're recommending 9%. Would that have an impact, and why or why not?
Well, I think technically any movement, does have an impact, and I think as we discussed yesterday, it's ideal for an impact in either direction to be gradual. Certainly, if it's going in the upward direction, there's the types of things you're talking about, I suppose, wouldn't be an issue. But if we're moving it down, it should be gradual, because you don't want to put the utility in a compromised position to some extent. But I as I was discussing yesterday with Mr. Weschler, in general, moving the awarded return on equity down over time, eventually it would have a decreasing effect, I think, on certain metrics like eventually dividends and stock price. And the utility would rebalance. It's not just that I would think under efficient and prudent management, they, could eventually figure out issues like the cost of debt and credit ratings and things like that. It's not like it'd be permanently, altered in that way or permanently hindered, especially with the gradual approach. But again, gradual, I think it should be more than 1 basis point a year. I mean, it's more than that, but whatever it is now has been far too gradual. But as far as exactly what would specifically happen, it would be hard to say because there's a lot of moving parts there.
Yep.
But it would generally have a decreasing effect on eventually. I'm not saying 9% would necessarily, but a decreasing effect on dividends and stock price over time as you move that awarded return on equity down.
So, the capital structure is roughly 50-50. I'll just use for discussion purposes. So the question would be, if we were to say 9% as the awarded return, would the savings to customers eventually be offset by a corresponding increase in the cost of debt?
No, it should not be. I mean, the cost of debt is so much lower than the cost of equity. Usually that relates to the capital structure. The idea is if your debt ratio is getting too high, it's having an increasing effect on the cost of debt. And going back to what we're discussing earlier, that optimal capital structure is kind of naturally dictated in the competitive environment by market forces. You can tell pretty easily that investors don't care about having the best credit rating. They want the company to issue debt because it has an increasing effect on returns. Yes, it adds more risk, but that's the concept of risk and return. And so you want to issue enough debt to where the marginal benefit equals the marginal cost of debt. And there's different ways to determine that. And then, of course, if you go far past that with debt, you could be adding risk, and then the cost of debt would have an overall increasing effect on the weighted average cost of capital. But what I think is a little disingenuous, sometimes you hear from utility companies, is that, well, you don't want to raise the debt ratio because it'll raise our cost of debt, and that's the end of the discussion. But if you really follow the math through, it probably has a decreasing effect on the weighted average cost of capital, because debt is a simple algebra in the calculation, and the fact that debt is so much cheaper than equity, especially if the equity is 9.x%. The cost of equity got down to a more reasonable level, that those dynamics would change a little bit, and as far as what the optimal capital structure would be.
So as look at the market, and if you're looking at basically a 7% cost of capital over the S&P 500, just pick kind of a current number from at least your charts. Do those companies have trouble raising capital?
Well, by and large, no.
I'm sorry, I'm talking over you. Go ahead.
Well, I was going to make clear again that the 7% cost of equity is the estimate, my estimate for EPE. But in terms of the broader market, I'm certainly there are companies that are struggling, but by and large, things overall are going well, as far as just the idea of being able to attract capital and not being in financial distress. Most companies are not. I mean, certainly been looking at the proxy like the S&P 500.
If we were to choose your recommended 9% return versus the 10.3% recommended return from EPE, would that affect the beta on their stock?
That's a good question. I don't think it would have a material impact because beta is measuring the movement of the individual stock with the broader movement of the market. And so if you think of the broader movement of the market as big waves, there are stocks that they're right with the market and sometimes exceed the market. When the market's up, they're way up. When the market's down, they're way down. Those, of course, are riskier stocks. And utilities, in contrast to that, they're moving much smaller, still with the market generally, but at a much smaller pace. So I think we would still expect the betas to be low. Where they might not be low is if utility all of a sudden said, hey, we like the 7% idea. That's the right number. I mean, for that particular company, it could have an increasing effect on the beta because you probably have a pretty sudden decrease in the stock price, perhaps, just generally speaking.
Yeah.
Short term, right. But I was just going to say, when you regress that over 5 years, I don't know. I mean, it may average out. And I think at the end of the day, they would still be considered low risk companies, despite maybe a slight fluctuation in volatility.
So, I guess you seem to be saying what was kind of in my brain, which is that the returns might be lower, but the variability would still be the same. And you would still have all the safety mechanisms of a regulated monopoly that make that business less risky than other businesses would still be in place. And that the riskiness and the relative volatility would probably stay pretty similar. So again, am I reading that correctly?
Yes, we should absolutely expect it to be. And that's something else I don't even really talk about too much in the testimony. I mean, because after some point, 100 pages, you got to cut it off somewhere. But we determine this cost of equity for a regulated utility. But what I don't even really go into is this idea that utilities really don't face the same bankruptcy risk that competitive firms do. And I'm, not just a reorganization type bankruptcy, but shut the doors, pack up your things, and don't come back type bankruptcy, like an Enron style bankruptcy. I think is not, reasonably foreseeable for a regulated utility. Certainly, I hope not. I mean, in 2008, the term "too big to fail" was used a lot as kind of a buzz phrase. I would think that utilities are too important to fail in that regard, and that ultimately what you see for some stressful situation is the utility not bearing all the risk of that financial distress, but some of that being passed along to ratepayers, perhaps in higher prices, to make sure that the utility doesn't completely fail.
Okay. So between a captive market, and I think I'm about finishing up here, between a captive market of customers that basically it's difficult to lose, that there's not direct competition in terms of quality of service because customers don't have anywhere else to go, that you don't have price competition. You don't have to worry about someone coming in and suddenly undercutting you. All those things, it seems to me, are factors that make utilities, regulated utilities, less volatile and less risky. Is that correct?
Yes, I would say all of those things have a decreasing effect on market risk. I think that comes through in the objective beta type calculations. But yes, I think all of those have a decreasing effect on risk.
Yeah, and all those factors stay in place even if the return is lower. And it seems to me, and again, correct me because I'm just kind of coming from a layman's point of view here, is that if I'm lending that entity money, the risks are still low. And I can lend at a fairly low cost compared to the rest of the market to that kind of entity, even if the return is 9% instead of 10.3%.
Yes, I would say that's generally correct. Yes.
Okay. So what I'm trying to get at here is, as a regulator, perhaps I don't have to have a big fear that whatever benefits I get a consumer, or in terms of more fair rates, are not going to be lost by the cost of debt increasing a corresponding amount to the reduction in the cost of equity.
Right. That's correct. You should not have to worry about the cost of debt.
And again, I'm just approaching that from a theoretical standpoint, but I just want to get that concept clear in my head. No, I think with that, I'm done with my questions. I really appreciate your answers, Mr. Garrett. They're very, very helpful. Thank you.
Thank you.
Commissioner Hall.
Thank you. Good morning, Mr. Garrett.
Good morning.
So Steve covered some of my questions, but I've got a few other that popped up. If we calculate an equity risk premium using other authorized ROEs, what risks are we actually measuring?
That's a good question. I think we're only measuring the difference between some kind of a bond benchmark and then other authorized ROEs. I don't know if that question's kind of getting to the type of a bond yield plus risk premium analysis that I see in a lot of utility ROE testimony, where they're essentially measuring the difference between awarded ROEs and some other indicator, some bond yield over time, and there's going to be this difference between those things. Well, my position is that there's this discrepancy is too large. So if you want to keep the discrepancy going, that would be a good model to use, just to kind of see what the gap has been between those two figures. And to get back to your question, what risk are you measuring? I actually don't know what you're measuring other than just awarded ROEs from the past.
Okay, thank you. What about calculating an equity risk premium using broader market data? What risks are we measuring?
Well, you're measuring, first of all, you absolutely want to calculate the equity risk premium from broader market data. I'm not sure of another way to calculate it, because you're estimating the required return or cost of equity in the entire equity marketplace. In U.S., of course, different countries have different equity risk premiums, but and a good proxy for that, as we were discussing, is the S&P 500. It's a good sample size, and they provide good data on the type of things you need to calculate the equity risk premium. So a lot of investors and analysts and scholars use the S&P 500 for that. But you're essentially measuring the risk that affects all stocks in, well, those 500. Again, it's a proxy for it, but it affects all stocks in the U.S. marketplace. And so that's essentially the risk you're measuring there.
Thank you. Okay, I'd like to refer to your testimony on pages 37 and 38 through 38 of your direct testimony. You discuss why firm-specific factors should not contribute to the authorized ROE analysis. Is this only because firm-specific risks are diversifiable, or because risk is a dubious concept in the context of a subgroup of relatively uncompetitive government-regulated monopolies?
Well, I think generally it's probably the former reason you said. It's because those risks are considered diversifiable I like, for people that like looking at pictures, I have one on page 39 in the testimony that's a pretty common diagram. This is not certainly something that I made up. You see it in other textbooks on finance. I'm referring to figure 5 on page 39, where you see there on the x-axis, I mean, now you can't just add any securities to your portfolio. There's a way to actually do this. According to modern portfolio theory, you wouldn't just want to add random stocks to your portfolio, but the idea is if you do it in a calculated way and eventually just get to buy all the stocks, that you're diversifying those, diversifiable risks. Let's say you just had one stock, and I've used this example. It's getting more outdated all the time, but if you just had one stock in 2001 and that was Enron, you're going to be in quite a bit of trouble there because you're exposing yourself to the entirety of the firm-specific risk of, in that case, imprudent management. And you don't want to do that. That's not a good idea. That's not what rational investors do. And so instead you want to buy, let's say in this example, just the entire market. And then you care much less about the individual firm-specific risks in each company, but you still are subject to this level of risk that just can't go away. Market risk, which, interest rates and inflation and things like that are just going to affect every company. There's just no way to get away from that. That's okay. You want a little bit of that because you want a, return on your investment. You don't want a risk-free rate of 2%. You want something higher than that. And so, that's why, again, I see it in every utility testimony. It's like I've no doubt that there are firm-specific risks, and every company has them, but not every company can get this extra, awarded return for it, or all the awarded returns would be higher, and that doesn't. I said awarded return. All the cost of equity or required return for every company in the world would just be higher because we all have firm-specific risks, but in reality, the market doesn't reward those risks.
Okay, thank you. Let's see. I'd like to ask you a question about witness Nelson's testimony on page 71, having to do with her CAPM equity risk premium, and also your discussion on page 14 of your direct testimony. Why, this is just particular to those discussions, why does the lower end of witness Nelson's CAPM equity risk premium not overlap with your estimate of the equity risk premium, or with the midpoint of witness Cahal's range, and that is on page 37 to 38 of Cahal direct testimony, or any of the surveys in your exhibit DJG 10?
And
Well,
just Mr. Garrett, let me interrupt you for a minute. I should have done this a long time ago. I wanted to tell Mr. Lee, our court reporter, that CAPM is all capitals CAPM.
Thank you.
Okay, go ahead, Mr. Garrett.
You want me to repeat that?
I don't think I need it to have to be repeated, but I think at least with regard to Ms. Nelson's approach, I think what she, and I see this in other, again, utility ROE testimony, is what they're essentially doing, and I apologize if I'm getting this mixed up with another analysis, but I'm pretty sure what she's doing is doing a DCF model on the entire S&P 500, which in theory is a way to estimate the equity risk premium. But what I see in these testimonies is that they actually do a DCF model for like 500 times. Well, again, in theory, that could work, but then I look in there and see long-term growth rates that sometimes exceed the GDP by many times. So that's an error that repeats itself over and over again, not 500 times. I mean, some of the growth rates might be reasonable, when you have a bunch of unsustainable long-term growth rates in a DCF model that you've done for all 500 companies, there's a few more than 500, but the entire S&P 500, that's taking something that's kind of a potentially volatile input to your model and putting yourself at that risk of that input over and over and over. And furthermore, it's completely unnecessary because the S&P publishes their data on an aggregate level. So you don't need to do a separate DCF model 500 times. You can just do it for the entire market, which is not unlike what I've done in my equity risk premium calculation. You could say to some extent, I'm also doing a DCF of the market. Now, again, I consider expert surveys and commercial analysts and other scholars. I consider a variety of different sources. But I'm referring to Exhibit DJG9. And I'm just taking the aggregate market data from the S&P 500 to get the implied equity risk premium of 6%. Now, that does comport with the equity risk premium I used, but I think I should make it clear that I don't just use my equity risk premium calculation in the CAPM model. I typically use what the highest result I can find is, just in the interest of reasonableness. And the highest result, I happen to match Duff and Phelps' estimate of 6%. So that was just more coincidental, I think. Well, I was talking to Commissioner Fishman. It's not coincidental, just kind of makes it sound like it's too happenstance. I would expect these numbers to come out fairly close to each other. But as far as hitting exactly 6%, Duff and Phelps had 6%. I calculate 6%. And then I look at expert surveys, Dr. DeMotoran's estimate, and just take the highest of those. Again, a higher equity risk premium, all else held constant, will have a increasing effect on the cost of equity estimate. So I think Ms. Nelson's equity risk premium is much higher because of that somewhat curious method on calculating it by just doing a DCF model for every single company in the index. And as far as the others, I think, and I'm sorry if I can't recall, sometimes analysts will use a historical premium, but sometimes that historical premium is going back again to the 1920s, or sometimes the calculation started just, right after the Great Depression. And I don't think that's a very good, it's certainly not necessary to go back that far to get this forward-looking idea of what the equity risk premium is now. I would argue that, again, like in Dr. DeMotoran's model and my model, you're going back about 5 years to get an idea of how the growth is going to continue going forward. So I know that's a little bit of a long-winded answer, but I think some of those might describe the discrepancy. And it surprises me a little bit that I don't know why more analysts don't rely on these expert surveys. Again, you wouldn't just necessarily want to take an expert survey result and plug it into a model. I think it's good to consider a variety of sources, but that's thousands of experts around the country, by and large, who don't testify in utility rate cases. So I think that's an objective source for the equity risk premium. And then I'm looking at 5.6% there for a recent survey result. So you have 5.6, you have 6, and Dr. DeMotoran even being lower actually than that. You're starting to get a pretty good range of where I think an objective measure of that equity risk premium is. Again, sorry for the long-winded response, but if you get me talking about equity risk premium, I get pretty fired up. So.
Okay. So then basically is witness Nelson's equity risk premium calculation an issue because it's simply just not actually market-based?
Well, it is market-based because she's doing a DCF calculation on every company in the market. So it's market-based, but I think it's just very, very inaccurate and grossly overestimated because every time you do a DCF model, you got to make sure your long-term growth rate is sustainable. And a long-term growth rate that exceeds US GDP, whatever the other thing you were growing, get my hands right, here's US GDP up here growing at 2%. Well, whatever you're measuring down here that has a higher growth rate, eventually it would surpass GDP. That's just not, that's not sustainable. It'd be one thing if the long-term growth rate was 4.x% or something, but sometimes the growth rates, I think that she used, you know, they could be 8, 10, 20%. I forgot the highest one that she used in this case. I might be getting confused with another case, but either way, you see the end result just can't be considered reasonable in light of all of these other objective sources and market indicators. It's very, very, very high, and it's hard to overstate just how massive that discrepancy is. Actually, I think hers is about 13.5%. There's just no way that that's reasonable.
Okay, thank you so much. Those are all my questions.
Mr. Garrett, I have a few questions for you in light of your testimony this morning. The commission in EPE's last rate case, in its final order issued in June 2016, authorized EPE a 9.4% return on equity. You are recommending a 9% return on equity in this case. Am I correct that that is a 400 basis point reduction from the 9.4% awarded by the commission in the last rate case?
A 40 basis point reduction, but yes, yeah, just 0.4% difference.
And do you consider, if the commission adopted your recommended 9% return on equity, would that be a gradual reduction from the 9.4% awarded by the commission in June 2016?
Yes, I would describe it as a gradual reduction. Of course, what someone considers gradual is, you know, there's an element of judgment and subjectivity that goes into that. But if you make it too gradual, like 9.3% or something, well, then we're still sitting in an environment in which our authorized return is so much higher than any reasonable cost of equity estimate for this company. And so I think, I mean, even at 9%, the discrepancy is still going to be there, and it's going to, so you could argue it. I mean, and concepts, again, of arguing about fairness, you know, you could still argue that's unfair to ratepayers. Someone could still make that argument. I'm standing by my 9%, you know, recommendation for the reasons we've discussed. But yes, I think it would be fair and reasonable and a gradual, but a meaningful move in the right direction.
Okay. So based on my, I think I can say, extensive research, this commission, the New Mexico Public Regulation Commission, for decades has consistently used the constant growth DCF method to determine the authorized ROE for utilities. You did use the constant growth. Well, no, you used a quarterly growth model. Is that right?
Yes, it's called the quarterly approximation, but it still is a variation of the constant growth model. I would also add, of all of those variants, all else held constant, it produces the highest cost of equity result compared with the other variations of the constant growth DCF model.
Okay. And
but
no, go ahead.
Oh, I was saying the reason it's constant growth, we still do have that terminal long-term growth rate that's technically grown to infinity, but it's a long-term growth rate. So I still have that in my model. I'm just accounting for the quarterly compounding of dividends as opposed to the semi-annual or annual compounding dividends. So you get those little extra bumps in growth 4 times a year. It's going to have an overall increasing effect on the result. And I just use that model, I guess, to some extent, just in the interest of reasonableness.
Okay. And the results of your application of the DCF model was an estimate of 7.4% of the cost of equity for EPE, is that right?
Yes.
Okay, so do you think your application of the DCF model is a fair method of estimating EPE's return on equity?
I think it's a fair method for reasons I've discussed. I think the capital asset pricing model is superior easily, but it's so when you learn about cost of equity estimate, you're just going to like a finance class. It's all about the CAPM and other models like in the family of the CAPM and some subsequent models that came out, multi-factored models that consider different betas and things like that. But the DCF primarily is a model to estimate price. We're estimating price. We rearrange it algebraically to solve for the discount rate, for the cost of equity. So we're kind of getting an implied cost of equity. I would say the DCF in that way you're kind of indirectly to some extent measuring cost of equity. Then you add in this context, we have circular reference problems in that the stock price and dividends of utilities are influenced by the thing that we're trying to measure, that we're ultimately trying to get to, which is the awarded ROE. So there's entire books and there's sections of books about cost of equity. It's just like all about the CAPM and the DCF won't even come up in this context. So yes, the answer to your question is that it is still reasonable to consider, certainly, but I'd say it's secondary to the CAPM.
Okay, thank you. So I allocated 5 minutes for redirect and recross. Ms. Stevens, you're up.
Good morning, Mr. Now I've lost you, Garrett. I just have, I think, one question for you that follows on one of Chairman Fishman's questions. He asked you to consider whether with the cap structure roughly 50-50, whether there would be savings, whether the extra costs of having a higher return on equity would be offset by the savings relative to the cost of debt for the utility. In this case, you're recommending a 49% capital structure and everybody else is recommending a 51% equity structure. Can you address the differences in the capital structure? Can you just explain why your 51% debt, 49% equity is still consistent with everything you've just testified to about the reasonableness of what an award at 50%, at a 9% ROE and a debt based on EPE's embedded actual cost debt would be?
Well, we've been talking a lot about averages and the tendency to look at averages from other companies, and to the extent that the commission is inclined to do that, here the average debt ratio of the proxy group is 51%, and from my understanding, those companies aren't in like junk bond status or anything like that. Their credit ratings are healthy, and so that's one thing you could look at as an indication that there wouldn't be a problem there. And I think stepping back and looking at this issue a little bit more broadly, there seems to be this dynamic of, well, if the commission does this, how is it going to flow all the way through the company and impact some other thing like raising the debt ratio and what will have an effect? I think it's important to keep in mind that in between those things, the company, by and large, is responsible for managing the company in an efficient and prudent and economical manner. And I think sometimes the narrative gets shifted to where the commission is now somehow brought into all of these different elements of financing and operating of the company. So I think there needs to be this reminder of this idea of managerial discretion and responsibility on the company's aspect to keep mindful of things like credit ratings. And it's not just that the commission did something and it automatically had a negative impact, albeit that the theoretical discussion we were having, if the commission were just to award like a 7%, which no one's recommending, and that would be no one's recommending that in this case, but what my analysis also shows, you have the proxy group, but then I've also showed these other competitive industries, that are operating with debt ratios in excess of 60%. We have telecom, cable TV, green and renewable energy. Again, this data is from NYU, but there's so many, thousands of other companies around the country operating with debt ratios well in excess of 55%. I see a lot above 60%. And that's because those companies are incentivized to do that in order to maximize their return. So a commission standing in the place of competition should try to ensure that there is enough debt in the utilities capital structure. So in that regard, 51% is very, very reasonable and conservative.
So do you believe that there's any evidence in the record of this case from outside, objective sources that indicate that that maintaining the company's longstanding 49% debt, 49% equity, 51% debt ratio would be harmful to the company?
No, the company should not be harmed by the commission, authorizing a 51% debt ratio. And again, that kind of goes back to, and I'm not suggesting this with EPE. I'm just saying it in general. The commission can do something, and utility management can make mistakes, can act imprudently. Who knows what? And I'm not saying that that's a common occurrence or that does happen or that we would expect that to happen. But at that point, after the commission makes its decision on a reasonable rate of return, a reasonable capital structure, from there, the utility, it's then under their discretion and responsibility to manage the company in an efficient way to ensure its financial health.
Okay, Ms. Stevens, your time is up.
Thank you. Thank you, Mr. Garrett.
Mr. Wexler?
Thank you, Madam Hearing Examiner. Good morning again, Mr. Garrett. In this very theoretical conversation we've been having this morning, I think we got away from some first principles, and I'd like to go back to those. We talked yesterday about that the cost of equity equals the required ROE from the investor's perspective, right? That's your testimony.
Yes.
And you also talked a little bit about this sort of echo chamber concept. Have you reviewed previous orders from the commission on ROE?
I have generally, yes.
So then you're aware that many of those orders actually say it's prohibited from using one case to justify an ROE in a separate case, right?
I wasn't specifically aware of that, but it wouldn't surprise me if the order said that.
Okay, and so in your echo chamber discussion, that's not something you considered because it's just not something you knew.
Well, if I didn't know something I didn't consider it, it doesn't change my opinion about the echo chamber concept. But
and going back to the standard from Hope and Bluefield, in that standard, it's required to get a return that is, again, this is quote, commensurate with returns on investment in other enterprises having corresponding risks, right?
Yes.
And part of looking at commensurate risks in other enterprises having corresponding risks is involves looking at a proxy group, right?
I think that's one way. We kind of need to anyway, oftentimes, because the utility being studied doesn't have the requisite data, stock prices, betas in order to conduct the analysis. So the proxy group has a practical benefit in that regard too. But yes, it also furthers, goes along with the commensurate risk standard that you mentioned.
In fact, in part of your analysis, you use a proxy group, right?
Yes, I use the same proxy group as Ms. Nelson.
Do you have before you exhibit DJG 14. And as you're looking, you were asked by Commissioner Fishman about the market return representing fairness. And so if we look at that DJG 14, you have a column here for the S&P 500 returns, right?
Yes.
And before we even begin that discussion, there's a lot of discussion you had this morning about sort of competition and concepts of competition, but it's a defining characteristic of utilities that it's a regulated monopoly, right?
Yes, I think that's fair to say.
All right, and then looking at that column 4, this is the S&P returns. We can see in 2019, the return there from the market was 31%, right?
Yes, that's how it's calculated by Dr. Demoter, and I believe there's different assumptions you can have in how to calculate it. But yes, that's what he shows in his data.
You're not recommending a 31% return for EPE, are you?
I certainly hope not. I don't think so.
And we can see here in column 3, the average for the total utilities was actually 9.64. That's a difference of over 20%, or 20% points, right?
Yeah, I mean, that's a comparison of just two different concepts and numbers, but your math is correct.
Understood. If you take the S&P 500 returns, I'll represent to you that the average overall from 1990 to 2019 is 11.33%. And you're also not recommending an 11.33% return on equity, right?
Objection, Mr. Wexler appears to be testifying here.
Not testifying, just asking him if he's recommending an 11.33% return on equity.
There's no, if you ask him just whether he's recommending an 11.33% return on equity, that's fine. If you're asking him whether he's recommending that because of the average that you just calculated, maybe calculated, it's not fine. So my objection, I guess, then is to the form of the question, Madam Hearing Examiner.
I said sustained.
Yeah, Mr. Garrett, are you recommending an 11.33% return on equity?
No, I'm not.
You talked with Commissioner Fishman about pension funds. Those funds have a mix of equity, debt, and other asset investments. Isn't that right?
Yeah, sure, it depends on the fund, but there could be a variety of different assets that the fund includes.
And you were also asked about models and whether they tie back to the market, but you agreed yesterday that the DCF model considers stock price, dividends, and long-term growth rate, right?
Yes.
And you talked a little bit about credit rating, but you haven't analyzed the specific impact of lowering the ROE on the EPE credit rating, right? So for example, unlike Ms. Prieto, you have not talked with the credit agencies. Is that correct?
I have not talked with credit agencies.
And finally, you talked about...
Oh, go ahead. You can. This is your last question.
Understood. You talked about the CAPM approach. You understand that stock prices are used to calculate the beta coefficient, right?
Yes.
No further questions. Thank you very much.
Mr. Bagaco, did you have any recross?
No recross necessary. Thank you, Madam Hearing Examiner, and thank you, Mr. Garrett.
Yes, thank you, Mr. Garrett. You're excused. Let's go ahead and take a break now and come back at 10:30.
Commissioner Harris, what? know, that was kind of weird. I don't know, maybe he thinks we're married, Brian. Oh, actually, you know, at the time I was thinking he must have me mixed up with Kamala Harris. Kind of like, I don't know. That's funny. Oh, yes, gosh. I mean, my entire well-being is different now, especially since we didn't have any more variety, you know, where we operate. The little less bit of, you know, fear and anxiety that some cases was still coming out. I just got a little note pop up, you know, a little news flash on my phone that said, you know, that.
Commissioner Hall, you're still broadcasting.
Make sure I'm off. I'm muted.
They're reading me out in there. Well, this guy's just talking fast. Be careful, you just like maybe get your mic for dinner instead. I want to do whatever you want. Because I think I want to just go right to work. I want to eat and go right back to getting it done.
I want you to be comfortable. I want you to be able to rest and relax, so whatever that is.
David, can you hear me?
Yes, ma'am.
Ah, can you hear me now?
Yes.
Thank you. I switched my AirPods.
Examiner Glick, has Mr. Harriger requested entry yet?
No, he hasn't. Okay, he just did. So, my husband is retired and he's home and he's been listening to a little of this. And I think he's kind of shaking his head saying, how can you stand this?
Madam Hearing Examiner,
Yeah.
off the record, my husband has been watching this I've been doing this for 33 years. And it's the first time my husband's ever seen one live or anything. And he's interested, and he's sort of getting hooked a little bit, but that's sort of his reaction as well.
Okay, so David, are you ready?
Yes, Your Honor.
Okay, let's go back on the record. Mr. Herman?
Yes, Madam Examiner. I will call the county's first witness, Mr. Andrew Harriger.
Hello.
If we can, sorry I interrupted you, David. Go ahead and swear him in.
Would you raise your right hand, Mr. Harriger? You solemnly swear the testimony you're about to give in the matter now pending should be the truth, whole truth, nothing but the truth?
I do.
Thank you.
Mr. Harriger, could you please state and spell your name?
Yeah, it's Andrew Harriger, ANDREW HARRIGER.
And could you please state your title and place of employment?
Yes, I'm a consultant with Sawville and Associates in Findlay, Ohio.
Can you spell that?
Yes, SAWVEL and Associates, Inc. And that's in Findlay, Ohio, FINDLAY.
And are you the same Andrew Harriger who provided direct testimony on behalf of Doña Ana County?
I am.
Do you have in front of you what's been labeled Doña Ana County DAC Exhibit 1?
Yes,
Could you please identify that?
that's my direct testimony.
And if I were to ask you those questions today, would your answers remain the same?
Yes, they would.
Do you have any corrections or modifications to make today?
No.
With that, I move to admit Exhibit DAC 1.
Is there any objection? Exhibit DAC 1 is admitted.
Do you have in front of you what is labeled DAC Exhibit 2?
I do.
Could you please identify that?
It's my first supplemental testimony.
And if you were asked those questions again today, would your answers remain the same?
Yes, they would.
Do you have any additions or corrections to make to it?
No, I do not.
With that, I move the admission of Exhibit DAC2.
Is there any objection? Exhibit DAC2 is admitted.
Thank you, Madam Examiner. With that, I pass the witness.
Okay, Mr. Slocum?
Yes, Mr. Herringer, I guess you're in Ohio, so I'll wish you a good afternoon.
Thank you.
Well, it's still morning here. You, in your testimony, your direct testimony on page 6, you lay out that your responsibility in this case, what you were asked to do. Is that correct?
Yes, yes, I do.
And item number 1 there is EPE's cost allocation for rate 7 is appropriate. And on pages 7 and 8, you conclude it was. Is that correct?
Yeah, I conclude that the allocation of the proposed revenue requirement appeared to be correct, yes.
Okay. And you get to that conclusion by finding that El Paso Electric's overall allocation was appropriate. Is that fair to say?
Yes, yes.
Okay. And is it fair to say that your only dispute within the scope of what you were asked to look at was that you believe rate 7 should be reopened?
Yes, yes.
Okay. Let me turn to some, I guess, general principles about rate design and ask you about the purposes of rate classes in general. Would you agree that customers with different usage characteristics are placed in different classes based on their demands in the utility system?
In general, yes, yes.
Okay, and rate classes in general are intended to identify customers with similar usage characteristics?
Yes, yes.
Would you agree that there's no rate-making principle that says you should have classes based on who owns a particular facility or who it is affiliated with?
I would say that, you know, one of the characteristics of designing rates or allocating and grouping customers is that they are homogeneous in some way. And, you know, generally load characteristics, as you mentioned, is one criteria. And, you know, but at the same time, you know, there are other characteristics of customers that, you know, if they're existing class, that they would be similar as well.
Okay. And similar in terms of usage characteristics, right? Isn't that the criteria that's used to define classes generally?
Generally, yes.
Okay. And on page 3 of your testimony, you talk about who rate 7 is available to, and say it's applicable to qualifying schools and governmental installations.
Hey, can you read that a little slower?
Yes, sure. Is applicable. That rate 7 is applicable to qualifying schools and governmental installations. It's on page 3, lines 18 to 20.
Yes.
Are you familiar with the applicability section of rate 7?
With the, what was that?
The applicability section. I take it you are, given this statement here.
Yes, yes. I believe so. Yeah.
Okay. And that section states the rate schedule is available to all public schools and municipal and county installations, including in municipal and county hospitals, for lighting, power, and heating service.
Yes.
So for this rate class, but for it being closed, a high school would qualify.
Yes.
A police or sheriff substation.
Mm-hmm. Yes.
Would you agree that the various customers within this class are not homogeneous in terms of usage characteristics?
I don't know that. I don't have any analysis that points to that, that I'm aware of.
Okay. Well, and you're saying that you haven't studied who's in the class at this point in time?
Well, I've studied some of who's in the class, but my responsibility for the county was to look at their rate classes, which they comprise maybe a 15%, 15 to 20% of the class. So I have not studied all of the customers in rate 7.
Okay. Well, have you studied enough to know that there's quite different usage characteristics in this class? It's not homogeneous in terms of usage?
Yeah, I would say that's a fair statement. Yeah.
Okay. Is there any requirement under statute or rule for El Paso Electric Company to have a city and county rate?
Not that I'm aware of. I also don't know if there's anyone actually proposing to eliminate it either.
Okay. Would you agree that under standard rate making principles, the class is not justified as a separate class, given it's not a homogeneous class of usage characteristics?
No, I would say, based on load characteristics alone, that may be true if you studied all of the customers in the class. But at the same time, one of the things you fall back on is cost of service analysis. And the cost of service analysis clearly indicates that there's a differential in cost between the cost to serve rate 7 customers and other customers in rate 3 and rate 4.
Okay, but come at it from a rate making principle in terms of how you allocate cost. There's no rate making principle that says you should create a class for municipal and county customers, is there?
No, I would also say that, no one's proposing to break up the classes and reclassify them all in this case either.
Right. And I'm just, and El Paso Electric isn't either, but I'm just talking about the background of this class. Mm-hmm. You address in your testimony, your direct testimony, starting on page 12, and there on the right line 16, you say rate 7 should be open to qualifying new and existing customers. Do you see that? And you start with the first question that over on page 13, you quote paragraph 138 of the last case.
Yes.
Do you see that?
Mm-hmm. Yep.
Would you agree there's nothing in that paragraph that says anything about reopening the class?
Yes. However, part of the reason why I put this in here was that, in the last case, EPE was proposing to eliminate this class. The commission found they didn't have supporting evidence to support that claim. And the reason why this is in here is, there needs to be a cost of service analysis to verify that the class, in fact, does have a different cost to serve it. And the commission directed EPE to choose to eliminate, or continue the class, and if they continue it, propose a time of use rate, which I believe from the testimony I've read that EPE has chosen to continue it, and they've proposed, a time of use rate as well. So given that the cost of service analysis indicates that there's clearly a cost disparity that still exists, which was indicated by the commission in this order, that there should be investigation of the cost disparity, that cost disparity does exist, that there's no reason to remain closed to new customers that qualify under the rate schedule.
Okay, but let me ask it a different way. There's no obligation in this paragraph for El Paso to study whether or not the class should be reopened, is there?
No.
Okay. Would you agree with the class being closed since the last rate case? The load and usage characteristics are a known quantity?
Since the last case?
What's been closed since the last case, right?
Yes, yes,
So we know which customers are in there and know well their usage characteristics.
yes, yes.
With a typical class that has applicability sections based on usage, we would know what the usage characteristics of customers coming into the class would be, would we not?
Yes, yes,
For instance, right 3, the small commercial, we would know that they would have certain usage characteristics in order to qualify for that class.
correct.
Okay. If we were to reopen rate 7, given that there's no limitation on usage characteristics, we wouldn't really know what customers would migrate into that class, would we?
You mean, would we know ahead of time before they
Right.
do it, or you mean after the fact when a test year has been developed for a rate case?
Would we know it ahead of time?
No, I mean, you could do analysis that, to determine whether, a customer would possibly choose to move to rate 7 if they qualified, but no, you wouldn't know for certain which
Okay.
customers would move and which ones wouldn't.
Well, following up on what you said just there, that you could study which customers are currently in rate class 3 and analyze their usage characteristics if you thought you were going to reopen the class, right?
You could, yes.
In this section that starts on page 12 on line 16, I'd want to go through here question by question here. And the first question is, what did EP propose in the last rate case?
Slow down, please, Mr. Slocum.
Okay. I'm sorry. I will do so. On page 12, there, line 18, your first question, you ask, what did EPE propose for rate 7 in its last rate case? Would you agree that that question and answer doesn't provide any reason to open or reopen the class?
I think the purpose of the question was just to lay out some background as to what happened in the last rate case. I think that's important because
Okay.
it led to what the commission determined and then, ordered EPE to do in this next rate case.
Okay. Would you agree that the next 3 or 4 questions also just lay out the background?
I'm sorry, Mr. Slocum, could you provide a page and number reference?
Yes. On page, well, I guess the next question is on page 13, line 1. That question, the question on line 11, is EP proposing to eliminate rate 7? The question on line 16, what class would rate 7 customers qualify if rate 7 were eliminated?
I'm sorry, sir, if you could slow down and say that again on line 16.
What rate class would rate 7 customers qualify for if rate 7 were eliminated? Would you agree those 3 questions, like the previous one I asked you about, provide background and don't provide a reason why the class should be reopened?
No, I think that I think that's part of the supporting argument as to why it should be open, because I think that part of what was ordered in the last case was to investigate the cost disparities, and the cost disparity is something that, with or without these several questions on this page here, I would still testify that I would support that. The reason I'm putting the commission order in there is to further support it, because there wasn't sufficient investigation by EP in the last rate case, and in this rate case, they aren't proposing to eliminate it, and the cost disparity, which is quoted here in the commission's order, still exists, and it's not immaterial.
Okay. Why is the cost disparity? Well, let me back up and ask you this first. county and municipal customers in rate 3 have usage characteristics that class is intended to capture. Is that correct?
Sorry, can you repeat that?
County and municipal customers in rate 3 have usage characteristics that qualify them for their class, and therefore that class is intended to capture. Let me ask it a different way.
Yeah, sorry, I'm not following.
Yeah, I apologize for that.
That's
Let
okay.
me ask a different way. The county and municipal customers in rate 3 currently are appropriately served under that class because of their usage characteristics. Is that correct?
You mean, are they misclassed? Are they in the wrong class?
Right.
Based on what's available to them?
Right.
No, I'd say they're in the right class because they're not allowed to join rate 7. I mean, that's part of why, I'm bringing this up. Yes.
Yes. Why is a cost disparity between rate 3 and rate 7 a reason for reopening rate 7?
Because you have customers that outside of it being closed would qualify for the rate and therefore would likely see a decrease in their bills. And they're all tax funded entities that are paid by the ratepayers and taxpayers in the county and city area. And I don't see a reason why a rate class that's been included in a cost of service analysis and it's shown that there's a cost disparity, why there's customers that should qualify for it, they have the qualifications for it outside of being closed, should not be able to take advantage of that cost disparity and that's been developed by the cost of service analysis.
Okay. With regard to those customers that are in rate 3, is it fair to say we have no idea if their usage characteristics are the same as those currently in rate 7?
I wouldn't say you have no idea. Just like any other customer, I mean, you can look at their usage characteristics. I mean, EPE would have access to that information.
So it's possible EPE could then study those customers and determine whether or not they are similar to the customers currently in rate 7?
They could, yes.
Okay. And did you do that?
No.
Okay.
No, that was not the purpose of what I'm doing. There's an existing rate class that for some reason has been closed for, I think, 10 years or more to new customers. And there's customers that qualify under that rate schedule that haven't been able to join that rate schedule. And that's what I was analyzed and tasked to do in my testimony.
Okay. In that vein, if rate 7 is reopened, you would expect all those customers that are currently in rate 3 that would now qualify for rate 7 to migrate to rate 7, would you not?
Not necessarily. With the cost disparity I've seen, if it's 17%, the likelihood is great that most of them would, but you won't know that. I mean, if it's an optional rate, you won't know that, until you open it and allow them to migrate to the class.
Okay. Well, would it be fair to say if they didn't migrate, given the cost savings, some government official is not being financially responsible?
I don't know that I'm going to make a judgment about financial responsibility of city and county officials, but I would hope that they would either internally or externally have someone do an analysis to determine whether it's beneficial or not for them to switch. And if EPE were willing to offer that, I would imagine they could ask EPE for that analysis as well.
Okay, but your analysis suggests a 17% savings, right?
Yeah, on a class basis, $1 per kilowatt hour, yes.
Well, isn't the price in rate 7 on a kilowatt hour basis below that of rate 3?
It is.
Okay. If rate 7 were to be opened, would you expect there to be some significant migration to rate 7 from rate 3, given the cost disparity?
I would think so, but I don't have all the individual customer data to know that for sure.
Okay. And would you agree you should look at that individual customer data and study the consequences before opening the class?
I'm not sure that, consequences is the right word. If it's a class that's, has similar customers in it, then I don't know why they can't migrate. Now, does that mean that, when the next rate case is filed, that obviously those customers would be part of the billing determinants and then would be allocated costs? Yes. Do I expect that to be a significant impact on the demand and allocators? And I don't know that for sure because, like I said, I don't have every single customer in rate 7. But I don't, from what I know of the county, it's, a small percentage of customers. For rate 3, it's a small percentage, but for the county, if you're looking at just their bills, it's all relative. So for the class rate 3 and EPE's perspective, it may be a relatively small impact to them, but for a county that, has a portion of that class and, may have anywhere from 4 to 10 customers that may move, that's still cost savings to them. That's percentage wise more significant than what impact it would have on the company or other classes.
Well, would you agree that if rate 7 was open and you had a migration of customers to rate 7 from rate 3, that EPE would immediately not be recovering its approved cost of service from this case?
I wouldn't know that until that's determined.
Okay. Well, in this case, we have certain costs allocated to, and expect certain revenues from rate 3. Is that right?
Yes. Yes.
And the same thing is true of rate 7?
Yes.
And if the order reopened rate 7 such that customers in rate 3 would migrate to rate 7 and pay less, EPE would not be recovering its cost of service that's approved in this case. Is that correct? I mean, that's an expected consequence.
Yeah, that's an expected consequence. And like I said, I can't imagine it to be a large consequence. But at the same time, until customers make that choice to move, and if it's not mandatory, you can't force them to move. You'd have to reassess that in the next rate case.
Okay, but you could also study it before you decided to reopen it, couldn't you? To figure out what the consequences of reopening 7 would be.
Yeah, you could.
Would you agree that a standard principle of rate making is revenue stability for the company?
Yeah.
Okay. I believe that's all the questions I have. Thank you, Mr. Herringer.
Thank you.
You're on mute, Judge.
Ms. Stevens, you have 5 minutes.
Thank you, Madam Hearing Examiner. The city has no questions for Mr. Herringer.
Mr. Bagaco, you have 10.
Madam Hearing Examiner, we will leave our 10 minutes. No questions necessary for Mr. Herringer, but we thank him for his time and thank you.
Thank you.
Mr. Herringer, I have a couple questions based on Mr. Slocum's cross-examination.
Yeah.
So if the commission were to adopt your recommendation and reopen rate 7, would that require any adjustments to EPE's cost of service, such as changing billing determinants or class allocation costs?
I mean, that would be one way to address it. Yes. And I don't think, you can assess it, like what was mentioned, you do an analysis and figure out, which customers may move and what that impact may be. while keeping the current allocation the same, the allocation factor is the same, or, you'd use that analysis to determine which customers would move, and reallocate those costs. But that would also, require some judgment on assuming which customers would move and which ones wouldn't, which, I mean, yeah, there's probably a decent percentage of them that I would think would be obvious if they do a bill comparison and determine, which rate class would best serve them. I think that you could at least come up with a large percentage of them and determine which ones would move.
So do you think that that's something that should be done before that rate? If the commission agreed with you that it should be reopened, is that something that should be done before reopening it?
Yeah, I think that would be fair. Yes.
Okay. So but isn't it too late, right, to do it at this point?
Possibly. I mean, EPE has access to the information. I mean, they can certainly, do that. I imagine quicker than most other people in the case.
Okay. Do you know, generally, when a utility proposes a new rate in a rate case, do they do some projection of how many customers they think will receive service under that new rate in order to allocate costs to that new class? How does that work, if you know?
Yeah, that would be prudent. Yes. Especially if you have known and, or at least a good estimation of, what customers would be added to the system and who would be served under that rate schedule. Yes, that would be fair.
Okay, thank you. That's all the questions I have.
Thank you.
Mr. Herman, you have 5 minutes for redirect.
Thank you, Madam Examiner. Mr. Harriger, you were asked about usage characteristics that should be considered when organizing customers into rate classes, correct?
Correct.
Would you say that usage characteristics is the only criteria made in determining rate class or rate class allocation? I'm sorry, excuse me. Let me rephrase that. Would you say that usage profiles is the only criteria that should be considered when determining which customers go into which rate class?
No. No, I would say that, in addition to usage characteristics, the main characteristic is you're looking for like kind. I mean, when you design rate classes, if you started from zero, like kind customers, preferably with homogeneous load characteristics, but you can't achieve that, especially on a larger system. It's hard to achieve that perfectly. But then also like kind, and I would consider rate 7 customers tax funded entities in that, you're not just picking out a certain business. These are all funded by taxes, which, if they're paying higher than cost of service because they're lumped in with other classes, I mean, that's going to affect taxes. That's going to affect the bottom dollar of the interest of ratepayers. So given that it indicates, that the cost to serve the class is lower, other customers that are qualifying city and government tax funded entities should have that opportunity.
And you would say that's generally true across all of El Paso Electric's rates that have special rates for the military, special rates for state universities, among others?
Yes.
And you were asked about general provisions about rate design, and you'd agree that one of the general provisions is that customers cover their cost of service in their rates, correct?
Yes. Yeah.
Did you didn't say in your testimony that rate 7 isn't covering its cost of service, correct?
No, it's paying according to EPE's analysis and their cost of service allocation. They're paying more than their cost of service. I think it indicated a decrease in the initial allocation.
Thank you. That's all I have.
Mr. Slocum, do you have any recross?
Yeah, just a few questions. Mr. Herman asked you about other rate classes El Paso Electric has, such as the military. Have you studied how the military's rate design is done in this case?
No.
Do you believe that it's designed to cover the usage that qualifies for it?
I would hope so. Yeah, I would imagine that's how it's designed.
In El Paso's New Mexico service territory, they have Holloman and Fort Bliss. Are you aware of that?
No, I'm not aware of what bases are there. No.
Okay. Are you aware of any other class that could have such disparate usage between customers as rate 7?
Not off the top of my head, no.
Okay. That's all the questions I have.
Okay, thank you, Mr. Harriger. You're excused.
Thank you.
And our next witness is Ms. LaRock.
Judge, I don't know what's happened to your microphone, but your voice is not being picked up.
Okay.
Better?
Yes, ma'am.
Thank you.
Madam Hearing Examiner, have you invited Ms. LaRock into the hearing?
No, she has to request to come in.
Oh, okay. Let me give her send her a text message because thought she was ready. I apologize. We were emailing. I didn't realize that she was not standing by. Lisa? Your phone.
Okay, Ms. LaRock, are you ready?
Have you invited Ms. LaRock into the
She's here, Miss Stevens. She has to request to come in.
Oh, okay. Let me give her.
I'm here.
Send her a next text message because thought she was ready.
Where is that coming from?
Miss Stevens, I think something's going wrong with.
Can you hear me?
Yes.
Okay.
Ms. Stevens, can you unmute yourself?
I think I am. Can you hear me? Or am I the one who's been lost now?
I think we're okay now.
Okay, we had a delay there. Weird.
Ms. LaRock, would you raise your right hand, please? You solemnly swear the testimony you're about to give in the matter of opinion should be the truth, the whole truth, and nothing but the truth?
I apologize. We were emailing.
Yes, I do.
Realized that she was not.
Thank
Okay,
you.
hold on. We're having.
Somehow a recording is coming up, I think.
Do you have YouTube on?
Maybe.
If you do, you need to close out your internet browser.
Lisa, can you close the YouTube?
Yeah, I did.
Okay,
I'm sorry
I
for
think
the
that will
confusion.
solve the problem.
Okay, go ahead, Ms. Stevens.
Good morning, Ms. LaRock. Would you please give your full name for the record?
My name is Lisa LaRock.
And how are you employed?
I am the Sustainability Officer for the City of Las Cruces.
And did you prepare and have filed the direct testimony of Lisa LaRock on behalf of the City of Las Cruces, which is dated October 9th, 2020, and has been pre-marked as CLC Exhibit 1?
Yes, I have. Yes, I do.
And do you have any changes or corrections to that testimony?
One minor change on page 149 of 193, where I labeled an exhibit.
Excuse me, just a minute. Excuse me, I don't have pages going up that high.
This would be on the PDF version.
Oh, I just have the paper version. Can you give me the page on your paper version?
This is an exhibit, so it does not have a consecutive page number, Madam Hearing Examiner, but it is her, let's see, I think it's the second to last exhibit. If you go in back maybe 10 or 12 pages. Is that right, Lisa? I'm working backwards. Actually 149 of 180, so 190. So it's about 50, it's about 45 pages from the back, Madam Hearing Examiner.
It's not going to help me very much. Can you tell me which exhibit is it?
It's the fourth exhibit, and it wasn't labeled.
All Ms. LaRock is doing is adding a label LL-4 on an exhibit that was not labeled by my mistake originally.
Okay, go ahead.
So with that one minor change, Ms. LaRock, if I were to ask you the same questions today under oath, would your answers be the same?
Yes.
And are those answers true and correct to the best of your knowledge and belief?
Yes.
With that, I move to admit CLC Exhibit Number 1, the direct testimony of Lisa LaRock.
Is there any objection? CLC Exhibit 1 is admitted. Ms. Olson, you're up and you have 45 minutes.
Good morning, Ms. LaRock. Can you hear me okay?
Yes, I can. Thanks.
Okay, great. Nice to see you again.
You too.
So I just plan to cover two areas with you this morning. I'd first like to briefly talk about the EV rate proposal, and then I'd like to talk to you about PV3. So starting with the EV rate, am I correct in understanding that the city is generally supportive of an electric vehicle rate? And I'll just characterize that as a rate tailored specifically to accommodate electric charging service for vehicles?
Excuse me, just a minute. I want to clarify for Mr. Lee. That's EV for electric vehicle.
Thank you.
Go ahead, Ms. LaRock.
Yes, the city is supportive.
Great. And am I also correct in understanding that the city is just seeking to have that rate expanded so that it'll cover charging activity operating at up to 480 volts instead of 240 volts? Is that correct?
Well, yes, we will. That is an area that we want included in the rate.
And that's largely to cover the city's planned electric bus fleet so that those buses will be under that rate. Is that correct?
Yes, that's correct.
Okay. And will you agree with me that the charging greater than 240 volts up to 480 volts will put a greater load on EPE's system? If you know.
Well, it depends on when it's being charged.
Okay, but
Oh, yes, there'll be a greater load. Okay.
Okay.
I'll
Thanks.
agree.
Okay, moving on to your testimony about PV3. Am I also correct that one of the purposes of your testimony is to establish the city's position that EPE does not need the energy and capacity from PV3 to serve New Mexico's load?
That's correct.
I apologize, you're kind of delayed on my screen, so your voice is coming before your mouth is moving. And you haven't independently evaluated EPE's projected peak demand, is that correct?
That's correct.
And you're not disputing the numbers that are reported for peak days, is that correct?
Correct. That's correct.
Were you here, or did you hear Mr. Barachik's testimony?
Not the entire testimony.
And did you have a chance to review the pre-filed rebuttal testimony that he filed in this case? I know he filed a lot of testimony.
I wouldn't say, I briefly looked at a lot of, I don't have a working knowledge of it.
Okay, did you review the portions of his rebuttal testimony that responded to your direct testimony?
Again, I don't have a working knowledge of it. I did review it, but I'm not prepared to respond directly to it.
Okay. Are you familiar with his testimony that the 2020 peak exceeded the forecasted system demand for 2026?
Could you repeat that, please?
Yeah, just to put it a little bit more simply, that the peak that EPE hit in 2020 was higher than what what EPE had forecasted in 2026.
Oh, yes.
And did you also either hear from him or see in his rebuttal testimony that even, and I believe it was in Mr. Schustrel's testimony as well, that even with the new resources that EPE has recently had approved and will be adding, EPE is still expecting to be short on capacity need in 2023?
I am familiar with EPE's position on that.
Okay. And are you, so you're agreeing with me that that is EPE's position?
That's what I'm agreeing to.
And is your disagreement with EPE largely based on EPE's assignment of solar capacity factors in planning reserve margins, not in their forecasted projected peak demand and the numbers reported for peak days?
Yes, I think I agree that, well, I disagree that, I believe that that EPE's handling of reserve margins, of the peak capacity of solar, whether it's their own or earlier acquisitions, and their DG distribution and their DG contribution are all factors in whether or not there is capacity available.
Understood. So just to generally characterize that, it's with the assignment of capacity factors and the planning reserve margins that you're taking issue with. Is that generally
Yes.
correct? Okay. And am I correct in understanding that resource operation and planning does not fall within your role as a sustainability officer for the city?
Resource operation in terms of energy acquisition?
Of operating the utility generating resources.
That's correct.
And planning to meet demand, that doesn't fall within your role as a city sustainability officer, is that correct?
Well, yes and no. I do not do the physical accounting, but I have a responsibility for alerting the city as to trends that should influence our decision making. So trends that say that trends and policies that push us towards a greater commitment to renewable energies and reduction of greenhouse gases through clean energy are something that I am asked to come in on all the time. And so and trends that say the rate with which this energy transition is going to happen is also part of my responsibility.
So planning to meet renewable energy requirements, but not necessarily planning to keep the lights on. Is that a fair summary?
That would, yes.
Okay. And you recognize generally that renewable resources such as wind and solar are intermittent by nature.
I do understand that they are intermittent by nature. I understand that batteries help to even out that issue. What I see even more significant is that we are changing the paradigm with which we manage energy. So it's not just supply side, it has to do with demand side, and it has to do with orchestrating and balancing multiple resources and multiple strategies at any one time. And those utilities that are nimble enough to do that will be the ones that will take us most readily into this new transition, into this new paradigm that I'm talking about. And it is with, and those that are most successful will also be most economically successful because they will be able to manage a larger share of the market because of transportation and building electrification. They will increase confidence of the rate payers because they will see that the utility has the capacity to make that transition. It will also possibly influence legislation in slowing its concern to find alternative strategies like community aggregation or community solar. And I think that it also shows that the utility has embraced the transition and is learning from its lessons. So the intent of what I'm bringing forward is to really encourage the city, or rather the utility, to be more nimble in what it is trying to in how it approaches this, not in the fear factor that solar is intermittent, but how can it juggle multiple strategies at one time to be able to move forward. And the fact that Palo Verde 3 is such an added expense and relies on that same sort of supply side energy, it discourages me to be an advocate for EPE embracing this transition. Sorry.
So I think we got a little off topic there, but to kind of unpackage what you're talking about, it seems like a lot of the ideas and advocacy that you're making has to do with future and the development of renewables and the use of battery and alternatives to meet that use. But as we're sitting here today, just a simple question, and I think you've answered this, that renewables like solar and wind are intermittent. You'll agree with me on that today?
It's still a qualified yes, because every time El Paso Electric avoids renewable energy, it's skirting its responsibility to address the Renewable Energy Act, and it's creating stranded assets for us later that we won't be able to use.
Okay, and I don't think I asked you anything about avoiding renewable energy. We're just talking about solar cannot supply energy in the dark. Is that correct?
Unless there's batteries associated with it.
Right, and I didn't ask about battery. I'm just asking about solar.
Okay, yes.
Okay.
That's an obvious one.
And so when we're looking at a apples to apples comparison, you can't make that comparison between solar and firm energy, right? One can supply at night and one can't. Is that fair?
Yes.
Okay. And you'll agree that PV3 is a firm zero carbon technology?
Yes.
Objection. The term firm is not being used in a clear manner. At least not in the same manner that Mr. Bratchick and other witnesses have used. I think maybe Ms. Olson is referring to base load, but not necessarily firm.
Ms. Olson, can you clarify what you mean by firm?
That it's not an intermittent resource, that it can be used all the time, anytime.
Yes.
Okay. And so will you agree with me that it makes sense that PV3, like other baseload resources, would have a higher capacity than solar, higher capacity factor than solar?
Yes, and I think in some ways that's problematic, because because of its firmness, it would be perceived as a must-run option for EPE, which would mean that solar would take a back seat to that, where you might choose to curtail the solar energy, and we as ratepayers would end up having to pay for all of the renewable energy and the PV and Palo Verde's energy, and we would get no RECs towards that. So in essence, your reliance on Palo Verde works against our Renewable Energy Act.
So you'll agree that there's several considerations the utility has in resource planning and utility operation. Is that correct?
Yes.
And one of those is keeping the lights on, meeting its obligation to reliably serve load. Is that correct?
Yes, that's correct.
And you'll agree that just shutting off power at night when solar isn't available doesn't meet that obligation. Is that correct?
Yes, but my example wasn't relevant to the evening.
Well, I think you're saying that EPE should be looking at renewables, not nuclear, but what we're talking about is how to meet load when renewables are unavailable. And that you've already agreed with me is the difference between gas generation or PV3, a zero carbon resource, and intermittent renewables like solar and wind.
I understand that it is challenging with intermittent resources to be able to do that. But I also see that there are several examples of utilities that have a much more aggressive approach to renewable energies and are successful at doing it. Excel, your neighbor, has a goal of, our neighbor has a goal of being 80% by 2030. When El Paso Electric is only talking about an obligation at most of 20% of its generation. So it's hard for me to understand why knowing that this is going in this direction, that you wouldn't be pursuing it as the direction that is being legislated and economically, and the market is moving in that direction. So it's hard for me to understand when there's as I just said, when there's very ambitious goals that are being reached, why this small goal is so daunting.
Okay, so let's talk about the REA. First, you're frequently testifying on behalf of the city in these recent El Paso Electric cases, correct? I think you have that listed in your testimony.
Yes.
And you testified in the 19-0099 UT case on behalf of the city, is that correct? That's the Renewable Energy Act recent case.
Thank you.
And you, in fact, testified in opposition of EPE's request for 2 new solar resources, is that correct?
Yes.
And you also testified in the 19-00348 UT, which was the LTPPA proceeding for EPE?
That's correct. But the reason that I did it was not because I was opposed to solar acquisition. I was following the need to be able to prove that the capacity that the El Paso Electric had needed to be looked at in its entirety, and there were natural gas plants that were not committed to, that had been talked about being retired and had not, and that was the basis for my argument.
So I think I just asked if you had testified in that case, and my next question was going to be, as part of your testimony in the city's position, they were opposing 2 of the resources. One was a renewable resource for solar plus battery, and the other was a standalone battery. Is that correct?
Yes.
Okay. And then in talking about the well, sorry, I don't want to confuse things too much, but just to close the loop on the previous discussion we were having, you haven't provided, and you're not providing an expert analysis or recommendation for the capacity factor that should be assigned to solar or the planning reserve margin. You're just disagreeing with the analysis and recommendation that Mr. Barachik stated. Is that fair?
I'm sorry, could you repeat that again?
Yeah, you're not providing in this case an
Objection. Objection. That's a compound question. And earlier in this case, when the company moved to strike portions of Ms. LaRocque's testimony, a ruling was made that Ms. LaRocque is qualified as an expert. So I would ask that if that question be asked, that it be asked in smaller pieces to be consistent with the previous rulings.
Okay, Ms. Olson, why don't you ask that question separately with respect to reserve margin and with respect to solar capacity factor? So just break it up into two questions.
Okay. You're not providing an expert analysis on capacity factor in this proceeding, are you?
No.
And you're not providing an expert analysis on planning reserve margins in this proceeding, are you?
No, I am not supplying expert analysis. I am just trying to bring to light that it is important to think out of the box from El Paso standard ways of operating in order to be able to become more nimble in this energy transition.
Okay. And I just now want to turn quickly to some of I think you characterize them in your, or what you characterize in your testimony as a physical alternative to the capacity and energy provided by PV3. And I think one of your proposals is for the company to temporarily use Rio Grande 6 to make up the difference that would have been provided by PV3. Is that correct?
That's one of the many suggestions that I had, although I do it with a heavy heart because of the fossil fuels.
Right. And you haven't done any analysis regarding the feasibility of that recommendation. Is that correct?
Only in terms of comparing the numbers of available energy and capacity that are provided on the loads and resource chart.
And is the energy and capacity for RG6 in the loads and resource chart?
They are in earlier ones.
Okay. So you're basing it on on the older, but not the current loads and resources. Is that correct?
I'd have to check my testimony. I can't remember actually what source it is at this moment in time.
Okay, but so your testimony today would be whatever you stated in your direct testimony accurately reflects your position?
Yes, I think so.
Okay. And again, to get back to that question, part of your proposal is that the RG6 would be a temporary replacement until EPE was able to solicit and bring online new renewables to replace that energy and capacity. Is that correct?
Yes, the Buena Vista and the Hecate too.
But again, we're in agreement that the solar and wind, the renewables are intermittent resources. Is that correct?
Yes, but I was really suggesting market purchases of renewable energies, not the acquisition of them in the examples that I gave for physical.
Okay.
Oh, you're talking about Buena Vista 2 and Hecate 2.
No, I understood your testimony, and correct me if I'm wrong, that you're suggesting that RG6 is a temporary replacement until EPE is able to acquire new resources down the line,
Yes, I'm sorry.
future resources.
That's correct.
But those future resources you're contemplating are renewable resources, is that correct?
I would anticipate so because of the Renewable Energy Act.
Right, and it wouldn't make sense to require EPE to stop using PV3 now, replace it with a gas unit, and then replace it with nuclear or future gas. You're suggesting it needs to be replaced with renewables, is that correct?
Well, from my understanding of the Renewable Energy Act, that there's a requirement that the utility have an increasing acquisition of renewable energy up to 2040, and then after that point, it can finish the balance with clean energy.
Sure, and so it sounds like you're familiar with this standard and the REA to be 100% carbon free by 2045.
That's right, and up to 2040, the utility has an obligation to increase its energy generation with up to 80% renewable energy.
And your focus, or your argument is that the focus prior to 2040 is on adding renewables, is that correct?
That's correct.
But you're aware that another requirement in the REA 6216.4 is to make reasonable and consistent progress over time towards the 100% carbon-free requirement. Is that correct? Are you aware of that requirement?
Yes, but I interpret it as being moving towards the renewable energy first.
Okay, but that requirement is specifically in the paragraph that requires utilities to be carbon-free by 2045 and directs to make reasonable and consistent progress towards that over time towards that requirement. Is that correct? Or we can agree that the language for the statute speaks for itself. I'm fine with that.
Okay.
So isn't your proposal to use a 60-year-old?
Excuse me, can I just turn somebody, oh, good. Sorry, I have 3 screens open and I didn't anticipate this.
Isn't your proposal to use a 60-year-old gas unit that came online before the Clean Air Act that's not subject to emission limits in place of a carbon-free resource inconsistent with the REA requirement to make reasonable and consistent progress towards being carbon-free by 2045?
Not necessarily, because I think that being directed, that the utility moving forward and its long-term commitment or its continued commitment to renewable energy is most important, and that it be more prudent to use a temporary resource, albeit dirty, than invest in the acquisition of or the use of Palo Verde in lieu of renewable.
Are you aware of a backsliding exception in the Renewable Energy Act that allows the utility to move away from zero carbon resources toward gas resources with pretty high greenhouse gas emissions, even on a temporary basis?
Are you saying this in the context of building a new plant?
No, I'm saying we've discussed the requirement in the Renewable Energy Act, the requirement to make reasonable and consistent progress over time towards being carbon free. And I'm asking you if you're aware of an exception to the REA that would allow EPE to replace a zero carbon resource, PV3, with a gas resource that has high greenhouse gas emissions, even on a temporary basis.
I can't speak to that.
So you're not aware of any exceptions?
No, I can't speak to that.
Well, I'm not asking you to speak to it. I'm asking if you're aware of any exceptions. It's a yes or a no.
At the moment, I can't think of any, but I'm not, no, I don't know.
So your answer is no.
Okay. No.
Is that your answer, or is your answer yes?
And my answer is, I don't know. No. I don't know is my answer.
You don't know if you're aware?
Oh, am I aware? No, I'm not aware. There.
Okay, thank you. And moving from a zero carbon resource back to gas generation is antithetical to the city's commitment to reduce greenhouse gas emissions on a community-wide basis, correct?
Give me a second to think about this. I think that if using gas is just a temporary bridge until you have more renewable energy online, I would prefer, or I would support, the city would support, if I am representing the city, that your continued commitment, purchase, and use of renewable energy is very important. And that if your purchase or dominance of use of the Palo Verde influenced or slowed your rate of acquisition and use of renewable energy, that would be very disappointing.
Okay, but I think my question was about greenhouse gas emissions and the city's commitment, which you highlight throughout your testimony, to reducing greenhouse gas emissions. Is replacing a zero carbon resource with a resource that emits greenhouse gases consistent with that commitment by the city?
So greenhouse gases.
Objection asked and answered.
Hearing examiner, I don't believe it's been answered.
Overruled. Overruled.
Ms. Lorca,
Yes,
I'm just asking you
greenhouse-
about greenhouse gas emissions.
Right, yeah. So yes, our goal is to reduce greenhouse gas emissions to a great percentage by 2050. And it, in the short run, does seem antithetical. But there are also problems that are not articulated in the climate change that are also a factor in my decision making. One of them is that nuclear power is very problematic in terms of the disposal and acquisition of uranium. And so, and most of it is going to be, or is proposed to be stored in New Mexico. So those are other things that, in the long run, discourage me from proposing Palo Verde. That's one of the factors. I know that it wasn't in my testimony, but it is a consideration.
And
Nonetheless, I
I
understand that
apologize, I
it's a
don't wanna
clean energy.
cut you off, but I think you're getting pretty far afield from the limited question that I asked you, and we're kind of venturing out beyond the scope of your testimony.
Okay,
And I just have one other question along those lines. You discussed in your testimony the commitment to the Climate Mayor's National Network to adopt aggressive greenhouse gas emission reduction targets for the near term. Is that correct?
yes.
And that this proposal by the city to, again, replace a zero emitting resource with a 60-year-old gas unit is contrary to that commitment, correct?
If it were a long-term use, it would be a contradiction to it.
So it doesn't contradict your commitment to aggressively adopt reduction targets in the near term?
My preference would be to look at other things besides Rio Grande, but I'd listed that as just one of many options. So
I understand that, but
I'm
we're
not-
just talking about this option for Rio Grande 6. I'm not talking about the other options. I'm talking about the city's proposal for Rio Grande 6.
I think purchasing energy from nuclear power would be preferable to purchasing energy from fossil fuel.
And you understand that the market purchase that you're advocating for, a large number of them come from gas generated or fossil fuel resources, is that correct?
Yes, I know that's what you've done historically. I would encourage looking at other options as well.
And you understand that market pricing can be volatile.
Yes.
And you'll agree that market purchases may not be financially beneficial to EPE customers.
Objection, beneficial relative to what?
Overruled. So the question was, and you'll agree that market purchases may not be financially beneficial to EPE customers.
Yes, I understand that could be a possibility.
Okay, thank you, Ms. LaRocque. I appreciate your time this morning and I have no further questions.
Mr. Bagaco.
Madam Hearing Examiner, staff waives its cross of Ms. LaRocque, but thanks her for her attendance and time. Thank you.
Ms. LaRocque, I have one question for you as a follow-up to Ms. Olson's cross-examination. Could you turn to, I don't have the PDF page, it's page 36 of your direct testimony.
It's my computer's really slow when I have all these things open. 32, you said?
36.
Oh, 36. Okay.
Okay, so actually I have two questions. One is, this isn't a question actually. Ms. Olson asked you whether you're providing expert analysis on capacity factors. You said no. However, am I correct that on page 36 of your direct testimony, you are providing evidence on capacity factors that contradicts what EPE, the capacity factor EPE has assigned to its solar facilities or its solar resources? Is that correct?
That's true.
Okay,
Yes, it
thank you.
is.
That's all. Ms. Stevens, you have 5 minutes for any redirect.
Ms. LaRock, regarding the phrase capacity factor as used by the hearing examiner, her last question, is it your understanding that the capacity factor of any generating unit is an average of the capacity throughout the year relative to the number of hours in the year? The term capacity
Yes,
factor.
I believe so.
And is your testimony on page 36 a reflection of the capacity factor over the year of EPE's solar and DG facilities, or a reflection of what EPE allocated as its presumed availability at the one peak hour of the year?
The latter.
And are those different concepts?
I believe so, because it is such a the second example is such a small portion of the overall capacity.
And therefore, consistent with the hearing examiner's ruling, are you giving expert testimony in this case based on your experience in several other cases about the reasonableness of EPE's loads and resources table analysis of what value to give to value relative to nameplate capacity to be given to EPE's renewable resources at that one peak hour that is reflected on the loads and resources table?
Yes, that is my intention.
Thank you. And going back, since I only have a little bit of time, going back to
Wait,
Ms.
hold on. We're getting some background noise.
Feedback.
Try again, Ms.
Yeah, I
Stevens.
think it's.
Is it me or is it Ms. LaRock? There's something
can't tell.
scratchy.
I bet it's.
There's something scratchy, it sounds like, or is it just feed electronic? Shall we try again?
Yes.
Ms. Olson's last question was whether market purchases may not be financially beneficial to customers. If you think this is only something that Mr. Reyes should answer, tell me so, but do you believe that purchases at EPE's proposed proxy price of $48.50 per megawatt hour every hour of the day and every day of the year is more financially beneficial than taking some risk at market prices for when the system actually needs capacity from New Mexico actually needs capacity from an energy from Palo Verde 3?
I think that the proxy price for Palo Verde is high compared to other rates, but I would defer to Mr. Reyes to talk about it in more detail.
And through much of her questioning, Ms. Olson was asking you about replacing Palo Verde 3 with gas, specifically Rio Grande 6. And you were talking about the short term, and she was not necessarily talking about the short term. Can you tell me what term the city in your testimony is referring to as the short term in light of the planned commercial operation of the Hecate 1, 2 and 3, Hecate 2 and Buena Vista 2 projects in May of 2022?
So those are coming online in the fall of 2022 and or 2021. And I'm talking about just the summer. I'm talking about the Rio Grande during the summer prior to that.
So are you talking about 2021 or 2022? Which summer? Do you understand when those plants are supposed to come into service?
In 2021 is what I'm talking about.
Okay, so we're talking about just a 1-year hole to fill, is that correct?
That's correct.
And is that why you're capable of getting over your compunctions about some greenhouse gases?
That and a few Hail Marys, yes.
Okay, thank you very much, Ms. LaRock.
Ms. Olson, do you have any recross? I allocated 5 minutes.
Madam Hearing Examiner, I apologize. Our system went down during your questioning and the bulk of Ms. Stevens' redirect, so I missed a large portion of it. But I just have one recross question. If I could just have just 1 second to kind of. Ms. LaRock, I understood from reading your testimony, correct me if I'm wrong, that you have multiple proposals, and one of them is using Rio Grande 6 until EPE acquires new renewable or resources. And that's a different proposal than the proposal Ms. Stevens was asking you about on redirect to replace or to use Rio Grande 6 until the resources that have already been approved come online. Is that correct? Those are two different proposals?
Yes, and I'm supportive of the one that I discussed with Ms. Stevens.
So you're no longer requesting as an alternative that EPE could use Rio Grande 6 until it was able to acquire new renewable resources, which is what your testimony states.
Objection.
Oh,
objection. The word new is something that doesn't exist already, and I think Ms. Olson is making assumptions about resources based on acquisition prior approvals and not on reality. So I would just like her to clarify what she means by new.
I think I did clarify that.
Yeah, overruled. Do you recall the question, Ms. LaRock? You're on mute, Ms. LaRock.
I believe I might have misinterpreted Ms. Olson's question to me, because my interpretation of new was the acquired Hecate 2 and Buena Vista 2 that were going to come online.
So the questioning that we went through on your cross-examination regarding the proposal to use Rio Grande 6, to the extent I interpreted your direct testimony as stating that EPE could use Rio Grande 6 until it was able to acquire new, meaning not previously approved, renewable energy, that's an incorrect interpretation of your testimony.
Yes, I'm afraid so. Because my proposal to use Rio Grande was just a bridge until the new the approved facilities, the approved renewable energy facilities came online. That's what I interpreted as new, not I did refer to things in the future that have not gone through process. I apologize for my misunderstanding.
And going back to Mr. Barachik's testimony on the shortfall in 2023, you understand that his LNR includes all resources that have been approved. Is that correct?
Yes.
Okay. And one other point of clarification on your proposal to temporarily use Rio Grande 6 does your proposal include the ability for EPE to bring RG6 back into rate base during that period in which it's being used?
It's based on that assumption, yes.
Okay. I have no further questions.
Thank you, Ms. LaRock. You're excused.
Thank you.
Let's take our lunch break now and come back at 12:45. And the next witness will be Mr. Reyes.
Hey, Anastasia, your video and mic are still on.
Okay.
David, are you ready?
Yes, Your Honor.
Okay. Before we begin with the next witness, Ms. Burns, I wanted to ask if you or one of your attorneys by Monday morning could get back to me and tell me the case number of in which the commission ordered rate 7 canceled to new customers.
Yes, we can do that by Monday.
Okay, thanks. I thought it was in the 2009 rate case, but I couldn't find anything there. Maybe I just didn't see it. Thanks.
Mr. Reyes, would you raise your right hand, please? You solemnly swear the testimony you're about to give in the matter now pending should be the truth, the whole truth, nothing but the truth?
Yes, I do.
Thank you.
Good afternoon, Mr. Reyes. Would you please give your full name for the record?
Edwin Reyes Jr.,
And by whom are you employed?
Enchantment Energy Consulting.
I'm sorry, the name again?
Enchantment Energy Consulting.
And did you prepare some direct testimony on behalf of the city of Las Cruces in this case?
Yes, ma'am.
There's a document in front of you, I hope, marked CLC Exhibit Number 2?
Yes, ma'am.
And is that the direct testimony that you prepared and the city pre-filed on October? Mine wasn't open right now. On October 6th, I believe it was, 2020?
October 9th. Yes.
October 9th. Thank you. Do you have any changes or corrections to make to your testimony as it was filed in October?
There are changes in that were outlined. On page 20, I'm sorry, page 10, document page 10, not PDF page 10. Line 15, instead of 7 a.m., it should read 6 a.m. And on line 17, it should read 6 a.m. instead of 7 a.m.
And Mr. Reyes, because issues have come up previously in this case about Mountain Daylight Time, Mountain Standard Time, can you clarify whether those are Mountain Daylight, Mountain Standard, or something else?
For the purposes of my testimony, the the time is Mountain Standard Time.
That helps, thank you. And do you have another change, I believe?
There was a change, then one final change on page 17 in line 21. After 800,000, it should have inserted in 2019 to read retain over 800,000 in 2019 for its own uses.
And just one further clarification, which you pointed out to me earlier. The numbers on the table of contents are no longer incorrect. Is that so?
That is correct. The
And-
pagination changed the numbers.
And Madam Hearing Examiner, we did not make that change in the uploaded version because we're trying to be consistent with the minimal changes requirement, but if it would be convenient to you, we can give you those numbers.
It's not necessary. Thank
I
you.
didn't think so. Thank you. Okay, so is the testimony that's before you with those two changes true and correct to the best of your knowledge? Mr.
Yes,
Reyes?
ma'am.
And would you give the same answers under oath today as you did in October?
Yes, ma'am.
With that, the City of Las Cruces moves to admit CLC Exhibit number 2.
Any objection? CLC Exhibit 2 is admitted.
Good afternoon, Mr. Reyes.
Good afternoon.
I'm Nancy Burns with El Paso Electric.
Hello, Ms. Burns.
Hello. Could you pull up what's been marked EPE Exhibit 75?
I'm sorry, did you, oh,
Mr. Lee, did you have a question?
no ma'am, thank you.
Okay, yes.
And is what's been marked EPE Exhibit 75 an accurate copy of your current resume or CV?
Yes.
Okay. And does that CV accurately summarize all of your professional work experience?
Most, yeah. I mean, it is a condensed version of a full CV, but yes.
Okay. And so if we turn to page 4 of what's been marked your direct testimony,
Okay.
there's a Q&A that starts on page 11, and there you summarize your professional experience, correct?
Yes.
And am I correct that the only significant difference in terms of listed experience between your current CV and your summarized professional experience was your work for Norman S. Wright Co. in Albuquerque?
Yes.
And do I understand that Norman S. Wright Co. is a HVAC manufacturer?
They're a manufacturer's representative in the HVAC industry. They support and represent, at the time, we represented 40 to 50 different manufacturers.
Okay, all right, that's what I understood. And at the time of your employment for them, you were a sales engineer, correct?
Yes, ma'am.
And after that, I believe you went to work for a public service company of New Mexico?
Yes, ma'am.
And you worked there for 14 years, about 14 years, correct?
Yes.
And the first 14 years, you were in a marketing function, electric marketing as a senior technical accounts manager, correct?
Yes, ma'am.
And you covered healthcare, government, and communication accounts at that time?
Yes,
And then you moved to what you've identified as wholesale power marketing, correct?
yes,
And did you worked in that capacity for also for 7 years for Public Service Company of New Mexico? Is that right?
correct.
Okay. And during that time, you say you were a senior originator. Do you see that
Yes.
on line 15?
Yes,
Okay. And I understand that in the context of the wholesale power markets, that an origination or an originator basically handles non-standard wholesale transactions. Is that correct?
yeah, it's in the common vernacular, we were the hunters.
You were the hunters. So you did not deal with standard transactions, trading transactions, correct, at that time?
I did. I mean, we did everything. We did, we were a small shop. We only had at the time about 37 people in our group. So you pretty much did everything. I did not work on the real-time desk. And I didn't do pre-schedule or day ahead transactions on the desk, but those transactions were required for hedging and completion of other larger transactions that I was leading.
That you were responsible. And that was my next question. You weren't a daytime trader, correct?
Correct.
Okay. And you didn't supervise the daytime trading function at P&M, did you?
No,
No. Okay. And during your time with P&M, you never worked in electric power generation. Isn't that correct?
no, I didn't work in generation.
Okay. And you didn't work.
We did have the generation desk in the wholesale group at the time. So all the generation dispatch was being done on the wholesale marketing trading floor, and those dispatch of those units was being done by one of the desks on our real-time floor.
Right. But you didn't work in that function, correct?
Yeah, no, I didn't
No.
work in that function.
Yeah. And you also didn't work in electric systems operations. Is that correct?
No, I didn't work in operations.
And you didn't work in system planning, did you?
I did support for system planning as part of my job in the first 7 years.
Okay.
Because I had some of the largest customers that were on the part of the system. So I had 70 of the largest customers that were on our system. So anytime that there were issues around the system that we were looking to either fix constraints or there were expansions for a particular customer, then I was involved to the extent that we needed to plan for those expansions.
Right. And your primary job responsibilities had to do with the relationship with those large customers that you're describing, correct?
Correct. Managing the complete relationship.
With the customers themselves, right?
Yes.
Yeah. And you never actually did utility planning, correct? You weren't a utility planner.
I was not a utility planner. No.
Right. Okay. And you're not offering any expert testimony today in electric power generation. Isn't that correct?
I'm a registered professional engineer, but that's not what I'm offering today. No.
Yeah. Okay. And you're not offering expert testimony in electric system operations, correct?
No.
Okay. Or electric system planning. That's not within the scope of your testimony today, correct?
It's not within the scope of my testimony, but I do that work as with advising my clients.
Okay. From the perspective of primarily managing relationships with large customers for your clients, correct?
No, system planning for my clients.
Okay. All right. Thank you. And you have testified at page 13, beginning at line 5, excuse me, that PV3 capacity is not needed to serve New Mexico customers. Do you see that testimony?
Yes,
And is that testimony based on the analysis that was provided by Lisa LaRocque in her direct testimony?
no,
It's not?
no.
Okay. Can you point to anywhere in your testimony where you have provided an analysis to support that conclusion of capacity need?
I'm working off of the load and resource table that was provided by Mr. Barachek in his supplemental testimony. It was Exhibit STB 1S.
Okay, but you don't reference that here in this part of your testimony, correct?
No,
Okay, all right. So if we go to, and I'm gonna jump around your testimony a little bit here. If we go to the very end of your testimony on page 18. Am I correct that you're recommending that El Paso Electric establish a bonus pool to better align EP's trading interests with those of its New Mexico customers?
no, I'm stating that it was customary that margins from trading on the whole in the wholesale groups was used to fund a bonus pool because the standard in the industry had pay scales, and their comparability scales were significantly higher than almost all of the salary scales in New Mexico for all three of the utilities. And in order to make an incentive for the traders and to be able to incentivize and recruit traders, an incentive pool was developed, and a compensation plan with that bonus pool was part of the compensation. So I'm just simply stating that the fact that there is money there for them to be able to create an incentive. Is $800,000 enough for an incentive for a corporation the size of EPE? Probably not, but it's a fair amount of money to split among a trading group to incentivize them to go out and make profitable transactions from their idle resources.
Okay, so you're not recommending the establishment of a trading pool, correct?
Correct.
But in your opinion, a trading pool would align the interests of EPE's trading organization and New Mexico customers. It would incentivize EPE's traders, correct?
If they do or if they don't, an incentive pool would incentivize them to make profitable trades.
Right, and you think that would be beneficial for New Mexico customers? Is that your opinion?
I didn't state that it would be beneficial or not.
But is it your opinion that it's an industry standard to create those types of incentives?
It is an industry standard to have an incentive pool for those particular employees in order to recruit and incentivize the appropriate behavior.
Of the traders themselves, correct?
Of the traders themselves, yes.
Okay, and in your testimony here, you're talking about a self-funded trading pool, correct?
Correct.
And by self-funded, you mean that the funds for the pool would be generated by the margins from the trades themselves, right?
Correct.
And if the city's recommendation that the customers retain 100% of the margins from the trading is adopted, then the bonus pool could not be funded from those margins, correct?
That's correct.
Okay, all right. Now I am going to turn to page 6. And I'm at line, well, it's really lines 16 through 19. And do you see where you refer on page 8, on lines 18 to 19 to the direct testimony of Adrian Hernandez, exhibit AH6, page 1?
Yes.
Okay. And you're aware that Mr. Hernandez revised that exhibit, are you not?
Yes, I believe he changed the price I would have to go and look exactly. I believe it's in his third supplemental EPE's 59, change it to 4850.
That's correct.
Yes,
Okay, and there was also a change in the capacity component.
correct. That was the majority of the change.
And are you aware that those changes have now been incorporated into his corrected direct testimony?
Yes, I am.
Okay, and so then you would agree with me that all of your numbers that you're citing here in your testimony have been slightly revised, correct?
Yeah, they would have to be revised, yes.
Okay, so every time you say 5347, it should be replaced with 4850, correct?
Correct.
Okay, and every time we talk about a capacity charge, like for example, on page 9, line 14, capacity charge of 3148, that should be changed to 2802, correct?
That's correct.
Okay, I just wanted to make that clarification for the record. Thank you. So if I go to your recommendation on PV3 proxy pricing, it's on page 3 where you're summarizing your recommendations. It actually goes from line 2 to 3.
Okay.
And your recommendation is that the correct proxy pricing for Palo Verde Unit 3 should be Palo Verde on-peak and off-peak firm energy power as reported by the Intercontinental Exchange, correct?
That's correct.
And that's also referred to as ICE.
That is correct.
Okay. And your specific recommendation, it should be the weighted average price, the weighted average ICE pricing, correct?
That's correct.
Okay. And you would agree with me, would you not, that pricing varies?
That is correct.
And it can fluctuate on a daily basis?
Yeah, it can fluctuate on an hourly basis.
On an hourly basis. And are you aware of the WEC, that's capital WECC, all caps, the WEC soft price cap?
Yes.
And do you know what that amount is?
I recall I think it was 1,500. I mean, I think they got to 1,400 this last summer.
Okay, and the trading, excuse me. The trading was actually above the WEC soft cap this summer, correct?
Yeah.
And under your proposal, those prices would be passed on to New Mexico customers if Palo Verde was used to serve, needed and used to serve New Mexico customer load, correct?
That's correct.
Okay. And in fact, your price, and you do a calculation for 2019 of the ICE price. Let me see if I can find it here. It's on page 9, line 21.
Okay.
For 2019, that price, the comparable average market price for Palo Verde 3 would have been $31.15 per megawatt hour, correct?
That's correct.
And the actual price that was paid by New Mexico customers during that time period, 2019, at the current proxy rate, you've calculated that on line 10 on page 8, is $24.83, correct?
That's correct.
So for that time period, the market pricing was higher than the commission approved pricing, correct?
That is correct. It was higher than the existing proxy price, which was based on a transaction that was done back in 2010 with Credit Suisse that was based on a capacity price, a heat rate, and the Permian natural gas with a small adder for $3.50 adder for variable energy charge, which is basically maintenance. And when that price was actually put in place, gas was at about $4 to $5 and going up to $6 and $7 an MMBTU. So
I'm
my
sorry.
understanding, it is my understanding that that's why you want to come in and make a change to the price, because gas prices are low, and so you're not getting enough recovery. That's all I'm highlighting there.
Yeah, and I appreciate that. Mr. Lee, did you get what you needed?
No, I didn't. What was the name of the BTU?
Oh, MMBTU, capital M, capital M, capital M, capital B, small t, small u.
Thank you.
And so, Mr. Reyes, you agree that at you just outlined for us the components of the current PV3 proxy price, correct?
Correct.
The Credit Suisse proxy price, and you do acknowledge that price, since the date it has been used, has been approved by the commission, correct?
That price last was approved back in, it was approved through like 2016 via, the last rate was 13. Let me tell you, it was 13,00380 final order which was a fuel and purchase power cost adjustment clause case when it was continued and the pricing was allowed to continue.
Right, and the pricing was again allowed to continue in the commission's 2018 fuel and purchase power cost adjustment clause case. Isn't that correct?
Objection. This calls for legal conclusion.
What? Oh, Carolyn, you're on mute.
Overruled. Just Mr. Reyes, just state whether you know that. If that's
that particular item was not allowed to be adjudicated in that case.
And in fact, you did submit some testimony in that case, isn't it correct?
Yes.
And that your testimony in that case, your recommended proxy price, as your filed testimony, was the same proxy price you're proposing in this case, correct?
Correct.
But as you testified in that case, the proxy price was not allowed to be adjudicated, and the commission requested that it be adjudicated in this case, correct?
That's correct.
Okay, and I believe that you previously testified when we were just talking that it was your opinion that due to a downward pressure in recent gas pricing, EPE has not been fully recovering costs for Palo Verde 3, and that's why it has requested a higher proxy price in this case. Is that correct?
That's according to both Mr. Barachik's, Mr. Hernandez, and Mr. Sheastel's testimony, yes.
Right, but you don't dispute that in your testimony, do you?
Based on the request here to implement cost-based proxy pricing at $48.50, then I won't dispute that at 31 or 28 or $30 a megawatt hour, they are not in fact collecting full cost recovery for that unit, correct?
Okay, thank you for that. And under your proxy price proposal that we were talking about at page 3, the proposed ICE pricing, you do agree that that is a price for energy only, correct?
It's a price for firm energy.
That's right. And that price excludes a capacity component, correct?
That price includes contingency reserves.
But the price itself excludes a capacity component, isn't that correct?
That's not correct. It's firm power with contingency reserves.
Okay, and it's an energy only price, correct? For firm power.
You shouldn't have to pay a capacity price for energy that's being delivered right now.
Okay, and so under the city's proposal, the ratepayers should not be paying a capacity component for Palo Verde 3, is that correct?
That's correct.
And that's based on your conclusion that the capacity is not needed.
It's based on my conclusion that Palo Verde was decertified and removed from base rates back in case 2722. And the New Mexico ratepayers are no longer required to support a cost-based recovery from that unit. To the extent that that El Paso needs to use that unit to support the system, then they should probably figure out a way to get it included in their rates again.
And that's your second recommendation, correct?
That's correct.
Okay, and so you don't know whether or not EPE needs that unit to serve New Mexico customers. Is that what you just testified to?
Based on, again, Mr. Barachik's supplemental testimony, the load and resource table, there is a 15% reserve margin built in. And the fact that that unit, which is not a New Mexico base rates, can be used for any part of the system, so they can just move it to Texas. The idea that, and the whole concept that they've explained is what I'll call the slice of system concept, that they have a full portfolio of resources and New Mexico is just getting a full slice of the system. So all they really need to do is re-slice the system, take those 40 megs of PV out and add 40 megs of some other resource to cover that.
Okay, so you would agree that there would be some other resource that would need to cover that resource if it was not used to serve New Mexico?
In the case that the commission decides that a 15% reserve margin is appropriate, there are a lot of different metrics being used now, and a 10% loss of load calculation is one of them. And there's a lot of different numbers out there. And whether you're in an organized market or you're in a vertical regulated market, they're using different metrics for what the reserve margin of capacity should be.
But you're not testifying as to what EP's reserve margin should be, are you?
No, I'm simply saying that they've got a 15% reserve margin, so just slice the system a different way and give us a different resource if that's what they feel is necessary.
Yeah, and I have a question for you about that. Just use a different resource. Is the city also suggesting through your testimony that that Palo Verde Unit 3 energy and capacity should just be replaced by market power?
I'm suggesting that if they would prefer if they want to use Palo Verde, then Palo Verde should be priced at the market because that's the equivalent market price. I'm not suggesting that they don't use it or use it. I'm simply suggesting that the question in this case is whether or not the proxy price is appropriate. That's the first question on the table. And I don't believe that the proxy price wasn't appropriate before. The market price is probably more appropriate because it's an equivalent product. And I think it is an equivalent product based on the fact that in 2017 through 2019, El Paso was selling 50 megawatts and 50 megawatts in 2017, 75 megawatts in 2018 and 19 at Palo Verde around the clock at the Palo Verde index. So if that price is appropriate for anyone else at Palo Verde, not sure why that price can't be appropriate for a New Mexico customer.
But Mr. Reyes, you would agree with me that ICE power is curtailable, correct?
Which definition do you want to use?
Well,
You can use WSPP, Service Schedule C, or do you want to use EEI Firm LD?
let's use Service Schedule C, the Service Schedule C definition.
Yeah, force majeure, correct.
It is, correct?
Force majeure is the only way to interrupt.
So it is curtailable under those conditions, correct?
Correct.
Okay. And so is it your testimony, I mean, you would agree with me, would you not, that the market power that comes through the ICE exchange, that's a mix of different types of power, primarily conventional generation?
Depends on the hour.
Okay. But in general?
No, generally, no. I'm saying it does depend on the hour. The available energy that's been on the market over the last few years has changed. The on-peak hours are predominantly now, they're much more, there's much more generation coming from renewables. So I don't know. I'm not agreeing that the power is all conventional generation.
And that wasn't my question, that it was all conventional generation, but you would agree with me that there is no guarantee that the power through the market would be non-carbon. Isn't that correct?
You could make it non-carbon if you made the transaction with the appropriate counterparty and stipulated to the specific source. And in fact, at delivery, the generator has to what they call tag the energy from the generator all the way to the load center. And in that case, you know exactly where that energy came from.
That wouldn't be daily pricing, would it? That would be an actual power contract, purchase contract, correct?
Well, again, the transaction that El Paso did was a large wholesale, long-term wholesale, and I'll call it long-term because it was a year long, or 2 years in the case of the 75 megawatts in 18 and 19, and it was priced at the index, and it was it was firm power for that period. So I'm not sure I'm understanding what your question is.
Sorry about that. I put myself on mute as you were talking. I apologize. So, yeah, no, my question had to do with your testimony that EPE could enter into a contract for non-carbon power, market power. Do you recall that testimony?
Yes, I do.
Okay, and my question simply was, my question simply went to the character of that contract and whether or not that pricing would actually reflect the ICE pricing that you're recommending here.
If El Paso wanted to replace the 40 megawatts of Palo Verde 3 with market purchases, they could stipulate in the transaction that they were asking for a specific amount of renewable generation, and that would be required under the contract terms. Right. So what I'm saying is, and that transaction can be priced at the Palo Verde index.
Right. And would you agree with me that currently there is a premium for clean energy in the market?
I've been participating in several different developments, and in the case in particular of two of P&M's new resources that are being built on a project that I helped develop, those were at under $20 and right around $21. So I guess I don't agree that renewable energy is coming at a premium.
Okay.
And in fact, in certain hours in both May 18 and 19 and 20, there has been significant congestion and oversupply of renewable energy into the market in certain hours. And the prices went negative in Las Vegas, where there was too much solar and wind in the Southern California market, and it was producing negative prices in the Vegas market to the tune of minus 56 and as high as $156 a megawatt hour for a few hours. So I'm not sure. I mean, there may be a premium to firm some solar and wind up, but there's not a particular premium in the market for renewable generation right now.
Right, but you have testified that there may be a premium to firm solar or renewable generation in the market, correct?
There will be a cost to firm that energy over time.
Right, and Palo Verde 3 generation, that is firm baseload capacity, correct?
Yeah, but it can't be used to firm other loads because it's what you call a base load non-dispatchable generation. So you get what you get and when you get it, and it's not like they can sit down and throttle that back. So it's a completely different type of a resource.
Right, and I appreciate that. It's base load, it's firm, and it's non-carbon, right? You'd agree with me on that?
It is a non-carbon resource, yes.
Yeah, okay. Now, if we talk about, I'm going to go back to your off-system sales recommendation to eliminate margin sharing. And you would agree with me, would you not, that arbitrage transactions and their respective margin opportunities are not based on EPE using generation resources that New Mexico customers pay for? Isn't that correct?
They're not supposed to be. That's correct.
That's correct, because they're third-party transactions, correct?
Well, because they're transactions where the supply, the purchase and the sale are of the same resource. It's just flipping a transaction back into the market.
Right, which is not an EPE generation resource, correct?
It may or may not be, but to the extent that they are in fact just flipping the transaction around and making the trades, then it is not based on EPE resources, correct?
Correct, yeah. And so you would agree with me that those transactions have no impact on fuel-related costs passed to New Mexico customers?
They should not, correct.
Correct. And but New Mexico customers do get fuel credits for positive margins derived from those arbitrage transactions, correct?
Yeah, sure. They are part of the margin sharing agreement.
Right. Let me just go through my notes here for a minute. Mr. Reyes, I have no further questions.
Thank you.
Mr. Herman.
Thank you. Mr. Reyes, my name is Keith Herman. I'm with Doña Ana County. I had a couple questions for you regarding your proposal on the CCN filing. Were you present for my cross-examination of either Mr. Schiestel or Mr. Barachik?
For most of them.
If you recall, I asked Mr. Schiestel about his review of this proposal, and he indicated he wasn't certain a CCN filing would have a guaranteed likelihood of success.
I do
You recall that?
Yes, I do.
I guess my question to you is whether or not you determined that a CCN would have a high likelihood of success and why not, or why?
Well, under the under an IRP and subsequent recommendations for capacity additions, you would assume that those resources would be part of what we'll call a least cost energy portfolio. And to the extent that that energy is going to be priced at $48.50, then it doesn't currently look like it would be a low enough cost to be part of a least cost portfolio.
So you don't think at that proposed price it would meet that standard?
I don't, yeah, I mean, there would have to be some additional, I mean, they would have to run the models and do their, I know that they've talked in other testimony about the security constrained economic dispatch, and to the extent that when they're running the models for that security constrained economic dispatch, if the unit would actually fit into that dispatch profile. Right now, it looks unlikely that on a fully loaded cost basis that it would have a hard time fitting into the profile. On a sheer energy basis, if you exclude the capacity costs or any of the overall O&M or allocation or for having to take it down. I'm losing the word right now. But if you exclude some of those costs, yes, it would dispatch first because it's a very low cost energy resource. But on a full cost basis, it's not going to be probably part of that lowest cost dispatch and lowest cost portfolio.
Thank you. That's all I had.
Mr. Bagatko.
Thank you, Madam Hearing Examiner. Good afternoon, Mr. Reyes.
Good afternoon.
Directing your attention back to your direct testimony, which is marked as CLC Exhibit 2, I'd like to talk about something that you say on page 13. Specifically, on page 13,
yes.
I'm in lines 5 through 10, which opens with the question, is PV3 capacity needed to serve New Mexico customers? And there on line 7, you begin your answer with a simple no, period. Is that still your position?
That is still my position.
And that's the position of the city as well, since you're speaking for them, I take it?
That is their position.
Okay, and given that the position is that capacity is not needed, is it fair to say that in no uncertain terms that if EPE applied for a CCN for PV3, that the city would be in opposition?
No, I don't know that I can say specifically that if they applied for a CCN, that the city would be in opposition. I'm simply saying that to the extent that it is not, that it doesn't rise to the level of being included in a least cost portfolio, then they probably would not support inclusion of a CCN, of that unit in a CCN filing.
Mr. Reyes, is need not also a consideration in CCN proceedings?
I'm sorry, say that, could you ask that again?
Rephrase that. Is the subject of need also a requirement in a CCN proceeding?
It's a component of the decision-making process, yes.
Do you see down there on lines 8 through 10, still on page 13 of your direct testimony, where you say, quote, EPE has a fleet of local natural gas fuel generation that can supply competitive, reliable energy to New Mexico customers, period. Did I recite that correctly?
Yes.
So can I then take your meaning there in your answer on lines 7 through 10 of page 13 that there is absolutely no need then in your summation of your position for PV3 capacity?
That is my position.
Approaching it from another angle, if EPE discontinues use of PV3 in support of New Mexico customers and does not seek to include it in rate base through a CCN proceeding, if EPE then would apply for some sort of replacement resources, based on what I see there on lines 7 through 10, can I take it that you and the city would be in opposition to an application for replacement resources, and that under that scenario?
Muted. Objection. Mr. Bogatko is asking Mr. Reyes to speculate on future positions taken by the city. Not only is it speculation, but Mr. Reyes is a consultant employed for limited purposes in this case, and he is not authorized to speak for future positions of the city that have not been reached yet.
Mr. Bogatko, do you want to respond?
Madam Hearing Examiner, I would only say that I'm not expecting that Mr. Reyes would bind the city in connection with any future proceedings, but since Mr. Reyes does say that basically EPE already has what it needs to provide safe and reliable service, that I would at least expect that he could comment on what his position under this scenario, under these limited circumstances would be, given what he says on lines 8 through 10 of his direct testimony.
And I'll answer under that. In my opinion, if El Paso, if PV3 was removed from the resource mix serving New Mexico, and then they would likely in some hours need to replace that energy with another resource. I believe that currently through, I believe it's 2022, they have adequate resources, or even 2023, if I look at the LNR table. They have adequate resources to serve all of their customers. And at that point in time, they do have new resources that are slated to start to hit the system and provide additional capacity.
Thank you, Mr. Reyes. And with that, I think I only have one more brief line of questioning for you. I would direct your attention now to page 14 of your direct testimony.
Mm-hmm.
Specifically, I'm interested in what is said there on lines 5 through 11. Gotten to the appropriate page yet, Mr. Reyes?
Yes.
There on line 5, the question is as follows. Is PV3 a viable option as a rate-based resource in EPE's New Mexico resource portfolio? And your answer to that, starting on line 7, is no. You go on to say, under the orders and stipulations in NMPRC case number 2722 and case number 09-00171-UT, EPE agreed that it would not ask this commission to include PV3 in New Mexico jurisdictional rates or for permission for cost recovery. Did I recite that correctly, Mr. Reyes?
Yes.
Okay. When you say that, basically they're on line 7 through 9, are you saying that EPE is going against what it agreed to in those orders and stipulations in the aforementioned rate case, or excuse me, the aforementioned case proceedings?
In my opinion, that's exactly what they're doing. In asking for a full cost recovery based proxy price that is not in fact a market-based price, when specifically those two cases stated, and I'll go to the 2722 stipulation, EPE in its discretion may use Palo Verde Unit 3 to provide capacity and energy needed to serve EPE's New Mexico customers, including reserve margins as provided in paragraph 7, to the extent Palo Verde Unit 3 is so used, such firm energy capacity be valued at market price, the lowest equivalent firm capacity and related energy available to EPE. So it seems clear to me that the commission had decided that if they were going to use it, that it would come at a market-based price. And to the extent that it had already been excluded from their cost of service and rate base, that if they wanted to bring it back in, then they would need to file a CCN, and that was the basis for my recommendation.
All right. Now I'll run the risk of eliciting another objection from your counsel. We'll give her a heads up here. But are you,
Mr. Bagaka?
Mr. Bagako, you're fading in and out.
Well, let me see if I can fix that here. How's that?
Better.
I don't know what I did to fix it. I think it's just my wavering internet. Back to my question, Mr. Reyes, then, based on what we see on lines 7 through 9 of your direct testimony there on page 14, I referenced to those two cases and the orders and stipulations you mentioned in connection with those cases. Are you saying that EPE's request for proxy pricing in connection with PV3 in this case is essentially a legal non-starter?
I'm not an attorney, so I'm just going to say the way that I interpret the final order and stipulation in those cases was that the proxy price for using PV3 as a resource to serve New Mexico customers would be a market-based proxy price and not a cost-based proxy price.
Fair enough. I won't push it any further. I thank you very much for your testimony today, Mr. Reyes, and your time. And Mr. Lee, is there anything I need to clarify or clear up for you?
No, sir.
All right.
Thank you. Thank you.
In connection, Madam Hearing Examiner, I pass the witness. Thank you.
Mr. Reyes, I have a few questions for you that are follow-up to Ms. Burns' cross-examination. I may ask a question of you about Mr. Bratchick's L&R table. So could you bring that up? And I'm going to step to the other room real quick to get that.
Okay.
So let me know when you have that.
I have it.
Okay. So my first questions aren't going to be about that. My first question is, the term firm energy has been used a lot. And I'm going to refer to two statements you made during Ms. Burns' cross-examination of you and ask what the term firm energy means in the context of those responses you gave. You said that the price for a purchase at the Palo Verde hub is for firm energy. Am I right? You said that?
What I'm suggesting is that they would use the price for firm energy. There is what they would call non-firm. It's basically hourly energy that can be recalled at any time. But firm energy is what I was suggesting, correct?
And so in that context, what does firm mean when you say firm energy?
So firm energy is, it's part of, it's a different types of contracts. The WSPP contract essentially states that firm energy is not recallable, except in the case of force majeure. And the firm energy has to be transmitted from the source to the sink, so that from the source to the load over firm transmission rights. So that's one of the other pieces that makes it firm energy. In addition, you have to be able to show that there's contingency reserves behind the energy. So there are other resources that are capable of replacing it in the short term, in the case where there was some type of a forced outage or other reason that the energy went away. And so that's a broad way to describe firm energy. I mean, if you want the EEI, which is the Edison Electric Institute, their master agreement defines firm energy as firm LD, and means with respect to a transaction that either party shall be relieved of its obligations to sell and deliver or purchase and receive without liability only to the extent that and for the period during which such performance is prevented by force majeure. In the absence of force majeure, the party to which performance is owed shall be entitled to receive from the party which failed to deliver or receive an amount determined pursuant to Article 4. And Article 4 relates to how you calculate the LDs, liquidated damages, I'm sorry.
Okay. And then in response to a question from Ms. Burns, you said there is a premium or cost to firm solar or renewable generation. In that context, how do you firm solar or renewable generation?
So in order to firm solar and let's call it wind, either one, another more conventional generator or battery needs to be online and effectively supplying or either increasing or reducing the amount of generation it's providing in concert with the renewable output. So if you have let's say just for a number, you have a 50 megawatt solar facility, and a particular party was making a 50 megawatt sale, and they were intending to use that facility as part of the supply for that sale, then in the early morning hours, they would need to supply some other conventional or battery energy from a conventional generation source or a battery to make up the 50 megawatts. And then as the sun came up and the solar facility starts to ramp to its full capacity, then that generator or battery can back off while it's generating at its full capacity. then the same generator, as the sun starts to go down, would begin to ramp back up to provide the energy in the meantime. And then during the day, during any given time, there would be resources that are on that would have to ramp up and down in the case that you had a cloud that comes over the solar facility, for example, and it would have to ramp up to make up the difference. And that would be for a firm 50 megawatt sale. That's what you'd have to do to be able to firm up the renewable resource.
So let's see. Would you turn to your direct testimony at page 8?
Okay.
You're talking at lines 3 through 10 about the current authorized proxy price. And at lines 5 and 6, you talk about a capacity price. And then in the following lines, you talk about an energy price. And this is in connection with Ms. Burns' question to you of whether your proposal, well, her question about whether the price based on the ICE index includes capacity. And so my question is, when you pay for capacity, what are you paying for? And when you pay for energy, what are you paying for? So if you could address both of those.
So when you're paying for capacity, you're paying for the potential to generate, and having the rights to that potential to generate. Which I might add that I believe Ms. Souls had asked a question in her testimony addressing the fact that the proxy price and the capacity charge is being charged every month for that capacity, even when that particular unit is unavailable due to refueling or a forced outage or something. So they're paying for it even when it's not there, which in those cases you would think that maybe there would be some type of a discount for those months. But at any rate, I'm diverge a bit. But the capacity, that's all you're buying with capacity is the ability to call on that resource. When you're buying firm energy, you're buying the energy from a particular resource at a particular time, and that resource is all in that, and that energy is being backed up by additional reserves that are being supplied into the market through the contingency reserves. I believe Mr. Barachik talked about the Southwest Reserve Sharing Group, SRSG, which is the group that most of the utilities belong to, and so they can share the potential of a forced outage, and then the SRSG group will provide for that first hour the energy to make up for the forced outage, and all of the members provide a small portion of additional capacity online, their contingency reserves, both spinning and supplemental reserves, to be able to affect that substitute when a unit does in fact trip offline.
So I'm going to paraphrase what you said and tell me if what I'm saying is correct. That when you pay for capacity, you are paying for a guarantee that the energy will be available. Is that correct?
You are paying for that's what you're paying for. They are committing that they are going to be able to generate energy for you, correct?
Okay. And you said in response to her question that, and correct me if I'm wrong, I think you said the price does include capacity because it includes contingency reserves. Is that what you said?
Yeah, yes, that's it. The firm energy, because it has contingency reserves, is firm. That's the concept of firm energy. The concept of capacity, and I'll just diverge for a second to the ERCOT market. ERCOT doesn't have a capacity market. ERCOT is an energy only market. So there is no price for capacity in ERCOT. What they do is they do a Dutch auction in every 5-minute period through their security constrained economic dispatch, and it produces a price. And if it incentivizes a generator to want to be available and come in and provide energy, then it does. That's really what these markets are. But these guys, the market itself is people pledging their resource to be available during the time when you're asking for that firm energy. So if I make a deal today for the rest of the year and I want to buy 50 megawatts and I buy it from somebody, they're pledging that unit, they're pledging a unit to me for that 50 megawatts for the balance of this year. So that includes the capacity. That is them making a capacity commitment to me to serve me with 50 megawatts of firm energy for all hours for the balance of the year. There's a slight difference. Sorry?
Can you spell ERCOT?
ERCOT. It's the Electric Reliability Council of Texas.
And so what are contingency reserves, and why did you say that because the price includes contingency reserves, it includes capacity?
So the contingency reserves are, it's the percentage of another resource or another or more potential to generate that the generator has to have, or the marketer has to have available to them for the entire time that they're providing this firm energy service. There's this spinning and supplemental reserves. The balancing authorities typically will provide some of the reserves to the load side, and the generators provide them for the source. And that's what those reserves are. It's a generator that is spinning with no load on it, and the ability to ramp up, so that in the case where there is a forced outage, a unit goes down, there are other assets on the system that are not running at their full capacity that can automatically spin, which is why they call it the spinning reserve. They can spin up and take on the load that needs to be served from that unit that just fell off the system. Supplemental reserves is a similar product. It's just that the time to call a supplemental reserves is longer than the time to call spinning reserve. Spinning reserve is activated immediately.
Okay, and now could you turn to the LNR table?
Okay.
And do you see line 2.5 that says market resource purchase?
Yes.
And then do you see it has, got to get out my magnifying glass here. Do you see there's a footnote 10 to that?
Yes.
And could you read footnote 10 if you can?
It says denotes market purchase, either spot market or short-term purchase power. Amounts greater than 645 megawatts PV output will need to come into EPE via exchange, in parentheses, Freeport, through the acquisition of additional transmission or on a non-firm path, period. Also, availability of such power is not guaranteed.
Okay. And on this LNR table, does EPE count market resource purchases as capacity to meet its peak demand and planning reserve requirement?
It appears they do.
Thank you. That's all the questions I have.
Did you say peace demand, like P-I-E-C-E?
Peak, P-E-A-K.
Thank you.
Okay. Ms. Stevens, you have 5 minutes for any redirect.
Okay, I have just a few questions. And Mr. Reyes, at risk of making things worse, not better here, just before the hearing examiner asked you about the loads and resources table, she asked you about the nature of contingency reserves. And at one point she said, when you were giving your example, you said, if I wanted to buy 50 megawatts for the rest of the year, they are pledging the unit for the rest of the year with contingency reserves. And I just wanted you to clarify, is there a distinction between, are you making a distinction here between what used to be called, or maybe still is called, a unit contingent sale and something else? I mean, are we talking about the old-fashioned notion of a sale from a specific unit, or are you talking about a market sale backed up by these reserves?
So that's a good question. So the WSPP Service Schedule C is for firm energy. At the time that it's being delivered, it has to be what they call tagged from the source to the sink, to the load. And they need to have additional reserves online to be able to substitute if that unit was to fail. In the case of unit contingent energy, which is a separate product, it's Service Schedule B, unless they change the definitions. Service Schedule B is unit contingent, in which the seller is pledging a particular unit to serve, and contingent on that unit being available to serve. So if I bought 50 megawatts of unit contingent energy, then as long as that unit is available and running, available to run, I will get my 50 megawatts. But if there was a forced outage on that unit, then they would have the ability to cut my sale.
So going back to the firm sales under Service Schedule C, in what way would, if any, would a firm energy sale differ from the company-owned generation resource in terms of reliability?
There's not a whole lot of difference. It's just that it's El Paso is going to have at any given time a cross section of their resources that are going to be generating and providing service. So to the extent that one of those goes down, then they supply it from another resource. And in the market, the same thing occurs when you're buying firm energy. If something were to happen, then the person who's selling it to you needs to supply it from another source.
Thank you. I think that's the only question I have. Thank you, Mr. Reyes.
Okay, Ms. Burns, Mr. Bagatko, and Mr. Herman, would you raise your hand if you have recross? Okay. Oh, Ms. Burns, then you have 5 minutes.
Mr. Reyes, it's not your testimony, is it, that ICE energy that can be purchased on the market from EPE is equivalent to baseload nuclear generation by Palo Verde 3? That's not your testimony, is it?
I'm saying that if I purchase 40 megawatts of firm energy in the market at Palo Verde ICE index, I'm going to get 40 megawatts around the clock of energy priced at the index. If I asked for PV3 specifically, then I guess I'm only going to get the 40 megawatts from PV3 when PV3 is running.
Yeah, but I was wanting to clarify that it's not your testimony that market power is equivalent to base load nuclear generation. That's not your testimony, is it?
Why isn't it?
I'm asking you.
That is my test. That is, the energy that you're buying off the market that is firm energy is no less firm than a base load generator.
So your testimony is that market purchases made by EPE over the market are equivalent to Palo Verde 3 nuclear generation power?
Not only am I, but in the load and resources table, it appears that El Paso has put them on equal footing with all of the other resources that they have in their planning horizon.
So I have a question for you about the LNR table. Do you understand that Palo Verde 3 generation is included in EPE's load and resource table, correct?
That's correct.
Okay. And what you're basically testifying to today is that market purchases in EPE's LNR table are equal footing with all of EPE's other conventional and nuclear generation. Is that your testimony?
I'm saying that they are on equal footing with any individual resource that's on that table.
And the market purchases can provide voltage support for EPE?
That wasn't the question you asked me.
Well, I'm not talking about pricing. I'm talking about the product itself. I'm not talking about, and so my question is it your testimony that market purchases are on equal footing with EP's other generation resources?
I'm saying that the market purchases are on equal footing to PV3 because PV3 doesn't provide voltage support either. And that's the reason that they typically have to run local resources at most hours to be able to facilitate voltage support.
Yeah, but I had understood you to say that because PV3 is included in EP's LNR table and market purchasing is included, purchases are included in EP's LNR table, that they're equivalent resources. That's what I understood you to be saying.
They're not discounted in the math on the LNR table. And so I'm saying that the yes is a capacity resource in their planning, in their planning reserve. According to the LNR table, they are providing equivalent capacity to any of the other resources that are on the resource table.
So it's your testimony that energy market purchases provide equivalent capacity to EPE's own generation resources?
Ask that question again.
Yeah, is it your testimony that energy purchases on the market energy power provides equivalent capacity to EPE's own generation resources?
If they're doing transactions with good counterparties, which I'm assuming they do, then there's no reason to assume that those counterparties wouldn't live up to their obligations.
Yeah.
Okay, that's the end of the time.
Okay, thank you.
Let's take a quick break till 2:15, and then we'll begin with Mr. Provencio. So if you could have him request to have me connected to Zoom, please.
Thank you.
Oh, I'm sorry. Thank you, Mr. Reyes.
No,
You're
thank you.
you're excused.
Thank you. Thank you, Madam Hearing Examiner.
So it's 2:15. We'll probably be done. I don't have, I have a lot of questions. I don't think I can ask them.
David, are you ready?
Yes, Your Honor.
Let's go back on the record. Ms. Stevens, you may call your next witness.
The city calls Jose F. Provencio.
Hello? Am I coming through?
Provencio, would you raise your right hand, please? You solemnly swear the testimony you're about to give in the matter now pending should be the truth, the whole truth, and nothing but the truth?
Yes, I do.
David, are you ready?
Yes, Your Honor.
Let's go back on the record. Ms. Stevens,
Okay.
call your next witness. Somebody has YouTube on. If you have YouTube on, could you please turn it off?
Probably you, Joe.
Am I coming through?
Raise your right hand, please.
Okay. Am I still on?
Yes,
Okay. I'm sorry for that.
no problem.
So, good afternoon, Mr. Provencio. Would you please state your full name for the record?
Yes, that's Jose Provencio.
And how are you employed?
I'm employed by the City of Las Cruces Utilities Department, Deputy Director of Business Services.
And did you have the opportunity to participate in and supervise the preparation of a piece of testimony that is sitting in front of you that is marked CLC Exhibit 3?
Yes,
And was that prepared under your direct supervision or by yourself?
yes, it was.
Do you have any changes or corrections to make to this testimony?
I do not.
If I were to ask you the same questions today under oath, would your answers be the same?
Yes, they would.
And are those answers true and correct to the best of your knowledge?
Yes, they are.
With that, the city moves to admit the CLC Exhibit 3, the direct testimony of Jose F. Provencio.
Is there any objection? CLC Exhibit 3 is admitted. And Ms. Burns, you're up and you have 45 minutes.
Good afternoon, Mr. Provencio.
Good afternoon, Ms. Burns.
How are you doing today?
I'm doing okay, thank you.
Good, good. It's nice to see you. So I'm going to be asking you some questions about your direct testimony filed in this case. And do you agree with me that you cover a broad range of topics in your direct testimony?
Yes, I do.
Okay. And many of those topics are also covered by other city and county witnesses. Isn't that correct?
That's right.
Okay. And so I'm going to focus on those portions of your testimony that aren't covered by other witnesses, okay?
Certainly.
And regarding your rate design, your cost allocation and rate design testimony, is it fair to summarize your direct testimony as primarily a critique of the company's proposals?
That's a fair characterization in terms of providing some feedback and critique of other possible alternatives that what has been put forth by the company.
Okay. And in fact, you have an entire section that's entitled Critique of EPE's application of rate design procedures, correct?
Yeah, that's correct.
And is it fair to say that because your testimony in this area is primarily a critique, you do not offer specific and competing proposals for all of EPE's proposals? Isn't that correct?
Yeah, that's correct. And I've provided some examples in my direct testimony as for the rationale for the critique.
Okay, but so rather than providing specific proposals, isn't it true that you're recommending a phase 2 to this rate case?
That's correct. From my perspective, there's a lot of moving issues, a lot of moving parts, if I could use that phrase. And with respect to rate design, it's usually it's not as glitzy as a revenue requirement phase. but rate design does definitely have does have and incorporate a lot of complexity. And for that matter, especially with some of the proposals being put forth in this case, it would be better served with a phase 2 portion to look at specific issues in rate design.
And I believe that you use the term a fully litigated phase 2, correct?
My phrase would be fully reviewed, fully litigated, with all parties participating with their respective positions.
And you do agree that if there is a phase 2, that would cause the company and the city and all parties participating to incur additional costs. Isn't that correct?
That's correct. And some of this could be possibly lessened or the burden in terms of looking at and limiting it to very specific items or areas in rate design, and look at areas in terms of more of a rapid focused review rather than a fully drawn out type of review and litigation.
Okay, but no doubt there'd be additional resources expended by all in a phase 2, correct?
I would believe, yes, it would. There would be more resources and time spent.
Yeah.
However, it's important that some of these points do get reviewed and fleshed out a little bit more, with a little bit more time, rather than just pushing this stuff under the rug and hope to get it the next time around.
Now, Mr. Provencio, obviously you have very many years of experience in these areas, and many of those years you spent as an employee of El Paso Electric Company. Isn't that correct?
Yeah, that's right. That's correct.
And you draw on that experience when you criticize what EPE has filed in this case. Isn't that true?
Well, I draw on that experience and what it takes to develop the rate design. And I understand the complexity involved with the rate design portion of any rate filing.
Okay. And in fact, in your testimony, isn't it true that you testify that the process of designing rates is described as an art and not a science? Isn't that correct?
That's correct.
Okay. And in your 33 years, you, as a El Paso Electric Company rate design in your position as a rate design, I believe you managed the rate design department for a while. Isn't that correct?
Yeah, that's correct.
Rates department.
Yes.
Did you testify in EPE's 2001 rate case? Do you recall?
2001. Now you're going back into a deep memory here. I more than likely did, but
Yeah.
I can't recall the details.
Or how about the 2003 rate case?
More than likely I would have.
Okay, and that would same would be the same would be for the 2006 and 2009 rate cases.
Yes, Councilor.
And I believe you testified in the 2015 rate case also, correct?
On the 2015, that would have been with it representing or being as part of the city of Las Cruces' intervention.
That's right. And in any of those cases, have you ever known this commission to order a rate design phase 2?
No, I haven't. The point I'm coming from is that it's with the number of rate design proposals being put forth by the company. It would be a good point to fully review and get some rate design that has some input from all parties, as well as what the company is proposing.
Okay. And I'm now turning to page 5 of your direct testimony. And am I correct that you list 12 items that you're testifying about. I think it goes from page 5 to page 7.
Yes, I see that section of the testimony.
And in item 2, you testify line 11 that you're critiquing the rationales and methods that the company used in departing from its past rate design practices, correct?
Yes,
And are those practices, were those past practices, rate design practices developed while you were an EP employee in your supervisory and managerial capacity?
they would have. I was with El Paso Electric for many years. A lot of the rate design was addressing some of the points that were of keen interest back then in terms of load shifting, load management, time of use. So a lot of those topics have pretty much evolved to current issues. The point is time of day rate design is still pretty much driven by the same principles in terms of cost-based evaluations to develop a time of day rate, as well as some of the load management and interruptible rates that were in place several years ago.
So you're critiquing some of EP's present departures from past practices that you helped develop, correct?
Yes, because things have evolved. Time and events have evolved to a point that an opportunity to look at a different perspective on what we're trying to achieve.
And so even though you're criticizing EP's departures from those past practices, you do agree, don't you, that things have evolved and that rate design needs to change?
Oh, certainly. Things are never static.
Right. And in your experience, would you agree that in arriving at rate proposal, there's quite a bit of estimation and judgment calls that an analyst needs to make?
I'm certainly aware of what the constraints are with respect to taking revenue requirement and allocated to class revenue requirements, and then ultimately breaking it up by component and developing a rate design that's understandable, effective, and has some consistency over time.
And in fact, that's part of the art of rate design that you testify about, correct?
Yes, that's correct.
And are you familiar with the commission's rate case filing rule? We refer to it as Rule 530.
Not word for word, but I would just by experience would understand what is required for rate filings.
Right. And your understanding is that Rule 530 discusses making test year adjustments with reasonable accuracy based on annualizations or known and measurable changes or estimates.
Oh, yes, definitely.
That sounds right, doesn't it?
Right. That's one of the fundamental points in terms of rate filing.
Okay. And now I'm going to move to page 12 of your direct testimony.
Okay.
And starting on line 1, you testify that the city concurs with the broad objectives that EP set forth in its rate design. And you list several principles, correct?
Yes, that's stated on page 12.
Right. And you are in basic agreement with those broad objectives of rate design, correct?
Right. The broad objectives are well designed.
Right.
I do have some points with the time of use rate design for residential service, where it is my recommendation that they be a little bit more aggressive in terms of trying to provide the price signal for shifting costs or shifting consumption from peak periods to off-peak periods.
Right.
If they're concerned about revenue neutrality and hold harmless with respect to regular rate design, then there's no real push or real incentive to maximize or undertake shifting of consumption to take advantage of that type of rate design.
And we'll get to that because I think your position with the residential time of day is that there's not a large enough differential that's being proposed. Is that correct?
Yes, that's correct.
Okay, but in general, you do agree that EP's proposed rates are consistent with these broad rate design objectives, correct?
Yes, they are.
Okay, all right. I just wanted to clarify that. And on page 14 at line 12, if you could turn there. That's page 14, line 12.
Okay.
You testify that EP has taken a reasonable approach to development of its cost allocation. Isn't that your testimony?
Yes.
Okay. Now, did you review the rebuttal testimony of Mr. Carrasco in preparation for your appearance at this hearing today?
Not point for point. I understand he had some different or had some revisions, but unless you're looking for a specific point.
I do have a specific point. I wanted to ask you about your concern at page 16 of your testimony with EPE's rate number 7 year-end customer annualization.
Right.
And did you review Mr. Carrasco's clarification of that point in his rebuttal testimony?
I'm sorry, but I didn't.
You didn't. Okay. So you're not aware that he had pointed out that you had mistakenly referred to a schedule in your testimony?
No, I would not be aware of that.
Okay, so you're not aware of that. All right. And so then I want to move to your critique of Mr. Carrasco's energy efficiency annualization, and that's just the next Q&A in your direct testimony. And would you agree that in principle, EP's proposed annualization adjustment for energy efficiency, for its energy efficiency programs that it proposed in this case is like the one that it proposed in its previous rate case?
Yeah, that's what I recall.
Right, and the commission approved that proposal, correct?
Yes, it did.
In the prior case, okay. And you would agree that some estimation and judgment is required to come up with this particular adjustment, correct?
Yes, it would.
And do you agree that this adjustment meets the Rule 30 criteria for reasonable accuracy?
It is apparent that it did meet that requirement.
Okay.
I'm
sorry. I'm sorry, sir. I can't understand you.
Okay, I'm sorry. Can you hear me now?
It did meet the requirement and?
But there are ways that can probably be improved upon.
Okay. And are you aware of the commission ever requiring any utility to study the impact of energy efficiency plans that have reached the end of their useful lives or have been removed from service?
No, ma'am.
Okay. And then I'm going to page 19 because I have a specific number reference. And I'm going to reference this number on line 2, page 19, projected demand savings of 4,262 kilowatts. Do you see that?
Yes.
And do you agree that the savings from that program was implemented in 2020? That's your testimony, correct?
Yes.
So that would not impact the 2019 test year billing determinants. Isn't that correct?
That's correct.
And do you, in your opinion, should EP adjust its billing demand as it does energy when calculating the energy efficiency annualization adjustment?
Do I believe it should be adjusted? Is the question?
Yeah. Should EP adjust its billing demand as it does its energy when calculating the energy efficiency annualization adjustment?
I believe so. I mean, the company has access to its individual billing records. And if there is a savings on the energy side component of a customer's service, it would certainly apply to their measured demand if it's in the commercial sector. And if that's with the detail of information that the company has, that should be able to be done.
Okay. Now, Mr. Provencio, I know that there was a lot of testimony filed in this case by the company, particularly after your direct testimony. But did you have the opportunity to review the rebuttal testimony of Mr. Aguirre in preparation for your appearance at the hearing today? If you recall, Mr. Carrasco at the hearing actually adopted that testimony as his own.
Not point for point. No.
Not point for point. Okay. Well, let me ask you about a certain point and see if you can answer this question. In Mr. Aguirre's rebuttal testimony, he responds to a question that you made on page, the statements that you made on page 23.
Okay, I'm there.
And these are statements that you're making regarding the residential proposed time of day rate.
Okay.
And, you know, you basically, we think we covered this before, at the bottom of page 23 there, you're saying that the pricing, TOD pricing are not substantial enough to encourage customers to elect to opt into that rate. Is that your testimony?
Yes.
Okay. And do you recall responding to a discovery response from EPE? It was EPE's interrogatory number 3-1.
I recall responding to it, but
You do recall. And the question, I think, asked you to give the analysis supporting your conclusion about the differential in the proposed rate. Does that sound familiar to you?
Yes.
Okay. And do you recall that the example that you used in your analysis, the usage for the summer was 2,351 kilowatt hours?
Yeah, I remember that example.
Yeah, and that the non-summer months, the example was 1,665 kilowatt hours?
Yeah, without having it in front of me, yes, I do recall that.
Recall that. Okay. And would you agree that those kilowatt hour consumption numbers do not reflect an average customer bill?
It reflects my bill. I am on the time of use rate with El Paso Electric.
Okay.
For a typical customer, it's probably a lot higher because the average use for a customer on the New Mexico system would be less,
right? Which
is part of the whole thing. What part of the objective of time of use? Customers that have a higher saturation of electrical appliances have a better opportunity to manage their bill. Customer that has base type of appliances that really can't be shifted. For example, a refrigerator, and it has to run. But if you have other electrical appliances that can be deferred, or an air conditioning system that can be lowered to respond to time of use, and other appliances that can be deferred to off-peak hours and off-peak days, that's a prime driver for a time of use consideration, as well as looking at the objective of having a more aggressive price differential to get consumption be shifted off to off-peak period.
And so do you agree with me that the year-round monthly average for EPE customer is a little less than 700 kilowatt hours a month?
That sounds about right.
That sounds about right.
Yes.
Okay. And did you review Mr. Aguirre's rebuttal, which corrected this analysis that we're talking about?
That corrected, no, I did not follow that.
Oh, you did not follow that. So you would not know that his correction showed an increase of about $36 a month.
It's subject to check on his response, yes. But
Okay.
it's all a function of how much energy is shifted from on and off peak periods, and what an ultimate consumer has the flexibility of achieving that
Okay.
with different price structures. See, that's the point I'm trying to make. At the current point, with the current rate design, you get a minimal effect. With a stronger price signal, it is likely that there'd be more response in terms of consumption shifting to the off-peak period.
So could you just clarify for us, if you know, I'm not sure you have the analysis in front of you, but what was the differential that your analysis showed?
There was, I can't remember the dollar differential. Absent the time of use rate during the summer months, the average rate would have been, the average typical rate design would have been more expensive than the time of use rate.
But you will agree with me, since you haven't focused in on Mr. Aguirre's rebuttal testimony correcting your analysis, that he testifies that the increase would be about $36 a month.
Without having the exact exhibit that he used, yeah, there will be an increase, and that is certain.
Do you think that the $36 a month is substantial enough to alter a customer's consumption pattern in the summer months?
It's difficult to say what would be, if that would be sufficient incentive. There's definitely more opportunity to see if there is a bigger response with a more aggressive differential.
Right, and because your basic criticism is the differential is not large enough, correct?
Exactly.
Okay, and did you see where Mr. Aguirre had pointed out that your winter bill calculation misapplied the summer rates?
No, I didn't.
Okay, all right. So you didn't have an opportunity to revisit your
No, I
analysis?
did not.
Okay, all right. So, okay, then let's move on. On page 25, are you there?
Yes.
It appears that you criticize EPE's proposed customer charge and its inclining block structure. Is that correct?
This would be specifically to residential service, right?
Yeah, that's correct.
Yes, I do. It's a rather steep jump from the existing charge that is in place right now.
So I thought previously on page 12 of your testimony that we reviewed earlier, that you had actually agreed with EPE's objective to design rate components that reflect cost causation, including inclining block rates. Did I misread?
I said that in general. When we get to this specific point, when you focus in into what the proposed rate charge would be, I understand on the cost of service and a unit cost of service by demand, energy, and customer component. That's the basis of outlining the foundation of the rate design. What you eventually propose in your rate design charges, the charge of customer, that's the next step. And at this point in my testimony, that is a huge jump without considering any kind of impact to customers, especially low use customers, and not considering gradualism to get to that point.
Okay, so you don't consider those two positions to contradict?
No, because the unit cost of service is the baseline guideline. What you eventually propose to put into your rate charges, that's another round of both historical, as you mentioned, the art of rate design and the consideration of what the impact would be to the customer.
Madam Hearing Examiner, I've lost track of my time. Could you just give me a quick reminder, please?
You have 18 minutes left.
Oh, thank you very much. I just want to pace my questions. Mr. Provencio, if we could go to page 31.
Okay.
Regarding the on-peak period that you're discussing here, I can't tell if you're advocating for an on-peak period that ends at 8 p.m. or 7 p.m. Can you clarify? It's right there around line 10.
Yeah. A shorter on-peak periods would be ending at 7 p.m.
Is that the position that you're taking?
Yes.
Okay. And then are you also advocating that large-scale irrigators be encouraged to begin drawing power at 5 p.m. or 6 p.m.? Again, that's line 20. On page 31. Again, both of those times are mentioned.
Yes. Yes. Yes, that's my position.
Oh, and which is it? Is it 5 p.m. or 6 p.m.?
5.
5 p.m. Okay. So on page 32, you testify that you find it troubling that EP is proposing a mandatory rates for rate number 8. Is that correct?
Yes, that's correct.
Okay.
This is for all new connections on rate schedule 8.
But on pages 23 to 24 of your testimony, you suggest that mandatory time of day rates are more apt to alter consumption patterns. Isn't that correct?
On a wider scale, that's correct.
Okay.
So this is the point that making looking at a phase 2 rate design, these are points that have to be fully fleshed out. Mandatory time and use rates are an avenue. However, if there is no understanding of what is driving the consumer's use of the electricity, it could be fraught with a lot of peril, especially with municipal pumping. The points I brought out here is this is the first I've ever seen of Paso Electric pushing time of use rate design to municipal pumping and particularly for water utilities that has no understanding of what drives and what the mandates are to provide a water supply.
Okay. But it's not your testimony that municipal pumping times can't be changed, is it?
Let me address that in this manner. Anything can be changed. However, when a rate design is proposed, and it's the first time it's been seen in terms as it relates to municipal pumping and sewage lift pumping, to comply with that would create a huge change in operations for especially the city of Las Cruces. The entire infrastructure is built to provide service with the known parameters for electric service. If you change the conditions of taking the power, not to change it, but you price it under different conditions, there would have to be a redesign of how the algorithms and the system controls are set up to supply water and treat wastewater.
Okay, so you find that troubling and the city opposes that proposal for municipal pumping?
Yes.
That's correct, right? In Mr. Carrasco's rebuttal testimony, he addresses what he thinks is a misreading that you had of our rate number 1 tariff proposal regarding applicability to businesses. Did you recall him addressing your testimony on the?
I recall the proposal in the tariff for residential service that relates to the predominant use of electricity in a residential sector. And the solution, or at least the tariff provision that El Paso Electric is proposing in terms of applying some kind of rather harsh measures in terms of where do you draw the line between domestic and commercial use. We as a utility face the same situation. But if you codify it and formalize it in your tariff, you take away any kind of flexibility in terms of managing what's happening. There's things that are changing in the service area where there is more and more people having small activities, small, maybe non-domestic activities in their household. But to formalize it in the tariff, it's just a little. Why provide or handcuff the policy into the tariff?
So if I understand your testimony, you recall EPE's proposed tariff change, correct?
Yes.
And you recall your interpretation of that proposed change, correct?
Yeah, as I understand what is being
proposed,
trying to be addressed and how to be resolved, because we're no stranger to that either.
Right, but you don't recall Mr. Carrasco's rebuttal testimony on that point.
No, I don't.
Okay, all right. So you don't know if you based on his rebuttal testimony, you don't have an opinion on whether you misread EPE's language.
No, I don't at this point.
Okay, and you don't have any proposed language to address that, do you?
Other than just not including it.
Okay, all right. Now I'm going to go to page 44. And I'm looking at lines 12 through 15.
Okay.
And there you testify that the city favors EPE's proposed super off-peak and high on-peak rates for electric vehicle charging, correct?
Yes, that's right.
Okay. And the city had requested an expansion of this rate in your testimony, or Ms. LaRock's testimony, isn't that correct?
Yes.
To include 420 kVs, correct, charging?
Right, for facilities that'll be taking service at a higher voltage, higher amperage, as part of our plan to electrify transportation in the city.
The basically city buses and fleet vehicles, correct? Yes. And did you review Mr. Carrasco's testimony when he stated that EP would address the city's concern and expand the rate?
I've understood that there's some flexibility coming from the company, and that's welcome.
Okay, and have you had the opportunity to review that expanded rate in EPE's transportation electrification?
I'm aware of it, but I haven't looked at the details.
Okay, you haven't. Okay, and so you support this super peak charge. So do you support this rate as a transition rate until we can get to the expanded rate in the transportation expansion plan?
Yes, I would understand that there has to be some level of transition.
Okay, so and then I have another question for you. Do you agree in principle? And now I'm going to page 19. I'm going backwards. Is it accurate in lines 20, 21, going to page 20, that you agree in principle with the company's proposal to adjust revenues to coincide with the miscellaneous service charges?
Yes.
Okay. And do I also understand your testimony? And now I'm going to jump way to page 63. Well, you address EPE's proposed change to the methodology of the monthly FPP CAC calculation.
That's page 63.
Yeah, page 63, lines 8 to 12.
Okay. All right.
And is it your testimony that the city supports EP's proposed changes to use a moving 12-month average to
Yeah.
calculate
Yes.
the monthly FPP CAC? Okay. Let me check my notes here for a minute. I have no further questions at this time for Mr. Provencio.
Mr. Bagatko. You're on mute.
Gotcha. Thank you. Good afternoon, Mr. Provencio.
Good afternoon, Mr. Bacato.
Am I coming through okay?
Yes.
Thank you. Got just a couple questions for you. First of all, I'd like to direct your attention to page 32 of your direct testimony, CLC Exhibit 3.
Okay.
I'm looking at lines 18 through 20, where you say the city's water and wastewater utilities must contend with a myriad of operating, regulatory, and water quality obligations that are not readily adaptable to TOD electric rate design. Do you see that, Mr. Provencio?
Yes.
Can you give me an example of what constitutes these myriad operating, regulatory, and water quality obligations that you contend make this TOD not readily adaptable to what the city's doing with its wastewater utilities?
Certainly. If an individual looks at the possibilities of the potential for time of day in a water system, especially in the city of Las Cruces' water system, you'll see a multitude of reservoir tanks where you would conceptually think that you can store the water for on-peak periods and draw from it during off-peak periods, and not having and just rely on gravity and maybe some small boosting to get to keep the pressures in line. The one thing that I was advised is, number one, there is a standard to have water continually moving. You can't have water sit too long in a tank reservoir without it having to deal with a myriad of stagnation and these type of issues, because our system is built to meet the demand as it's needed throughout the day, throughout the peak months. So that one point, which would seem to be an advantage, doesn't really work out, because there has to be water in motion and not stagnating or parked in a reservoir or in pipes for too long of a period. We have crews continually going out throughout the system, flushing at the hydrants to make sure that the water has a certain level of freshness, if I could use the phrase, and that's on the water side. Okay, you have all your injections for chlorine and treatment as it goes into the system. So changes and stopping or curtailing is not a regime that's currently in the system as Las Cruces utilities would have. And I'm sure it's probably applicable or similar with other water systems, smaller water systems in the state or in the service area. Same thing with sewer water or wastewater. Even though there's a lot of advantage in terms of relying on gravity feed, when it gets to a treatment plant, there is no way to defer at this time to minimize on peak consumption to take advantage of a price structure. Machineries and treatment and separation continue to make sure that there's no backlog in the sewer system or wastewater system, so that wastewater can be treated and safely discharged.
Thank you for that. Are you aware of any other municipal water or wastewater treatment facilities in the country that are subject to TOD electric rates? And if you are, how have they dealt with those?
No, I'm not aware as if other utilities or other sewer treatment plants or water systems have adapted to time of use. I looked at the regime and the SCADA and control systems that we have here in our city.
And if I may ask, who with the city informed you of these issues regarding municipal water and wastewater utilities in connection with the proposed TOD rates?
I talked to the deputy director of water resources in our department.
And was there any discussion regarding the potential for timing any of those water and wastewater utility procedures or processes to make the prospect of TOD electric rates more amenable and, I guess, feasible in terms of what the city does with those two services?
Mm-hmm. Well, I can with respect to the wastewater treatment, the city, the department has a cogeneration plant that has been installed and being optimized that can certainly meet some of the requirements of deferring or displacing some peak energy during peak hours. That would only apply to one single plant that we have. On the water side, everything is driven and pushed by the demand for water during peak season and peak times. You can certainly come up with a solution, some type of generation to defer, to meet the demand at well sites, but our system is pretty well dispersed throughout the city. So it's not as compact as it would be for one of our larger wastewater plant, but it would be a bigger challenge to defer or displace electrical consumption from our dispersed wells.
Are you aware whether or not EPE has similar TOD rates in effect in its Texas jurisdiction?
I'm not aware of what they offer in the Texas side.
If TOD rates are in place on the Texas side and they apply to municipal water and wastewater utilities on the Texas side, would the city of Las Cruces be amenable to consulting with those Texas utilities regarding how they approach the applicability of TOD rates to their operations?
Well, certainly, we would be interested as to how that would, what changes in their systems they had to incorporate to take advantage of that.
Very good, Mr. Provencio. Thank you for that. I'm going to try to tie this up here. Next page I'd like to talk about in your direct testimony, page 51. I'll give you a moment.
Okay, I'm there.
So on page 51, the direct testimony, lines 5 through 10, you indicate that the city believes that it is in the best interest of the city and its residents that the design of EPE's rates should be modified to encourage reduced energy consumption generally and especially during peak usage periods. Is that a correct recitation of your testimony there?
Yes.
How would you recommend that these goals be accomplished with regard to rate number 8, if not by the use of TOD rates?
If not by the use of?
If we don't use the TOD rates that EPE has proposed, how would you propose to realize the general and specific goals of basically limiting usage during peak periods?
I provided the one example of our cogeneration plant that is constructed in our wastewater treatment plant. It's yet to be fully synchronized and optimized to make use of that generation that takes the waste gas out of the digesters and mixes it with natural gas to provide generation. Okay. So we have, by process, we've incorporated that kind of a measure. For other applications, and I referenced it to the dispersed nature of all the major wells we have in the system, which are a mix of, much like any kind of electric utility, they're base load, which they're running all the time. There are some seasonal and peaking wells that come online. There are opportunities. However, having the rate design dropped in a rate case, as in this one, we had no opportunity to figure out, wait a minute, how do we integrate this? I'm not saying we're anti-TOD. It's just we'd have to change. There have to be sufficient amount of change in adjusting the protocols and the system control of our system.
Thank you. I have no further questions. Thank you for your time today, Mr. Provencio. Madam Hearing Examiner, I pass the witness.
Mr. Provencio, I wasn't planning on asking you any questions, but a couple things have come up, and I do have a couple questions.
Okay.
One is in response to Ms. Burns' cross-examination of you, and she was asking you about the city's request that the experimental vehicle charging rate, that eligibility for service be expanded to allow charging activity operating at 480 volts. And she asked you if you were aware that EPE had filed an electrification plan and was proposing to include that in its electrification plan. Do you recall that?
Yes, I recall that.
Okay. And she asked you this question. And I think she said, do you support this rate? And I think she was talking about the experimental vehicle charging rate being proposed in this case. She asked you, do you support this rate as a transition rate until EPE can get to an expanded rate in its electrification plan? And your answer was, yes, I would understand that there is to be some level of transition. And so my question is, does that mean the city is no longer requesting that eligibility under this experimental rate proposed in this case be expanded to include charging activity operating at 480 volts?
I believe the question is focused right as a company filed this experimental rate. It was limited to lower voltage application, and our position was the concept of a, and then of course experimental means it means like maybe it's not firm. It's, you know, if things don't work out, it's yanked. Number one, don't limit it to just the small voltage applications. Expand the applicability to higher voltage applications, because we are in the plans of electrifying the bus transport in the city. Now, experimental also is like, well, if we can just move away from the ambiguity of experimental and say, yeah, this is an electric vehicle rate. Okay, that sets the stage to move on and get the finer details worked out in the filing or the specific filings and hearings for electrified vehicle charging.
So you still are wanting, you still are arguing that eligibility should be expanded in this case to include charging at higher voltage.
Yes, yes, that's correct.
Okay. And then some pretty detailed issues have come up during the hearing about time of day rate design. And I want to ask you two questions about that. If you don't have an opinion or you need more time to think about it, just tell me. But if you do have an opinion, I'd like to hear it. Okay. So the first thing is, I asked Mr. Carrasco about the difference in the summer bill under EPE's proposed rates for a residential time of day customer versus a residential not time of day customer. And for an average use customer, for a non-time of day residential customer, the summer bill under EPE's proposed rates would be $78.16. For that same customer on the time of day option, the bill would be $95.55. So that's a difference of, let me just do the math real quick. That's the difference of $17.39. So I asked him, isn't that a disincentive to participation in the time of day option? And he said, no, that is the incentive for time of day customers to switch use off peak. And he said that this is a common feature of time of day options. So do you have an opinion on whether that, in my opinion, significant difference in the bill in the summer is an incentive to participate in the time of day option? Again, if you don't feel like you can get an opinion today, just tell me.
There's a lot of complexity, Madam Hearing Examiner, there's a lot of complexities with time of use. And it's really based on, what's the threshold for a customer to avail themselves of time of use based on $1 savings. For some customers, $17 may not be worth the issue of the inconvenience and the comfort factor that they have to deal with, or deferring activities to off-peak time or weekends. It's a qualified answer, because what is that elasticity that you're trying to measure that would induce customers to say to make the choice to include an inconvenience point other than just it doesn't matter, they're indifferent to how their electric uses, they're indifferent to their use of electricity and what their ultimate billing is, as opposed to where do we start seeing some response based on the rate and the ultimate bill that affects their account. I didn't answer your question directly, but there's a lot of variables that have to be considered, which provides some of the impetus to say, let's look at more aggressive differentials between on and off peak period. We haven't quantified what the elasticity is. I would believe that this is also applicable
to commercial and even the municipal pumping. All right, we see a rate structure and the mandatory nature of the TOU rate for new connections on rate 08 requires some head scratching and say, okay, what is it? Where do we start modifying and changing based on the benefits achieved by that kind of a rate structure?
Okay, let me ask you a more general question. Do you agree that with the result that a time of day customer would have a higher summer bill than a non-time of day customer, that's appropriate to encourage shifting use off peak, regardless of the amount of the day?
It would be Madam Hearing Examiner, it would be a start point. Yes, it would be a start point.
Okay. My second question regarding time of day rate design is Chairman Fishman suggested that rather than aligning the hours of the peak period with the hours of the highest system peak, that it might be more appropriate to align the peak hours of the peak period with the hours in which the difference between the peak in megawatts and the amount of megawatts available to meet peak demand is the least. Did you follow that?
I listened to the dialogue, Madam Hearing Examiner, and from my perspective, that is another alternative that could be considered. When I was with El Paso Electric, there was always pilot projects being conducted with time of use rates. I mean, time of use has been with us for many, many, many years. But it's always reduced down to the point, well, what does it take? What's elasticity? What are the incentives? Do you want to, and it depends on what areas do you focus? And I understood, as Commissioner Fishman was saying, well, let's look at a tighter window. Well, those type of things have to be would be good pilot projects to, okay, what would it take to get this goal, this slippery objective to shift consumption in real terms, not just, well, we're just doing it here to manage a dollar value, but we're actually looking at this as a truly alternative to get consumption shifted to off-peak periods. So to get back to the question that you asked is, well, is that another avenue? Yes, it is. You gotta field test it, if I could use the phrase, and see what's the response from the consumer.
Okay, so you don't have an opinion as to whether one approach is better than the other?
No, not a definite opinion of which one's better or the other, but it is a point that should it be field tested.
Okay. Well, thank you. I appreciate your answers. Sorry to kind of spring those questions on you.
No problem.
Okay, Ms. Stevens, you have 5 minutes for any redirect.
Yes, thank you. Hello, Mr. Provencio. I think I have a few questions that go to things that Hearing Examiner Glick asked you, as well as Ms. Burns. And if you turn to pages 31 and 32 of your testimony.
Okay.
When Ms. Burns brought you there, she asked you whether it is your position that the irrigation service rate number 5 should have a 5 p.m. or 6 p.m. ending period.
Mm-hmm.
And you quickly answered 5 p.m. the way she phrased the question. My question to you is is the city taking the position that the irrigation service should have a different and shorter time of day period than the other time of day customers?
That it would be a shorter period would be more advantageous.
Advantageous to those customers, but
Yes,
how
to the
about to the
customer.
system? I mean, I'm asking what the city's position is, given, you know, our concerns for the system as a whole and for our for customers and ourselves.
Well, on the system, of course, from the perspective of the system, a longer period is what they would, the company would be more attuned to.
And then if you slide on down to the bottom of page 31 to the top of page 32, and I think this is where the hearing examiner was just getting to with Commissioner Fishman's question. The question, and I quote your testimony, the question is, in quotes, does encouraging large-scale irrigators to begin drawing power at that time risk adding to the traditional afternoon peak load or the new evening peak or both? And you didn't really, that was a rhetorical question, but in general, do you support addressing both the concerns about the absolute peak load and concerns about worsening or affecting the new evening peak?
Right. Yeah. Yes. A lot of the testimony that's been filed by the company is they're starting to see a change in the way their load profile and their demand on system resources has been changing. I listened to testimony from Mr. Carrasco and Mr. Novella that the system is changing with all the myriad of different appliances that are coming online in types of loads that are on the system. So there has to be a balance in terms of, well, what can we get in front of the consumer to respond to a price signal, and what does that do to the overall change in the company's load system to meet the electrical demand?
And were you here, were you watching when Mr. Carrasco testified that even though the company was looking out for irrigation customers and keeping the 4-hour time period in its proposal, that it had not discussed the irrigation time of use rate with customers for probably a dozen years?
Yeah, I caught that part of the discussion.
And as far as the city's, the rate number 8, water and sewers pumping, did the company approach the city in any way to discuss the potential of a mandatory time of use rate before it filed this rate case?
No. Working in the utilities department, there was no dialogue either at the director level or even at the city administration.
And after you filed your testimony expressing these concerns, did the company, other than its written testimony, reach out to the city to discuss the implications and the concerns about water and the nature of water and sewer pumping that you've testified to today?
Not to date.
And is this lack of communication one of the reasons why the city is proposing a phase 2 to delve into rate design?
Well, yes. The purpose of a phase 2 is to collaborate and discuss mutual points or mutual goals on each side of the service point. It's not to say that we're opposed to anything, but making it mandatory with no heads up and duck for cover, and without understanding of, well, okay, is there a middle ground here to understand that, yeah, we are aware of the changes that are facing the demand on resources for El Paso Electric. We also have our heads in our operations to make sure that we meet the demands for our customers. So to me, to bridge that void or that gulf is better facilitated, much better facilitated by dialogue.
And would a dialogue help address the obviously tension-causing nature of making time of use mandatory on a kind of a class-wide or categorization basis, as opposed to making it optional and using it as a carrot to induce the customers who are best able to shift their load and therefore serve the whole system by reducing peak loads?
Mandatory has the smell and feel of a cram down.
I'm sorry, smell and feel
of a cram down. You're going to take this without any other exchange of understanding what the complexities are. My observation, working in not just the electric, but any utility services, is driven by incentives for the customer. What's in it for me? How can I maximize my service at the least cost possible? There are a multitude of programs that are out there. And there is some dialogue in some sectors. And what I'm advocating is that this is probably a prime ingredient to get some measure of a middle ground going for rate design.
Okay, Ms. Stevens, your time's up.
Madam Hearing Examiner, I will just make a slightly nutty offer here, is that Mr. Provencio is one of the 20, as he indicated a little bit earlier, he is one of the 20 residential customers. So if you would like to ask him some questions that are not in his role as a representative of the city, you've got a live one here, and the city would not object to that.
Okay, thank you. Ms. Burns and Mr. Bagaco, do you have any recross? No? Okay. Oh, sorry, Ms. Burns?
I have a question.
Okay.
Mr. Provencio, if you know, does the city have a water conservation ordinance?
Yes, they do.
And in your opinion, could that ordinance complement the time of day rates proposed by EPE in this case?
Can you repeat the question?
Yeah, my question's fairly simple. Just in your opinion, could the city's water conservation ordinance complement EPE's time of day rate proposal?
Okay, I just want to make sure I understood it. The conservation ordinance is primarily focused on wasteful use of water. And that's not restricted with any time. You know, it's to encourage, manage the use of water. We in terms of advocating for xeriscape landscaping, minimal use of water for landscaping purposes, broken irrigation systems that run amok. That is the focus of, and minimizing water loss. That's the focus of the conservation ordinance. It's not to say it couldn't work with that. What I wanted to do is, that's the primary focus of the conservation ordinance in the city. We are and do have a time of use for potable water, but it's not been used because the biggest user has alternative source access to water. We are sensitive to the time of use. And I hope I answered your question in terms of the potential is there, but I wanted to point out the prime purpose for the conservation ordinance.
You know, I appreciate your answer. I think I understand that the potential is there to coordinate the two. And I have one last question. Does the city have current plans to install solar PV systems on its water and wastewater facilities?
As part of the citywide policy in terms of carbon emissions, minimizing carbon emissions, we have entered into a contract to locate photovoltaic systems, not just in water well sites, but throughout various city facilities. So there is an ongoing program, but that's driven by the citywide policy to maximize the use of renewable resources.
And do you know when that will occur?
Though those are ongoing, the vendor has been selected, and they're in the process of discussing some of the finer details of design and installation.
So you're not certain?
It's certain that the agreement was finalized. It's in the planning and design stages right now.
Okay, so you don't know when they'll be installed?
I don't have a firm date, but to say it's not, it's in, let's just say the train is coming down the rails.
Do you have an estimated date?
I would say within the next couple of years.
Couple of years. Okay, thank you very much. I have no further questions.
Thank you very much, Mr. Provencio. You're excused.
Thank you, Madam Hearing Examiner.
Let's go ahead and take a break. Mr. Lundin, I think you can excuse Dr. Gigax from his standby status. And let's come back at 3:40 with Ms. Sewells. And Ms. Sewells, I will ask you the foundational questions leading up to moving your testimonies into evidence.
Thank you, Madam Hearing Examiner. I appreciate that.
Okay, so off the record and come back at 3:40.
Hello, Anastasia. Oh. Oh yeah, I'm off. Oh, oh God, dang it.
Joe, you're still broadcasting.
She goes, yeah. You picked up the other day. And I was like, okay, I'm gonna go home. I said, no, Mama, there's only 90 pills. And she said, no, we built it to, we built to March. And I was like, I just called back. And she said, oh, that was remaining from your other prescription. And I said, that's not true. We've always done it for 3 months. The doctor orders 3 months and you've given us 3 months. And I said, this medicine goes right to the date. And I said, we're going out of town. She goes, you're going out of town for? I said, for 3 weeks, but we're not going out of town for another week and a half. I said, so that's not enough pills to last. She came back and said, okay, we go on the 90 prescriptions, but we should have 4 months worth of you now, which is good because then we won't get so close.
Yeah.
David, are you ready?
Yes, Your Honor.
Okay, let's go on the record. Ms. Souls, you are a pro se intervener in this case, correct?
That's correct.
And are you a customer of El Paso Electric?
I have been a customer of El Paso Electric's, yes.
Okay. Do you have in front?
Judge, do I need to swear the witness?
Oh, I'm sorry. Yes, please.
Ms. Schultz, would you raise your right hand, please? You solemnly swear the testimony you're about to give in the matter now pending should be the truth, the whole truth, nothing but the truth?
I do.
Thank you.
Ms. Souls, do you have a document in front of you titled Supplemental Testimony of Mary Lee Souls, marked as Exhibit MLS-3?
Yes, I do.
Okay. Was that testimony written by you?
It was.
Do you have any corrections to make to that testimony?
Yes, ma'am, I do have corrections.
Okay, why don't you go through those?
On page 13, line 2, the word take should be replaced with run. Line 2 should read, of EPEs must run gas generation to native load customers. On page 17, line 13, the number 185 should be replaced with the number 275. Also on line 15, the number 185 should be replaced with the number 275. And finally, at the end of my testimony, the very first exhibit, that first page, is not properly named. In the right upper corner, the second row should say Exhibit MLS-01. Those are the corrections that I have.
Okay. With those corrections, if you were asked the same questions posed in that testimony today, would your answers be the same?
It would.
Okay. Are your answers true and correct?
I believe so.
Okay. Do you wish to move Exhibit MLS-3 into evidence?
I do.
Is there any objection? Exhibit MLS-3 is admitted. Ms. Souls, do you have a document in front of you titled Second Supplemental Testimony of Mary Lee Souls and marked as Exhibit MLS-4?
Yes, I do.
Was that testimony written by you?
It was.
Do you have any corrections to make to that testimony?
No.
Okay. If you were asked the same questions posed in that testimony today, would your answers be the same?
Yes.
Are your answers true and correct to the best of your knowledge?
Yes.
Do you wish to move Exhibit MLS-4 into evidence?
Yes.
Is there any objection? Exhibit MLS-4 is admitted. Okay, Mr. Zadowski, you have 45 minutes.
Thank you, Madam Hearing Examiner. Hello, Ms. Souls. How are you today?
I'm good. Who are you again, please?
My name is Matthew Zadowski. I'm an attorney with Montgomery & Andrews representing the company in this case.
Thank you.
I want to clarify something you just said. I thought I heard the hearing examiner ask you if you were a customer of EPE, and I thought I heard your answer to be, I have been a customer, and then I thought your voice trailed off. Are you currently a customer of El Paso Electric Company?
I am not, as of this moment, a customer of El Paso Electric Company.
Can you tell me where you live, please?
I'm currently residing in Seattle.
Is it your understanding that you have standing to be a pro se intervener as a resident of Seattle?
I have no reason to believe that I don't have standing.
Okay, we'll revisit that issue in a little bit. You didn't file direct testimony in this case, is that correct?
That's correct.
You instead filed 2 sets of supplemental testimony that we just had introduced, right?
That is correct.
And the primary subject of your supplemental testimony, which is Exhibit MLS-3, are El Paso Electric Company's non-arbitrage off-system sales and its use of a costing model with respect to those sales. Is that a fair characterization?
My supplemental testimony was in reaction to Mr. Burachek's second supplemental testimony, where he responded to questions posed in a bench request that I understand were posed by Chairman Fishman.
Okay, so that's what the testimony is in response to. Was it topically, is the primary topic EPE's non-arbitrage off-system sales and the costing model that's associated?
Yes.
Okay. And within that testimony, you offer your opinions about the propriety of those sales and the application of the costing model. Is that correct?
I offer my opinion regarding the topic in this case, that is related to the profit sharing of 10% that flows through the fuel and purchase power cost adjustment clause and how that impacts New Mexico ratepayers.
Okay. And you were provided a non-confidential copy of the costing model during this litigation, is that correct?
I believe everybody was.
And you understand that had you wanted to use confidential information in this hearing, there was a mechanism available to do that, correct?
I understand that the protective order provides for such a mechanism. That's correct.
Okay, and you didn't take any steps to use confidential information either as part of your testimony or in oral argument, right?
I did not go through the very challenging process of trying to do that when the company cooperated by providing samples of the costing model in non-confidential but public versions. That is correct, with the interest of taking respect for the time of the commission, the hearing examiner, and the parties in this case.
Okay, I'm sure everyone appreciates that decision on your part. Thank you. Let's take a look at what we've just had corrected to MLS 01, exhibit MLS 01 to the introduced exhibit MLS 3, which is your CV. Do you have a copy of that in front of you?
I am looking at it, yes.
And you've recently updated this CV, is that correct?
I try to update it regularly.
Do you have an estimate as to when you updated your CV to this version that's been provided?
It has a date on it. It says November 2020.
November 2020. Okay, I'm sorry, I didn't notice that, but that's when it was updated?
That's what that conveys, yes, sir.
Okay, do you know the specific date? This just says November 2020. Is there a particular date in November that it was updated?
Mr. Zadowski, I don't know how to respond to that. The process of constructing testimony and attaching exhibits and filing it with the commission is not something that happens at a specific point in time. It is definitely a process. I think November is a reasonably specific representation.
I agree that it's reasonably specific. I was just asking if you had more specific information. Is your answer to that question no?
But please phrase your question again. I don't understand what you're trying to get at.
I agree that November 2020 is reasonably specific. I was just asking if you had any more specific information.
I don't recall the specific date that I was working on this specific version of my resume.
Thank you. But this is the most recent version of your resume that exists. Is that correct?
No, sir.
Okay. Thank you. So looking at this version of your resume, which was updated in November of 2020, it does not indicate any professional experience working in the public utility sector. Is that correct?
That's correct.
And it doesn't indicate any experience with respect to electrical system operations. Is that correct?
Mr. Zadowski, let me ask you to be more clear about this. Are you asking, have I done electrical system operation for a utility? Is that your question?
No, my question was, does this CV indicate any experience working in the area of electrical system operations?
What's your definition for working in the area of?
Well, have you ever worked for an electrical utility?
I have not.
Have you ever worked for a company that contracted with a electrical utility?
I have not.
Have you ever worked in an electrical generation facility?
No.
Have you ever done load and resource planning for an electrical utility?
Sorry, did you answer?
I have not answered. When you say for an electrical utility, are you asking, have I been paid by an electric utility to do loads and resources planning? Is that your question?
Yes, that's a question that you can answer, yes.
I have not been
Have you
paid
ever
by a utility.
Have you ever volunteered for an electric utility to do load and resource planning?
I have.
Which utility is that?
They did not take me up on that offer.
That wasn't my question, ma'am.
You asked if I had volunteered.
No, I asked which utility you volunteered for.
Since they didn't take me up on their offer, I would prefer not to go down that path.
Are you objecting to the question?
Yes.
And if you are, what's the basis for your objection?
The basis for my objection is that I believe it's irrelevant.
Okay. I guess, Madam Hearing Examiner, can we have a ruling?
Sustained.
Have you ever been qualified by a state or federal court as an expert in any issue related to utilities?
No.
Have you ever published any scholarly work in the areas of utilities or utility regulation?
What is the definition of published a scholarly work?
I would say published a document, had someone other than yourself publish a document.
Yes.
Can I ask who that was?
The Albuquerque Journal.
Was it an op-ed piece?
It was an opinion piece, yes.
Do you consider an opinion piece in a local newspaper to be a scholarly work?
I believe it was a scholarly work, yes.
Let's talk a little bit about your educational background. Your CV says that you received a bachelor's degree in electrical engineering in 1977. Is that correct?
That's correct.
Have you ever been employed as an electrical engineer?
Yes.
Why isn't that employment listed on your CV?
I worked for 30 years for the same company. And in the course of that employment, I served in a wide variety of capacities. And I did not see value in trying to go into each and every one of the details of the various things that I did in the course of 30 years.
Okay, so to clarify, you're offering testimony today related to the operation of an electrical utility, and you considered your experience working as an electrical engineer to be irrelevant to your testimony?
I included in this document the notion that I had worked for the Packard Electric Division, among other things, as chief engineer. So yes, sir, I thought chief engineer, based on my electrical engineering education and experience, covered that territory.
Ma'am, can you state the name of the company again?
The Packard Electric Division of Delphi Corporation and General Motors.
Thank you.
Can you please explain your professional responsibilities as chief engineer for Packard Electrical Division of Delphi Corp and General Motors?
So I was chief engineer of connection systems that included both product design and process design, installation, and operation.
Okay. Your resume says that in 1983, you received an MBA. Is that correct?
That's correct. I have an MBA from the Harvard Business School, and I graduated with honors.
What is the relevance of the fact that you got the degree from Harvard Business School?
Harvard Business School is considered now and then one of the top business schools in this country.
Did your coursework at the Harvard Business School have were you involved in any coursework that related to utility generation at Harvard Business School?
No.
Why didn't you tell me that your bachelor's of engineering degree was from Cleveland State University?
Didn't occur to me that you needed that clarification.
Is it your testimony that having a Mass MBA from Harvard is makes you more qualified to testify in this case than having an MBA from a New Mexico State University?
I believe it represents unimpeachable credentials in the area of business administration education.
Does it represent any credential in the area of utility generation or operating systems?
It represents a credential in the sense that the Harvard Business School conducts its educational process using the case method. And so my experience in earning a degree from the Harvard Business School with honors means that I have looked at hundreds of cases in a wide variety of different settings, different industries, different types of challenges. That is what that business education teaches one to do. So yes, I believe it's very relevant to whether or not I have the business background and training and education to look at what's being offered by El Paso Electric and evaluate it and come to reasonable conclusions about the business processes that are represented.
Okay. And in all that coursework and all those case studies that you looked at during your education, did any of those relate to the operation of a utility system in the American Southwest?
No.
So your first—
I'd love to propose a case to the Harvard Business School related to El Paso Electric.
I'm sure they'd love to hear from you on that topic as an alum. So now that we've gotten through that portion of your CV, the first formal education or training that you've had in utilities was a 1-month course related to utility regulation at New Mexico State University in 2013. Is that correct?
You're talking about the practical regulatory training for the electric industry.
Yes, that is a 1-month course at New Mexico State University. Is that correct?
I believe that's the same course that is on the list of ongoing education and training that PRC commissioners utilize to satisfy the requirement for their office.
I'm not trying to besmirch
the requirement for their
ongoing training for their office.
Thank you.
I'm not trying to besmirch the class. I'm asking, is that the class that this reference on your CV refers to?
I believe we're talking about the same thing. Yes, sir.
Okay, and is it a 1-month course?
The one that I took was delivered in 1 week. It was a 5-day intensive training class, 1 week.
Okay. And the next relevant educational experience you list is with the Clean Energy Legislative Academy at Colorado State University. Is that correct?
That's correct.
And that was a course about utility legislation and the legislative process. Is that correct?
Clean energy legislation and legislation around the country in the area of clean energy. Yes.
Okay. And how long did it take to complete that course?
Again, that was a 1-week class.
If we look at your supplemental testimony on page 2, and again, this is within the same exhibit, exhibit 3. Page 2, lines 12 through 15. Well, at line 1, the question is what qualifies you to testify regarding off-system sales, profit sharing, and the fuel and purchase power cost adjustment clause, correct?
You're asking me about the question here in my testimony?
Yes, I'm just making a connection between the question asked and the portion that I want to ask about.
That's correct.
So that is the question. And then at line 12 through 15, you refer to the fact that you gave testimony in case 18-00006 UT. Is that correct?
That is correct.
So are you stating that the fact that you gave testimony in that case is part of what qualifies you to give testimony in this case?
So we're talking about education, about employment, about training, about experience. And so, yes, I have had prior experience, which means deep into the analysis and the various arguments that were made regarding that costing model and the issues at stake. And yes, I would absolutely say that having had that experience, provided that testimony, done that analysis, that contributes to my qualifications to speak to it today.
Okay. So with respect to the testimony that you offered in that case on EPE's off-system sales, did the hearing examiner accept your arguments on that topic in that case?
She accepted my testimony. The question of the off-system sales sharing, she deferred to this case.
Okay, so you're making a distinction between whether or not your testimony was accepted for consideration. My question was, did she accept your arguments in arriving at the recommended decision in that case?
I don't believe she accepted my arguments or rejected them, given that she forwarded this topic to this case.
Okay. Are you, how about on the topic, the testimony that you offered in that case, the relationship between native load requirements and EPE's costing model? Do you know if the hearing examiner in that case accepted your arguments in arriving at her recommended decision?
I don't know how to respond to that.
Okay, did you review the recommended decision in case 18-00006-UT?
I did.
You did. Did you happen to review the portions of the recommended decision that were discussing your arguments on the topic of off-system sales and native load requirements?
I reviewed it. I would not tell you I'm prepared to testify to it at this moment.
Okay. I'm going to read some portions of it, and I'm going to represent to you that I'm reading it correctly, and you can take that or leave it. But in the hearing examiner's recommended decision in case 18-00006-UT on page 41, there is a heading called off-system sales, and the text says, Ms. Sewells and Mr. Downs ignore Mr. Hawkins' testimony explaining that the company is required to provide reliable service to its native load customers, whether or not it makes a single off-system sale, and the provision of such service to native load customers results in cost causation that must be assigned to that service. And then I'm going to omit a sentence, and then it says, the testimony of lay witnesses Ms. Sewells and Mr. Downs misunderstood and misapplied renewable energy and incremental cost concepts and refused to acknowledge or apply reliability considerations in their analysis. The hearing examiner finds these conceptual errors and misunderstanding of reliability principles disqualify these arguments from consideration. So, having heard that, would you say that the hearing examiner in that case accepted your arguments on the topic of off-system sales?
I believe the hearing examiner in that case perhaps misunderstood my arguments.
Your testimony in this case is that the hearing examiner misunderstood your argument?
My testimony is that's possible. Yes, sir.
What is the basis for that statement?
So what you just read to me reflected what I understood or didn't understand about Mr. David Hawkins' testimony. And the issue that I see related to this is that El Paso Electric, and perhaps the hearing examiner in that case, conflate the notion of off-system sales for the purpose of balancing load with the notion of profit sharing and properly assigning costs. They are not both the same thing, and they are not necessarily related.
So it's your testimony that your expertise in this area is greater than the company's witness, in that case, Mr. Hawkins, and the hearing examiner. That's your testimony?
It is my testimony that how sales are done when they're done on the margin for the purpose of generating revenue for opportunity sales is what we're talking about. And that opportunity sales do have a role in terms of reducing costs for ratepayers. So those opportunity sales and the purpose for conducting them when there is excess generation is not what I was taking issue with Mr. David Hawkins. What I was taking issue with was the notion that that creates a profit, and with the mechanism that El Paso Electric has chosen to assign costs to those sales that they then relate as profit. So that is a business pricing, business costing kind of a determination. And yes, I do have expertise in that area.
But the hearing examiner did not accept your position in that case, correct?
You just read what the hearing examiner said.
Based on what I just read, is it your position that the hearing examiner accepted your argument?
The argument that I made and the way that I made it in that case, no. But like I said, it is my premise, not that I was therefore incorrect, but that we failed to communicate and I was insufficient at connecting those dots.
Okay, I'm going to move on to the portion of the recommended decision. The heading is native load requirements. And this relates to off-system sales as well. The text says, in Ms. Sewell's brief, she argues that off-system sales are being made at below average cost. Then I'm going to skip a sentence, and then it says, she concludes that artificially low costs are allocated to off-system sales. Ms. Sewell's arguments reflect her lack of knowledge and understanding of electrical, utility operating, and reliability requirements. Do you recall that portion of this recommended decision?
I do.
Would you say, based on that text, or would you agree with me based on that text, that the hearing examiner in that case rejected your arguments that EPE's off-system sales are being made at below average cost?
No.
Okay.
Because of the
I don't need any qualification. It was a yes or no question. I appreciate your answer.
Ms. Sewell, you can respond on redirect.
Thank you.
Now, Ms. Sewell, I know you're not an attorney, but are you familiar with the legal concept of claim preclusion?
No.
Okay, well, I'll just say generally, claim preclusion is the idea that
Okay, Mr. Zadowski, she said no, so move on.
Okay, is there a reason that you're raising the exact same arguments that were rejected in case 18-00006-UT, again in this case?
There is. This is the case that the commission has directed the determination of whether or not to continue the profit sharing mechanism for the off-system sales. And this is absolutely related to the bench request that was issued that Mr. Burachek responded in his second supplemental testimony, in which his exhibit indicates a number of these issues and discrepancies that are at stake and need to be considered by the commission if they're going to determine what to do about going forward with a profit sharing mechanism.
Okay. So part of your supplemental testimony at pages kind of 5 through 7 of your testimony is making an analogy between an electrical utility and a bakery. Is that correct?
That is correct.
Can we agree that if the operating systems associated with a bakery fail, the consequences to the public are negligible?
Consequences to everyone except the bakery owner and the employees. I would agree with that.
Okay. Do you agree that if an electrical system and electrical utilities operating systems fail, the consequences to the public can be significant, including in some cases with respect to the health and well-being of citizens in the service area?
Yes, and I take no exception to the issues around reliability requirements.
Okay. So you understand that there are system reliability considerations that are built into the company's off-system sales determinations, right?
So what I understand is that El Paso Electric has to run a certain amount of generation locally for a couple of specific reliability related reasons. And they have to do with load following. They have to do with voltage support. My contention is that El Paso Electric is treating that inappropriately in a couple of different ways. One is this conflation about what cost should be assigned to off-system sales. Just because reliability requirements require a certain amount of local generation does not mean either that all of those costs should, I think the phrase that Mr. Biatrick uses is properly assigned to native system load, nor that regardless of what's running, that it's all required for reliability purposes. In fact, there is evidence in Mr. Biatrick's second supplemental testimony, his exhibit STB2S-02, first, that El Paso Electric is making off-system sales every day of the year. That says to me that there's too much generation running every day of the year. This is not on an occasional basis.
Okay, I'm sorry, Ms. Hills. I'm gonna stop you because, as you know, I have a limited amount of time, and my question was a yes or no question, and I think that to the extent you want to expand on them, that perhaps the redirect is the appropriate time to do that. I appreciate your answer, and I tried to let you give as much of it as I could. But to clarify, the exhibit that you're talking about, the exhibit that you referenced, that's you've attached a portion of that exhibit to your testimony, correct?
Correct.
Okay. And going back to the analogy between a bakery and a electric utility, a bakery doesn't have any redundancy needs in the sense of the redundancy needs that are required for not redundancy, reliability needs that are required for an electrical utility. Is that correct?
That's clearly correct.
Okay. Now, an electrical utility needs to produce electricity on demand 24 hours a day to meet whatever the consumer demand is at any given moment, right?
That's a pretty extreme statement.
Okay. Do you disagree that an electrical utility has to generate electricity to meet customer needs 24 hours a day?
I disagree that it is black and white like that. The utility has the option to purchase power. They have the option to curtail power. They have the option to interrupt load. They have a number of options available to them at any given time.
Okay, well, let me ask it this way. Does a utility have an obligation to provide power to customers 24 hours a day?
Yes.
Okay. And electricity can't be pre-produced and stored like, for example, cookies, right?
It actually can now through the use of batteries. It can through the use of other mechanisms. So.
Oh, batteries, that is an example, yes. So EPE recently applied for approval to build a 50 megawatt battery storage system in the PPA case, which was 1900348 UT, right?
That's correct.
The Canutillo project?
Correct.
And you opposed that request and
What is the
project,
name
right?
again? Mr. Zadowski, the what project?
Canutillo, it's CANITILLO.
I'll look it up. Please ask.
Okay. So you opposed the request for battery storage approval on EPE's system, right?
I did. The PPA that El Paso.
It's a yes or no. It's a yes or no question, Mrs. Sewells, and I have a limited amount of time. You opposed the project, right?
I did.
Okay. So your position is that electricity is akin to cookies because electricity can now be stored, but when EPE tries to create storage on the system, you oppose their attempt to do that, right?
No.
Okay. So the fixed costs associated with producing electricity 24 hours a day are going to be incurred by the utility regardless of whether or not they conduct off-system sales. Is that correct?
Correct.
And the same is not to be said for a bakery, right?
Incorrect.
So if a bakery is operating from 9 to 5, it can make cookies to sell in the evening, correct?
Correct.
But it's fixed, the costs of, say, operating the oven ends at 5 o'clock, correct?
No.
Can you explain that?
A company's fixed costs are fixed costs. They exist whether or not they're making cookies, whether or not they're selling cookies. In the same way that El Paso Electric's fixed costs, as you questioned me, exist whether or not they're making off-system sales.
So is the cost of operating an oven to bake cookies, is that not a fixed cost in your opinion?
The operation of the oven, which consumes gas or electricity in order to operate the oven, is a variable cost. The expense, the capital of that oven, the lease on the building, you can go through a whole set of fixed costs that business has that are fixed whether or not they're making cookies.
Right, okay, yes. So we understand each other. Okay. So your analogy to the bakery also, as I understand your analogy, it's implying that the bakery that you're referring to is the only bakery in the market. Is that correct?
I didn't make that assumption.
Is it fair to say that the analysis assumes that it's the only bakery in the market?
No.
Would your testimony and the analysis change if there were 6 different bakeries that could sell the cookies?
No.
Okay. Do you agree that the off-system, that the purchasers of the off-system sales from EPE are operating within a market for electricity?
Yes.
Do you agree that the price that EPE sets for its off-system sales don't change the price that a purchasing party is willing to pay on the market?
No.
You think that it's your testimony that EPE's, that if EPE raises the price of its off-system sales, that buyers are necessarily it's going to make buyers want to buy more?
It is my observation and an El Paso Electric witness in that case you referred to before, the 18-00006-UT case, that El Paso Electric employees who are engaged in making those off-system sales are very aware of what the expected cost for that sale will be. And they have told me that if the costs were represented as being higher than the price they were about to negotiate that deal for, that they would in fact either not make the deal or they would seek a buyer prepared to pay a higher price. Mr. Burachik's exhibit demonstrates El Paso Electric paying a high price for electricity in that same market at the same time that they are making sales at a price significantly below. So the question of which is an appropriate market price, I think it is not obvious that what El Paso Electric employees have negotiated for a deal appropriately reflects what the market will bear.
Okay, well, let's look at the exhibit in this transaction that you're describing. Let's look at your exhibit, and in the copy that I have, it's marked MLS 02. It's the El Paso Electric Company 2019 non-arbitrage transactions for August 22nd, 2019.
Yes,
Do you see that?
I do.
So you've highlighted in either blue or yellow purchases and sales of power by EPE during time periods HE1 through HE11, correct?
Correct.
And the only one that is a purchase is the one that's highlighted in yellow, correct?
Correct.
And the blue is sales.
Correct.
And it's your testimony that these blue bars average to 2350 a megawatt hour, is that right?
I don't believe I constructed an average.
Okay. If we look at page 16 of your testimony, page 16, line 17. Are you there? Page 16, line 17?
That's correct.
Do you see where you say EPE could believe the selling power at 2350 or less was a good deal?
That's correct.
Is the 2350, is that just based on this one of these lines in here? Perhaps the fifth one down for Palo Verde?
That's correct.
Okay, so it's not an average. You're just picking one out of the air.
I'm picking what appeared to be the highest one.
Okay, well, is the one right below it 26?
Which are you looking at, please?
I'm looking at the line below. I'm looking at the next Palo Verde line that says $26 a megawatt hour.
Do you have a deal number for that?
It's the line, it's back on the exhibit. It's the line below the line that we're referring to that says 23.5.
I'm sorry, you're talking now about the ones, I don't know what you're looking at, Mr. Sadowski.
Okay, well, let's just move on. Your testimony is essentially that it's improper for EPE to purchase hour at 46.50 per megawatt, but to sell it for 23.50. Is that the gist of your testimony?
My testimony is that it appears that market price, what the market will bear for a day ahead transaction, is not represented by El Paso Electric making great deals selling power at $23.50 when they are buying power for $46.50.
Okay, well, do you understand that and again, I want you to look specifically back at the exhibit, please. Do you understand that the purchase at $46.50 is in a different market than the sales at their various prices?
All of that is what's being reflected in the FPP CAC. And I'm sure there's lots of explanations for why things are what they are.
Well, let's talk about
the line is that El Paso Electric is buying high and selling low.
Well,
and not a good business.
I apologize for interrupting, but I'm going to suggest to you that perhaps the reasons are fall into the area of expertise that you don't have, which is the system operations expertise, and that there are reasons for the differences. So for example, did you read Mr. Barachik's third supplemental testimony in which he stated that the reason
would you direct me to what you're looking at?
Well, I'm looking at my outline, but I'm asking you, did you read Mr. Barachik's?
I did. You don't have a page and a line number to cite?
I do, yes. Mr. Barachik's third supplemental testimony at page 23, generally, into page 24 is the part of his testimony that I'm going to be asking you about. But my question is, before right now, this moment, have you read that testimony?
I have.
So is it your recollection from when you read it that EPE makes power purchases from the Southwest Power Pool, which are these purchases at $46.50, instead of the Palo Verde pool, which are the purchases at these lower prices? And the reason that they do that is to mitigate a threat to the reliability of EPE's system that cannot be resolved through transactions with Western markets like Palo Verde. Do you recall that in his testimony?
I do recall it.
And do you recall that he also testified that EPE's ability to import power from Western markets like Palo Verde is limited by voltage and equipment constraints?
I recall that also.
Mr. Zadowski, your time is up.
Okay.
Ms. Stevens, you have 10 minutes.
Thank you, Madam Hearing Examiner, but I have no questions for Ms. Souls.
Mr. Herman, you have 5 minutes.
Thank you, Madam Examiner. I have a lot of questions about bakeries, but none about Ms. Souls' testimony, so I will pass.
We can have another hearing on bakeries. Mr. Bagacco, you have 10.
Hearing Examiner, we will waive our cross of Ms. Souls and we thank her for her time today.
Okay. Ms. Souls, I allocated 5 minutes for redirect. So do you have any redirect things you want to state in response to Mr. Zadowski's questions? You have 5 minutes to do that.
So Mr. Zadowski was going back and talking about this issue about costs assigned to outside sales that are below average cost. It is absolutely clear through the costing model that El Paso Electric regularly and consistently assigns lower cost to outside sales than they assign to electricity going to ratepayers. It is below average cost. I don't believe that that's refutable. It is right there in the costing model where they identify average cost versus the cost they assign to an outside sale. There's a number of things going on here. El Paso Electric would like this to be about reliability and must run and must take generation, but they are making off-system sales every day of the year. And there is a real question that relates to this, and it turns out relates to the future of Palo Verde 3 as to their base load generation versus their base load demand, which is not what is reflected in the loads and resources table. They have too much generation when they add together what they must take from Palo Verde and then all of the generators that they are running locally. They are running more generators than they need, and they are running them at higher minimum values than they need. And that is creating an excessive generation that creates this opportunity to make outside sales assign an inappropriately low cost to create an inappropriately high margin for El Paso Electric to share. And I believe this whole issue has to do with whether or not it's appropriate for a utility to do that. I believe a utility has the right to earn a fair return, but I don't think they also have the right to recover their costs. I don't think there's anything in the regulatory compact or any of the rest of what applies here that says they have the right to artificially create something that is artificially called a profit that they therefore get to share. That's all I had to say. Thank you.
Just before I go to recross, I would just want to look at something real quickly. I have one question before I go to recross. Ms. Sewells, okay, let me back up a minute. If the commission in this case were to order the discontinuance of the sharing mechanism and ordered that the margins of 100% of off-system sales go to ratepayers, in light of Mr. Barasic's testimony, I think he said that, I don't know if he used the word theoretically, he might have used that word, but theoretically, a costing model would no longer be necessary if there were no longer any sharing. Would you still ask the commission to do an audit of the costing model?
So two things. Eliminate the profit sharing, and I would suggest that the appropriate phrase is that the revenue from off-system sales be credited to New Mexico customers, that there is no ability then to talk about profit. The second part is that would solve the ongoing issue related to the profit sharing mechanism, but El Paso Electric is also asking for reconciliation of the fuel and purchase power cost adjustment clause accounting for the last couple of years. I don't believe that it's possible to do that reconciliation responsibly without having conducted an audit of the costing model, which is what is arbitrarily calculating and assigning these costs to off-system sales.
Thank you. Mr. Zadowski, you have 5 minutes for recross if you have any.
Yes, just a few, thank you. So on the topic of margins, when firms make sales on the margin and they collect revenues in excess of marginal costs, how would that be reflected on an income statement?
It would be revenue, but the costing of the product would be costed on the expense side in the same way that any other of that product would be costed. So it would.
I'm sorry to interrupt.
It would be a sale at a loss for the benefit of the additional revenue stream.
So I'm sorry. Is it income or is it a loss reflected as a loss ultimately?
Income is calculated.
Okay.
So it is reflected as revenue. The cost of the sale is collected as the cost of goods sold.
Okay.
The net result would be reflected as a loss if you tried to calculate income from that, but the revenue makes a positive contribution.
And is it your opinion that marginal sales should not be made if the revenues to be received don't cover all the allocated unit costs, both the fixed cost and the variable costs?
That is not my contention. My contention is that there is no profit to share when you do that.
And you're familiar with the term sunk costs?
Absolutely.
And can you please just define that term as you understand it? What are the sunk costs?
Sunk costs are basically costs that are already incurred. Often an example of that would be a hotel that has excess rooms and they get to 6 o'clock in the evening. And at that point, any booking for that room represents positive revenue. If they don't book it, the cost associated with the full cost of that room is a sunk cost.
Okay. So it's your belief that the company has failed to properly account for off-system sales because it's subtracted fuel costs from revenues to determine profit and not the entire cost of the service. Is that your opinion?
My opinion is that the revenue from off-system sales is what it is. It's a contract, and while we can argue that El Paso Electric is not very adept at getting the best market price for those sales, it is still a contract. Something actually happened and money actually flowed. It is the calculation of the cost to assign to that sale with which I take issue. And it has to do with things like Palo Verde 3 is not costed at the proxy price, even the proxy energy price. It's costed at the fuel cost, and there is no difference between Palo Verde 1 and 2 or Palo Verde 3, even though New Mexico ratepayers are paying for Palo Verde 3 at a proxy price. It's another example of buy it expensive. New Mexico ratepayers will pay the proxy price and then sell Palo Verde 3 energy, assuming a cost that is way below that. It is the calculation of the cost and then calling the difference between the price and that calculated cost a profit that I take issue with.
So are you aware with respect to your reference to the $46.50 purchase price of power over the DC tie, are you aware that when the company or any company purchases power over the DC tie, they have to flow that power continuously for 72 hours?
Mr. Burachik indicated that.
Do you have a reason to dispute that?
Okay.
Okay.
I accept that that's what they did in that deal, that they had to take 72 hours worth of it.
Okay, so is it possible that there is a snapshot in time that doesn't include these 11 hours where EPE's contingency reserve needs would justify this purchase in your mind?
I saw no evidence in the days before and after, nor in what was represented in the top 60 peak demand days, that purchase was required. That's correct.
And that's based on your experience in utility contingency resource planning.
That's based on my review of what Mr. Buachik provided in his exhibit here and what he provided in his exhibit, the top 60 days, and in what's represented in the costing model.
Okay. And are you aware that the company needs to keep a minimum level of generation running in order to import purchased power?
Yes.
Okay. Are you aware of the National Electric Reliability requirements for maintaining reliability and contingency reserves?
Yes.
Do you know how long it takes to bring an electric system back up if all generation is shut off?
When was the last time El Paso Electric had all generation shut off?
Ms. Wills, you can't ask questions.
Since I don't know of the last time that happened, I have no idea how to respond to that question.
Okay. Well, the fact that whether it has or hasn't happened, do you know how long it takes to bring it up if it was to go down?
Without something to look at? No.
Okay. That's all the questions I have. Thank you, Madam Hearing Examiner.
Thank you, Ms. Sewell. You're excused.
Thank you, ma'am.
Let's adjourn for the day, and we'll go off the record to talk about the witness schedule for Monday. So we're off the record.
Your Honor, I assume that we'll go back to the normal schedule, starting with Ms. Crane on Monday, followed by Dr. Gigax.
That's fine. Let me tell you the schedule that I have, and if anybody objects, I'll hear that after I go through the list. Okay, so we'll start with Ms. Crane, followed by Dr. Gigax, followed by Mr. Cahal, followed by Ms., I'm not sure if I'm pronouncing this right, Tomchik, followed by Mr. Simpson. And then we will have Mr. Bacchus on standby and Mr. Sidler on standby. Anybody have a problem with any of that?
Well, I don't have a problem with the order, Madam Hearing Examiner, but we've gone back through and reviewed, and we think that depending on if others are willing, I mean, we would be willing to waive Andrea Crane and Philip Simpson, depending, of course, on others. If others are going to ask questions, and there's no real efficiency to us waiving at this time. And the other thing I would suggest is for several of these other witnesses, based on how things are going, I think will be much faster than the 45-minute estimate. For example, and I'm just taking them in order. I think for Dr. Gigax, for example, it will not take 45 minutes. I think we're talking more about 20 minutes, realistically. And the same is true for some of these other witnesses as well.
So I'm not sure I understand what you said with respect to Ms. Crane and Mr. Simpson. That are you saying you're willing to waive cross if everybody else is willing to waive cross?
Yes, ma'am. That's my point.
Okay.
Madam Hearing Examiner?
Yeah.
I'm not willing, if this is a swap deal, I do have a few questions for Ms. Crane that I'd like to ask.
Okay.
Well, in that case, then all we would say is we may have a few questions for Ms. Crane, but it certainly will not be 45 minutes.
Okay. And Mr. Wexler, I guess I don't understand the rationale for you'll waive if everybody else waives.
Well, my only point is right now I'm not aware of any questions, having gone back and reviewed that we have for Ms. Crane, but we certainly, reserve that right depending on the questions of others. That's my point. So, I mean, certainly if everybody was willing to waive, she wouldn't have to show up. And my understanding is she actually has to rent a room or something. And maybe Mr. Lundin can confirm that for us. But, If the city still has questions for her, I mean, we'll reserve the right to ask a shorter amount of time. We certainly won't need 45 minutes.
Madam Hearing Examiner, my understanding is that the company would go first and that Mr. Wexler, the company's cross-examination would be limited to basically yours or the other commissioners, not, he's, and any redirect by Mr. Lundin? Is that correct? Isn't that correct?
Well, and I'm looking at the order, setting order of witnesses, setting order of cross, and that's not our understanding. I'm looking at page 2 of that order, paragraph D, which says the following order is the order of cross-examination of intervener and staff witnesses, which lists EPE as number 8.
What have we been doing for the last 2 days?
Well, we haven't, we did not object when we went out of order, but in this instance with Ms. Crane, you know, if we would want to see if there were any questions we had.
Okay, so in any event, Ms. Stevens still has questions for Ms. Crane. So what about Mr. Simpson? Ms. Stevens, you have 5 minutes reserved for him.
I do not have any questions. Am I still unmuted? I don't have any questions for him, Madam Hearing Examiner.
Mr. Herman?
I'd be willing to waive cross for Mr. Simpson.
And Mr. Bagatko?
Madam Hearing Examiner, we only had Mr. Simpson, and I too would be willing to waive that.
And so I guess, does that mean you all agree that Mr. Simpson's testimony, well, I assume you'll be here anyway, Mr. Simpson, and you can, I guess we could either just agree that your testimony is admitted, or you could just briefly take the stand and move admission, and that would be it. I don't really care which way you want to go. I guess it would be more efficient if everybody wanted to just agree that your testimony is admitted.
That would be my preference.
So does anybody object to doing that? Okay, so I'll make a note that one of the first things we'll do on Monday is we'll admit Mr. Simpson's testimony. So I guess, Mr. Bagat, I guess what I'd be inclined to do is to basically put everybody on for Monday. It sounds like we might be able to finish on Monday. Mr. Bagatko, are all your witnesses available on Monday if we would get through all of them?
Madam Hearing Examiner, as far as I know, they are all available on Monday, and I'll plan on having them ready. However, if somebody has an issue or anything, I will urge them to raise it as expeditiously as possible in terms of scheduling conflicts or anything of that nature. But
okay,
I think we can do that.
And you know, it's also possible that some commissioners will have questions on Monday. I don't know. I haven't heard anything. So that could possibly throw things off. I just don't know.
Understood. Thank you.
Okay, so anything else before we finish for the day?
May I ask a question, Judge?
Yes.
How do you spell DC tie? Is it T-I-E?
Yes.
All right.
It's capital D, capital C, and then separate word tie, T-I-E.
All right, thank you.
Anything else? Okay, thank you all very much. We'll see you Monday.
Have a good weekend.
Everyone.
Bye-bye.